turning your startup dream into a thriving business.
The third stimulus checks.
It all starts with that one simple step.
Being in cash.
So
Cash
what
is
are you
a
waiting
much
for?
different instrument when it comes
Grab
to
your
monetary
phone,
policy
hit
and the
record,
transmission mechanism.
and let your idea fly.
As opposed to the Fed lowering
The future of your
interest rate
startup
and
could
then
be
saying,
just
okay,
one
banks,
video away.
go be easier on your
Remember,
lending standards
be
now that
clear,
borrowing costs are
be
lower.
passionate,
So you
and
be
most
the transmission
importantly,
mechanism into
be
the
you.
economy. So much
We can't wait to
different
see what you've got.
dynamics if
Let's
we're
get
not
funded
talking
now.
about this new administration mailing out checks on day one.
So should investors then not be worried about inflation reigniting? Because I've been seeing a lot of notes in my inbox all talking about Trump's policies are going to increase inflation, yields are going to go up. Who knows what's going to happen to stocks?
You know, if you listen to the likeliest candidate on the terminal last night, there was a very good profile of potential Treasury Secretary candidates under Trump. If you listen to what a lot of them are saying, they're saying, you know what, companies, we're going to give you 2 years to build a factory in the United States. And if you don't, re-onshore or onshore and move your supply chains away, then we're going to penalize you. That's a much different take than imposing tariffs on day one. So I think people should listen to who these potential candidates are. And I think that the second Trump term, I'm not beginning to suggest that there's wisdom here or that he's not going to fly off the handle for any reason at all. But I think this time he's going to take more counsel. I think this time he's going to listen to those around him a little bit more and be more thoughtful about who he brings into his administration.
Back to tax policy with respect to corporate tax policy. Is, from where you sit, is a 15% corporate rate really feasible? And what are the pay-fors for that?
Yeah, well,
multi-part question.
Milton Friedman would tell you there's no free lunch, right? So, I mean, you have to find a way to pay for these things realistically. And I think that that's where the construct of the new Congress is going to come in. And how they're going to not just throw promises out there that you can't pay for. And that's a good thing. So the instantaneous aspect of tax cuts, I think, is a big presumption because it ain't free.
How does this bleed into different sectors of the stock market? Because we've seen a really big bid in small cap stocks this week. I guess on the bet that if you have more domestic manufacturing, you're going to do better in Trump's economy. Yeah. Does that make sense to you? Do you buy small caps right now?
In theory, what you cannot do with small tax is wave a magic wand and make their leverage go away. You can't make the small cap sector any healthier than it is when you're talking about their balance sheets. And that's really what has to be addressed first. And I think that what we're seeing here is a lot of technical movements, whether you're talking about this whiplash effect in the bond market or this rush into the Russell that wasn't even sustained for a day, for 2 trading days. So I think investors, or at least veteran investors, I'm showing my age here, are going to be really focused on top line, revenue growth, cash flow generation, the ability to protect dividends going forward, and that's what's going to be important. We have just seen a month where, according to Macro Edge, they track layoff announcements. In September, there were about 50,000. In October, there were 109,000. And we've seen one company after another in the current earnings season, prior to retailers reporting, continue to say, we're going to bolster our margins by laying off. You guys were just talking about Paramount and laying off 15% of its workforce. So we have to bear all this in mind. And until CEOs and CFOs get out of the cost-cutting mode to protect their margins, I think we have to be realistic about what sectors are going to benefit and what sectors aren't.
Is anybody baking the tax cuts, getting back to that, into their estimates right now?
Oh, I think a lot of people are. I think a lot of strategists on the street right now are baking in tariffs yesterday and tax cuts yesterday, and the effect that it would have on the bond market. I think the bond market...
Those tariffs are, to some extent, intended as a pay-for any anticipated tax cuts, the corporate code or personal. Yeah. But that's not going to do it, right?
No.
Not even close.
Not realistically, and not even close. That's right. So, I mean, I'm an independent research firm. I can say whatever I want. I think the street's getting ahead of itself. And I think the rally in the bond market is saying that out loud.
Yeah. Any other messages you're extracting from the bond market at this point?
Well, the United States does not live on an island. And when you see factory orders retrenching, when you see import volumes falling, I'm going to be paying attention to the PPI and CPI data that come out of China tonight. I think until we stop getting deflationary impulses and waking up to hearing Michelin and Volkswagen and layoffs in countries with really strict labor standards, until we stop hearing that, I think we have to appreciate that the United States is part of a global economy, and the rest of the countries in the world and how they're faring is going to affect our country as well.
I don't know if it's part of your remit, but Europe, we have the sick man. We have many sick men in Europe right now. Are they in total panic?
Yeah, France is definitely sicker than most people want to appreciate. And we forced our banking system to recapitalize after the financial crisis. In many ways, Europe did not. So, yeah, I think you're going to see a much more aggressive rate cutting campaign there. And we'll see how that plays out. Look, bond yields are down, dollar's stronger today. Not everything plays out exactly to script.
Just one more
Sure,
for you
no,
before
please.
you go. Just another minute. The Basel III endgame, so increasing the capital requirements for the financial institutions. Does that just get ignored at this point? You got like 45 seconds, and is that a good thing?
Well,
It's a good thing for the financials, but
it's a good thing for the financials, but we're still in the comment period. And Michael Barr and Jay Powell are intent on pressing forward with this, and they've backed off of their more stringent capital requirements to begin with a few months ago. I don't think that we should necessarily say that Basel III endgame is over.
all right. Thanks for showing up, Daniel DiMartino Booth, CEO and Chief Strategist for QI Research. On a Friday, in studio, in person, as we check the markets right now, the major indexes, they are higher to little change. NASDAQ Composite Index, in fact, has just turned lower. Well, Bloomberg is now on Apple CarPlay and Android Auto. You can get access to Bloomberg Surveillance and all your favorite Bloomberg podcasts at the click of a button. Just download the app, connect your phone to your car, and get started today. This is Bloomberg Intelligence. I'm John Tucker. I'm in for, who am I in for? Paul. You're in for?
I'm in for Alex Steele.
Okay, we'll keep it at that.
Okay.
She's Emily Grafeo. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Wells Fargo Advisors. Consider Wells Fargo Advisors Financial Network, where you can run your business with true independence supported by unrivaled resources. Learn more at WFA.com/resources. Well, we've got stocks mixed, and this is after consumer sentiment advanced to a 7-month high. Right now, we'll start with the S&P 500 up 0.2%, 16 points, 5,989. The Dow up 0.5%, 234 points, 43,963. The Nasdaq down 0.1%, 28 points at 19,240. The 2-year yield at 4.21%. That's up 1 basis point. The yield on the 10-year 4.27%. That's down 5 basis points. To currencies, the dollar headed toward a 6th straight week of gains. We have the Japanese yen stronger, euro, British pound weaker. We have Bitcoin up about 0.5% at around 76,000. Brent crude $73 a barrel. We have WTI crude $70 a barrel, and spot gold lower $2,688 an ounce. Few companies making news. Icon Enterprises. Well, sources saying it plans to have its dividend to buy a bigger stake in CVR Energy. So right now, Icon is down about 6%. CVR Energy up 9%. And the information reporting Amazon weighing a second multi-billion-dollar investment in OpenAI rival Anthropic. And finally, Boeing CEO trying to mend some relations with workers after the strike. Kelly Ortberg says furloughed workers will be paid for lost time. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
All right, Lisa, thanks very much. I'm John Tucker, along with Emily Griffeo. We are in for Alex Steele and Paul Sweeney today, and this is Bloomberg Intelligence. Let's move on to our next guest and our next subject today. What is the impact of the Trump presidency on tax policy? Let's break that down right now with Erica York. She's Senior Economist Research Director with Tax Foundation's Center for Federal Tax Policy. Thanks for being with us. Appreciate it. Happy Friday, by the way.
Me.
Hey, so there are a couple of fronts here, as I understand it. The corporate tax rate, as well as extending the existing Trump tax cuts, right?
That's right. So one of the things that President-elect Trump will have to deal with is the expiration of the 2017 tax law. That's the Tax Cuts and Jobs Act. It lowered the corporate tax rate permanently, made a lot of changes on the international tax side, and it also temporarily cut taxes for the vast majority of American taxpayers, lowered rates, doubled the standard deduction, increased the child tax credit. Lots of moving pieces, but those all sunset after the end of 2025. And so that's the first major thing that Congress is going to have to deal with. What do we do about that tax cliff? Trump promised extending all of those tax cuts, which we've estimated would come with a price tag of more than $4 trillion in lost revenue over the next decade. And then, of course, on the campaign trail, Trump outlined trillions of dollars more in tax cuts. He talked about further reductions to the corporate tax rate. He talked about exempting tip income, Social Security benefits, overtime pay from taxes, and creating a new deduction for auto loan interest.
So I want to zoom out and ask you about how investors should be thinking about how these tax cuts are going to impact the economy. Because you talk about tax cuts and lost revenue, but then, of course, if a corporation has to pay less taxes, you'd think that they have more money on hand for CapEx, R&D. So just big picture, how are we supposed to be thinking about the impact of the corporate tax cuts or potential more cuts coming on businesses and the economy?
Yeah, so on the one hand, the tax cuts for businesses should have a positive effect on the economy. A couple of the big provisions that have expired or are tightening are deductions for machinery and equipment investment and deductions for research and development expenditures. Restoring full deductions for that would lower the cost of capital, would boost incentives to invest in the domestic economy. But one of the mitigating factors to that could be one of the ways that Trump and Congress are thinking through offsetting the cost of that tax cut, and that is through higher import tariffs. And ultimately, the effect that this total package has on the economy will depend on how harmful the offsets are. If we are in a situation with some tax cuts and significant tariff hikes, like 10, 20% baseline tariffs, higher tariffs on China, higher tariffs on Mexico, those tariffs themselves, plus the likely foreign retaliation, could swamp the economic benefit of better tax policy.
Yeah, even if there is no impact, those pay-fors, they're not going to get the job done, are they?
No, we've estimated that the 10% universal tariff would raise about $2 trillion over the 10-year window. So that falls well short of the
Not even close.
Yeah. And that's on a conventional basis. So on a dynamic basis, figuring in how that tariff would reduce economic output, revenue falls further. And then if you factor in foreign retaliation, it falls even further. So comes up well short. And again, you have that economic drag created by the tariffs and the potential trade war as another factor weighing that down.
All right, put on your political analysis hat for me. The makeup of Congress, I mean, we don't know still, but it looks like a red wave. I can guess that at this point. Is everybody on board with this? I mean, you do have members of Congress in the same party who are opposed to increasing the deficits to pay for a lot of this, right?
Yeah, so that's the question. How big do deficit concerns weigh against the desire to continue tax cuts? Unfortunately, we're seeing some reporting right now that Congress is in the works of dusting off legislative processes used to impose tariffs in like the 1930s. So the last time Congress passed a law to increase tariffs line by line was, of course, the 1930 Smoot-Hawley Tariff Act.
And we all remember Smoot-Hawley from our classes in, well, high school even.
I thought you were going to say because
yeah.
we were there in the 30s.
No, I wasn't going to say that. But please, continue. Ignore Emily.
If we, revert almost a century and Congress legislates on tariffs. Now, even though there's reporting that some lawmakers are interested in that as an offset, I don't see, the entire Republican Party throwing out, the well-accepted economics that tariffs are really harmful, that free trade is beneficial. So I think that's uncertain. But there are certainly pockets of the GOP on board with Trump's desire to significantly hike tariffs.
We've talked about corporations, but how are Trump's tax policies going to affect Americans? I'm thinking maybe the middle class.
Yeah, again, it depends. If it's just extending the TCJA, we've estimated that the individual provisions, 62% of taxpayers would see a tax cut or would just see the tax system that they're paying taxes under now continue. So that status quo would preserve tax cuts for the vast majority of Americans. But if that's paired with tariff increases, that actually increases taxes on net for lower and middle income taxpayers because tariffs, of course, have a regressive tax burden. They place a higher percentage tax increase on low and middle income households who consume more of their income than wealthier people do. And then the distribution of the tax cuts is also somewhat in opposition to that. It does, the TCJA provided tax cuts to people across the income spectrum, but larger tax cuts to higher income individuals, which makes sense given the very progressive nature of our income tax. But those in combination could mean that lower and middle income households are worse off under this combination of tax cuts paid for by tariffs.
All right, before you go, near and dear to our hearts in high-tech states, 30 seconds on salt. Is the salt deduction going to be raised?
I think yes. I think if it is, GOP trifecta, very narrow margins in the House, those lawmakers who want to see an increase in the salt cap have more sway. I don't think we'll see unlimited salt come back. That would be a big reversion on a big reform that was included in the 2017 tax law. But I imagine we'll see some sort of doubling for joint filers and maybe even some increase for both single and joint filers. That, of course, makes the budget math harder because that increases the cost of extending the TCJA.
Yes, that's not cheap either. Erica York, Senior Economist Research Director with the Tax Foundation's Center for Federal Tax Policy. Thanks very much for being with us. Appreciate it. Quick look at the markets right now. Emily, S&P 500, 20 points higher. The Dow Jones Industrial Average, 276 points higher right now. The NASDAQ Composite Index, that's down just about 12 points. And you are listening and watching Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
And I'm John Tucker in for Paul Sweeney, and this is Emily Griffeo in for Alex Steele. This is Bloomberg Intelligence, and we're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. Well, from his social media network to real estate and crypto, the former president's return to the White House is going to give him power to leverage his array of assets. That's just the gist of the big take story today. And we can break it down now with Bloomberg News editor Tom Maloney. Tom, I guess you're not really supposed to personally profit from being the president of the United States, but Donald Trump will. Tell us the various ways he will and is already.
Sure. Yes. I mean, look, it's. I suppose you're not meant to be personally profiting from the office of the presidency, but certainly people grow their networks and grow their brand during the presidency and come into a lot of wealth post it. But Trump is a special case. We saw even on the night of the election, once it became clear that he was going to be the next president, you could see shares in Trump Media and Technology, his social media network, really spiked. They were up over 60%. That alone added about $2 billion, more than $2 billion to his net worth. Shares have come down since then. It's a very volatile stock. They've been bouncing all over the place, but it's really kind of a very stark reminder about how much Trump's wealth is tied to his personal brand and his political success.
So tell us more about Trump Media, because I have to be honest, as a markets reporter, I was just watching shares of DJT all week as almost a proxy for how markets were thinking about whether or not Trump was going to win.
And I made the mistake of trying to go to the financials.
This is an actual company, though, Tom. Is it? It actually operates as a company and makes money?
Yeah, no, it doesn't really make money. Funnily enough, they reported their earnings on the day of the election, so kind of hours before Trump was elected, and they were not good. They lost hundreds of millions of dollars in the past 9 months and only a couple of $1 million in revenue. And this is during a quarter when, this is a social media network. It sells advertising. During a quarter when the election is going on, you think if Truth Social is going to be making money, that's a quarter then that it should be doing it. But it's not. And it's not clear that this is going to be a business that's making a lot of money anytime soon. So it's always been viewed as kind of a meme stock, as a way for investors to express a view about Trump's political hopes. The expectation is that it might become more valuable now that he is president. But look, it remains to be seen. And at the moment, it's not a business that makes money and makes financial success. It has a market cap of somewhere in the region of $8 billion, and it just is completely divorced from its financials.
So much of his success and his wealth is based on his brand. I guess, do we call that goodwill? And if that's the case, you have half the country that's really loving Donald Trump and, close to another half that doesn't really like the guy. But how much is his brand worth, and how much higher can that go?
Trump's brand has always been something that he's been very concerned about. If you think back even to the 1980s, he would talk about the Trump brand. He wasn't afraid to stamp that brand, stamp his name on all kinds of products that were, not really related to his real estate, things like airlines, casinos. When his name was in the, when he got a lot of popularity with The Apprentice, he was doing that again with things like Trump Vodka or Trump Steaks. That's really been turbocharged, though, in the last couple of years since he won the presidency, with things like crypto. He has non-fungible tokens, these sort of digital trading cards that he was selling for $99 each. He's trying to launch World Liberty Financial, this kind of crypto borrowing and lending business. And he's also got all of these licensing deals overseas. So his name is on properties being developed in places like Oman, Saudi Arabia, Vietnam. So the fact that his brand has been boosted by the first term in presidency really helped him with those kinds of deals. And the fact that he's won the most recent election, that he's president-elect, has boosted the brand further, and that's going to be good for his personal wealth.
What about the legal challenges that he's facing? How is that going to affect his net worth, and how does that change when he's actually the president?
Yeah, look, Trump has major liabilities, hundreds of millions of dollars that he owes related to a couple of cases that he's lost. So the Carroll defamation as well as the fraud trial. He's probably still going to have to pay that money at some point, but certainly being the president gives him some ability to string out those cases further. So that pushes those liabilities off a little bit further, and those cases are still on appeal, and he could win and get rid of those liabilities. Obviously, there are other cases as well with him being president that he gets to probably get rid of altogether. So the federal cases, those are more about keeping his freedom rather than his monetary wealth. But of course, there's a link between both of those things.
That's the Bloomberg Big Take story today. Trump's billion-dollar windfall after election is just the start with Tom Maloney there. Tom, thanks very much. Appreciate it. Have a great weekend. You're listening and watching Bloomberg Intelligence. I'm John Tucker. I'm in for Paul Sweeney, Emily Griffeo, and Matt Miller has darkened the door. He's going to take over next hour because, frankly, I'm exhausted. I can't take it anymore. You didn't have anything to do with that, Emily.
Are you live?
Bloomberg Intelligence continues.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
It has been a hell of a week. I'm trying to fix Tom Keene's chair now so that I can actually sit up here. Matt Miller with Emily Griffeo and John Tucker. I feel like it's absolutely flown by this week. And what a week it's been. The best week for equities in a year. On Wednesday, we had the best day for equities, post-election day for equities on recorded history. And on Thursday, we had the best day in equities for the on a Fed day for 2024. So many superlatives, everything to the up, and all of the rates moves that were like terrifying right in the middle of the week have been erased. We're back to Friday levels across the curve, from the 2s to the 10s to the 30s. It's so exciting. So exciting. Are you guys not pumped? You guys don't look as pumped as I do.
We've been sitting here.
We're trying to wonder what you're on right now.
We're on Bloomberg Intelligence.
It's the weekend. It's the weekend. And, I mean, look, people across this country, from teachers to cops to firemen, are richer for it. I mean, your 401k, John Tucker, remember when you used to check that on air? Those were the days.
Well, that was the quarterly opening of the 401k envelope. And, it's firmly a 401k from a 201k. So,
yeah. It's been strong. 6,000. I predict we're going to hit on the S&P 500 today.
7 points away, Matt Miller.
Give us the data check, bro.
Yes, sir. And this Bloomberg Business Flash being brought to you by BAM Mutual, insuring municipal bonds that finance essential infrastructure and provide guarantee to income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. Right now, the S&P 500, 17 points higher. That's up 0.3%. 59.90 as I speak. The Dow Jones Industrial Average up 267 points. That's a rise of 0.6%. So heading to records there. The Nasdaq 100 right now 31 points lower. That is down 0.1%. In the S&P 500, you have 7 of the 11 major industry groups. They are higher right now, being led by real estate. As rates kind of level off, communication services and materials, they are the biggest drags right now. As for those yields, the 2-year, which is more policy sensitive, after yesterday's 25 basis point cut by the Fed, right now up 2 basis points. The 2-year, that's at 4.22. The 10-year right now 4 basis points lower. That is at 4.28. Let me check real quick. Shares of Paramount, they are down 5.4%. They reported big gains in streaming subscribers in the third quarter, but when investors apparently are looking at overall sales weaker than expected because of declines in TV and film revenue. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Emily and Matt. Hey, Matt.
John, go home and get some sleep, man. It's the weekend. Open a bottle of wine, sit on your porch.
That is my first stop on the way home, the liquor store.
Good for you.
Nice Pinot Noir.
Good for you. Exercising your right as an adult to the beverage of your choice. And in this state, you could get some weed, too. You can do anything you want, pretty much, nowadays. Not in Florida.
Matt. Not me.
Not in Florida. All right. Matt Miller here with Emily Graffeo. We're with you for the next hour, and we're excited about it. Abigail Doolittle joins us now. She's been watching these markets very closely, and what an insane week it has been. What are we up now? Like 25% on the S&P 500, 26% year to date. We've had almost a 5% gain this week alone, and right now trading at 59.90. We got to 5996.69. We got to hit 6,000 today, Abigail.
So I love your enthusiasm, Matt, both for the markets, 401ks rising, and for the weekend. All good stuff. You know, I was actually slightly surprised that it's 26%. It's actually 27% if you round it up. I thought it was going to be a little bit closer to 30%. But this week has been a banner week, up more than 4%, the best week in a year. The Russell 2000 up more than 7%, the best week since 2021 at its highest level. And all of this, of course, having to do with the Trump trade. The Russell 2000 in particular, those more domestically based companies doing really well on the idea that President-elect Trump and his administration will cut taxes, have protectionist policies, and that it will benefit those companies. On the other hand, confirming this Trump trade on the day and on the week, frankly, the NASDAQ Golden Dragon Index, HXC, today down 4.8%. This having to do in part with the idea that China did not pump in the stimulus as expected. Apparently, they're holding it back to fight off the effect of possible 60% tariffs against China. On the week, let's see what that index is doing. And it's only down slightly. So it does still confirm the Trump trade, but down about 0.7%. But yeah, super interesting week with lots of big moves.
Are yields still on the Trump trade? Because we've seen the 10-year move from almost 4.5% to now around 4.2%.
So the answer on the week, they are not on the Trump trade because they're down about 7 to 8 basis points. I would say they're on the Fed trade. But over the last couple of weeks, yes, they're still on the Trump trade, given the fact that you have that 10-year yield at almost 4.30 and it had been closer to 3.50. So I would say
in September.
Yes, I
right?
mean it's a massive move higher.
Fast run up. Yeah.
Yes,
I thought that was to me the most fascinating move of the week, beyond the power in equities, which you would have expected, was the fact that we've erased all the yield gain. We're back to last Thursday levels in a lot of places, and I guess that means the market isn't really as concerned about tariffs as the fake news media is, you know? Can I call us that? No, I'm kidding.
You're calling yourself
kidding.
that?
I'm kidding, of course. I'm kidding. No, I mean, look, the question is he really going to enact 60% tariffs on China? Is he really going to put 20% tariffs on everybody else? Or is that the first bid in a negotiation from, a real estate kingpin?
I think nothing is off the table here with President-elect Trump. Now, could there be negotiating tactics in that idea of quote-unquote beautiful tariffs, which of course you talked about here on Bloomberg Television with Chief Editor John Micklethwaite? Whether or not it ends up at 60%, we simply don't know. And there was also a lot of harsh rhetoric against Mexico. I think that the point is Donald Trump is going to protect the United States, make America great, and his philosophy on this is by making America the best, protectionism, really focusing on this country as opposed to thinking about other countries at the same time. If that includes 60% tariffs, I think that that administration's answer would be, so be it. The reason markets may not be pricing that in right now is, first of all, we don't know what the effect is going to be in terms of the U.S. economy. And second, that could be a ways out. I think that probably the first order of business is going to be the tax cut situation, given the fact that the 2017 tax cut bill runs out, to bring it down to 15% corporate tax rate. I think that's what people, corporations, businesses are excited about. And that's going to flow through to consumers. So even if there is a 60% tariff hike to China, you're going to have this natural tax cut here in the U.S. with this lower corporate tax rate that should, at least in theory, flow through.
Well, and so the 2017 Tax Cut and Jobs Act, right? The TCJA.
Well said. I like that.
So you're right.
That's front and center. That is
what do you call it? That sunsets in 2025.
Yes, that's the first order of business.
They need to get it through again, but they need to remove the state and local tax deduction cap, because Donald Trump came to New York, he spoke out on Long Island, and he promised New Yorkers that he would get rid of that SALT cap that he put in place to punish us.
Well, given the fact that the Republican Party is very close to that trifecta, the executive branch and both the Senate and the House, so full control of D.C. in a way, and there's some arguing that the judiciary branch right now is more Republicanly controlled and could become even more so, federal judges and that sort of thing. You would imagine that it's going to be relatively easy to put through the policies of the party.
You know, there's a MAGA ETF, Emily Grafeo.
Really?
The ticker is MAGA?
Yeah.
Really?
The ticker is MAGA. The ETF is the Point Bridge America First ETF, but it's underperformed the S&P 500. Over this year, it's only up like 22%.
Its old holdings are interesting. Robinhood, Emerson, Synchrony, Apollo. I mean, these are just a few, some of the top ones. But interesting. So this is one to start tracking. Thanks for this, Matt Miller.
It's drastically underperformed over the last 3 and 5 years as well.
I didn't realize that it had been trading since 2017. We should have been watching this.
Yeah.
All of last week.
I know. I didn't even think about looking it up until today. Katie Greifeld said something about America First, and I said, I wonder if there's an America First ETF.
Well, let's see what it did on the day of. So it was up 3.75% the day after the election. So it outperformed the S&P 500, which was up about 2.6%, but not the Russell 2000, because there are large cap stocks in there.
Interesting. What else you got? Anything?
Are you looking at any other stocks?
I feel as though we've covered quite a bit of territory here.
I mean, if we're talking about individual stocks, there's a ton to talk about, right? You've got the Expedias and the Airbnb of the world. You've got the NRG came out with earnings, and at least it was up in the pre-market. You had Lucid, which came out with earnings.
DraftKings.
Yes, DraftKings. So there's a lot of individual movers.
Chewy, not
Chewy.
Earnings, but it was upgraded, but it's still down.
You have a dog?
But I have a cat. I have a cat who yesterday turned 20 and a half.
Wow.
Yes.
Live. Happy 20 and a half birthday. Abigail Doolittle, thanks very much. We'll check back in with you later as these markets, if these markets continue to march higher. We're still like 10 points away from 6,000, but I'm on S&P 6,000 watch. Let's bring in Jennifer Rhee right now, Bloomberg Intelligence Senior Litigation Analyst, to talk about what we're going to see in this next Trump administration, Trump 2.0. Jennifer, you know, pretty much everyone, with the exception of Bloomberg Opinion columnist Chris Hughes, thinks there's going to be an M&A bonanza coming because Lena Khan is going to be out the door and the administration is going to stop scrutinizing every single big deal. Are you in the camp of everyone or Chris Hughes?
I'm in the Chris Hughes camp, Matt. I think people have short memories. And you know what I did? Because I've been telling people, look, this is not necessarily going to be this bonanza for deals where every deal gets greenlighted and waved through easily. And I pulled up some data this morning because I wanted to be able to back that up. So in the years in which Obama and George W. Bush were the president, when you saw deals that were challenged, and I mean they were actually sued in court, not just challenged in with respect to they needed a remedy in order to get cleared. And what you were looking at were about 2 to 3 a year, and 3 was even a lot. You know, more often it was 1 to 2 a year. And then I took a look at the years in which Trump was the president during his first term, and in 2018, when he was solidly in with his people installed at the Federal Trade Commission and Department of Justice, there were 5 challenges in court to deals. In 2019, we saw 7, and in 2025. So a serious uptick. So to me, this sort of more vigorous antitrust enforcement movement that really gained steam during President Biden actually started during the Trump administration. And I think people forget that. And they forget that the Trump administration challenged the first vertical deal in years. That was AT&T Time Warner, challenged Visa when Visa tried to acquire Plaid, which was a potential competition merger, also kind of, you know, a little bit on the outskirts of a traditional merger theory. And you mentioned just now DraftKings. They also challenged DraftKings FanDuel deal. So, you know, I think we're going to see more deals. And I definitely think we're going to see an uptick in settlements, because I think that's where the main difference is. This is an administration that hasn't been willing to settle deals and let them clear with a divestiture or a behavioral remedy. And I think we're going to see more deals that settle that way. But I don't necessarily think these really big, tough deals are just going to slide through.
When it comes to specific sectors of the marketplace that maybe a Trump presidency would be more harsh on, what do you think those sectors are? Because I've been seeing a lot of people saying they're going to be super soft on banking, so buy bank stocks. They're going to be softer on big tech. But like you said, there have been a lot of deals that they have blocked or at least been against that were in maybe some sectors that you wouldn't expect them to be against.
No, that's right. I think because of some comments that Trump has made during this campaign, I do think maybe we could see some easing in the bank area. I think that could bode well for Capital One and Discover that have a deal pending right now. But I don't really see any easing in the big tech space. I mean, we have J.D. Vance, who is a populist, and there is a populist streak also in President Trump.
Jennifer, do you think that President Trump is going to listen to J.D. Vance?
No, not necessarily.
Why would he start that now?
I don't think so. But I'm really, you know, to me, the past is a decent predictor of the future. Maybe you can't say that as much with President Trump, who's quite unpredictable. But if you look at his first administration, it was his FTC and DOJ that started the investigations of all of the big tech platforms and actually filed monopolization lawsuits against 2 of them. I'm not really so sure why it would be different now. And we have heard President Trump during his campaign, again, criticizing Facebook, criticizing Google, being concerned about content moderation. And I know content moderation isn't really an antitrust issue, but he could use the antitrust laws in order to get to that result. I don't really see why we're going to see a lot of easing on big tech, or why it would be easier for any of these big tech platforms to do deals. It's been very tough for them for the last 4 years, and I think that would continue.
All right, so maybe not, the Mag 7.
Right.
But it seems like everywhere else, I mean, I talked to Ralph Schlosstein on Wednesday. He was very bullish. M&A. We just talked to the president or the CEO of Perella Weinberg. He's very bullish M&A. Now, of course, these people are to some extent talking their own books, but their stocks are also hitting all-time highs. I mean, Evercore was up 15% on Wednesday. So the market definitely expects much more M&A.
Well, look, we have some examples of how the Republican forces may be thinking. We have 2 Republicans at the commission now. Right. And they have dissented. They have made speeches. They're pretty clear about their positions. And they're fairly establishment in the way they look at antitrust, in the way you would expect a Republican to look at antitrust, a little bit more business friendly, focusing a little bit more maybe on economics and on the pro-competitive aspects of a deal. All of that is good. All of that means certain tough deals that are kind of borderline that the Democrats might have blocked, these enforcers might push through. And we've also heard from the 2 Republicans that they would rescind or revise the merger guidelines that were put in place by this FTC and DOJ back at the end of 2023 that ensnared more deals, made it easier for the FTC and DOJ to challenge deals. So they could pull those back a little bit, meaning more deals are not presumed to be anti-competitive. So we do see some good news for deal makers out there. I just don't necessarily think it's going to be quite as easy as many people seem to think it'll be.
All right, Jennifer, great to get your take. Thanks so much for joining us. Your wallpaper is amazing. I need to come and get a selfie in that room. It's like the bathroom at Annabelle's, you know?
So
and of course,
relaxing.
everybody can relate to that.
Well, we have a lot of listeners in London, and surely at least a small percentage of them have been to Annabelle's. Jennifer Reed there from Bloomberg Intelligence talking to us about what to expect in the next administration of President-elect Donald Trump. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages kind of mixed right now, just 5 points away from 6,000 on the S&P 500. We did have the best week in 2024 for stocks. So on this Friday, we're wrapping that up. Also had a unanimous Fed decision to cut interest rates by a quarter of a point. Jay Powell, the chair of the Fed, says he doesn't rule out out or in a December rate cut. Meanwhile, Goldman Sachs changing its 2025 Fed call. They're seeing a slower pace of cuts. More economic data out today. The University of Michigan report consumer sentiment nationwide advancing to a 7-month high in the days leading up to the election. And revenge travel, not over yet. Online travel giants Airbnb and Expedia issuing strong outlooks. Expedia shares, right now, they are up close to 7%. But then you have Airbnb. That's actually down right now, 7.4%. Analysts are flagging the impact of investments on their margins. And today, NVIDIA and Sherwin-Williams joining the Dow, replacing Intel and Dow Inc. Right now, we have shares of NVIDIA. They are down 1.1%. And shares well, we did that already. Anyway, Sherwin-Williams, there we go, up 1% right now. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Yeah, Focus on Munis, brought to you by BAM.
BAM.
Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in
BAM.
BAM insured bonds. You got to hit it hard, John Tucker. BAM. I love this sponsor. I love this segment, and gosh darn it, Eric Kazatsky, I love you. I'm so glad you're joining us from Princeton, New Jersey, Bloomberg Intelligence senior munis analyst. Where should we start? I mean, there's so much. I guess the Fed probably is the most boring place, but the most obvious place to start. Yesterday did exactly what we expected and didn't really give us any kind of outlook, with the exception of, taking out one phrase that they're not totally sure inflation is still on the right path. What was your assessment of Jay Powell's meeting?
Completely benign, right? And the market sort of reacted like that. I think the bigger issue is, the bigger issue is the election and the results after the election, as opposed to the Fed right now, because it's still so top of mind. And it's interesting, it's been a wild week as far as rates, right? But we've had a complete retracement, which at the end of the day really says that the market has no clue what's going to happen from a tax standpoint going forward.
So what's your take on this? How is the election now going to impact municipal bonds, your expertise?
We've been having this question for months, and right? So now we have some definitive, concrete answers as to who won the election, but we're probably 2 months away from finding out whether this is the best thing to ever happen to munis or the worst thing to ever happen to the muni market. It really could go either way, right? So historically, Republicans haven't been that kind when it comes to the tax exemption, and we saw that during the last fight about taxes in 2017 when they tried to get rid of the exemption and pick apart some pieces. They're going to try and extend some of the tax provisions in TCJA, and some of those provisions could come under fire again. We would not be surprised. Do we think the whole exemption is going to go away? No, I really don't think that's a concern. But you could see pieces like higher education definitely come under pressure.
Does it make a difference? Do the other pieces of tax policy make a difference, Eric? Because there's so much, right? Trump has promised he's going to cut taxes. No taxes on tips. No taxes on overtime. No taxes on Social Security. He's going to get rid of the state and local tax deduction cap. Does any of that, or does all of that, make a difference to munis?
Certainly everything on a tangential basis, right? So let's take state and local tax deductions. Obviously, if he takes away the cap there, you would think that demand would be less for places like New Jersey, New York, California. But at the end of the day, the state taxes are still very high in those places, and they're not going down anytime soon. So it would just be a marginal impact. I think the bigger issue is, the Trump administration out there talking about getting rid of the income tax as a whole, right? So pretty crazy idea. Not sure how popular it would be, since it would be, quite regressive, but it would definitely impact our market, because it would, sort of do the same thing as taking away the tax exemption as a whole, right? And so treasuries would all of a sudden, or munis all of a sudden would find themselves trading like treasuries, as a credit spread product.
Did you know, by the way, Emily Grafeo, you're not old enough to remember this, but in the late 1800s, the U.S. got 90% of its tax revenue purely from taxes on alcohol and tobacco.
Oh, I thought you were going to say something else, but wow.
Yeah. Those were the days, right, Eric?
The 1800s. I mean, Eric, are you seeing any fears, though, in municipal bonds that there possibly could be this material change that you talk about with no income
The only
tax?
thing we can measure fear by are credit spreads. And right now the market is saying that there's no fear at all, right? Spreads across our whole muni universe are still at all-time tights. That's revenue bonds, that's general obligation bonds. So really not seeing a palpable fear from investors. And demand is still strong with flows coming in. We're thinking November, has the ability to be a good performing month based on historical returns, but also the fact that muni issuance is really projected to be soft this month, and the cash is still coming back from investors. So pressure on that secondary market is really going to be quite something to see.
What do you think about the moves in rates that we've seen this week? Just like neck snapping from, on the 10-year we were at, I think, 428, and then on Friday we went to 438, shot up to almost 450 on Wednesday, and now we're back to Friday levels. It's like a round trip.
A total round trip. And, munis have had some of that round trip, but to a much lesser degree, right? We shot up with treasuries. We're taking a little bit more time to come back down. To me, that's a buying opportunity because munis always directionally follow treasuries. It just takes us a little longer, right? So if you think that we're going to follow treasuries lower in yield, it would be a good time to sort of look in the market and lock in some more attractive yields right now.
What about Trump's tariffs or his proposed tariffs?
Yeah.
How would that impact muni bonds? And I guess just overall.
Can you look back at the first 0.0 administration of Donald Trump and get any lessons for the second 0.0 administration of Donald Trump?
Well, two separate things there, right? If you're talking about tariffs, you're really talking about, things becoming more expensive for U.S. consumers. So the impact to munis could be, maybe a ding to sales tax collections. But again, it's a complete conjecture right now to sort of try and map that out. If we're taking any lessons from Trump 1.0, it would really go back to the original point we made where Republicans in general have really not been kind to the tax exemption as a whole, really. It's viewed as sort of a giveaway to, more progressive, bluer states, and, it was quite punitive the first time around. Are we going to see a repeat of that again as some of those extensions are attempted to be rolled further out? We really don't know, but hopefully some lessons were learned to be a little bit kinder going forward, right? Fingers crossed.
Eric, you speak to clients all the time who have, clients and Paul Sweeney, who are obsessed with the muni market, who pepper you with questions. Have we asked all of the major ones that they hit you with? Is there something that people want to know out there that Emily and I aren't tuning into?
I think the question is, look, if the economy does soften, where areas that we think could be, more of a concern from a credit standpoint, and we continue to think that those are going to be in the higher education space, especially like, lower credit, standalone liberal arts type universities, healthcare systems that are really sort of thinly funded right now, especially if they're talking about picking apart pieces of the ACA, certainly could impact, that section of our market. Where we could see opportunities or growth really would be in the infrastructure or transportation areas, right? So looking at the forward calendar, even though it's thin, there are a couple of big airport deals coming, one in Houston, one in Maryland. So we think that's going to be an area of growth going forward as, President Trump has, or President-elect Trump has alluded to this sort of golden age in America. Infrastructure is certainly going to come along with that.
By the way, I think you can call him both President Trump.
Absolutely.
Because, it's just a matter of respect that you call any former president still, and he is also the president-elect. So President Trump is the president-elect. Yeah. I wonder if, he has this ability to just completely trash norms, right? In the past, for example, if any municipalities came under threat or Puerto Rico is a problem, you would say, that's no problem. It's got the full faith and confidence of the U.S. government behind it. And then during his first administration, that was thrown into question. Do you see yields move, any yields of places that are in a perilous situation moving lower on that concern or higher on that concern?
No, I think it's really going to be, as talk really turns to sort of, how much money is flowing from the federal government to states, certainly attention from investors should be on what states are receiving the most federal dollars coming in, whether it be direct subsidies or subsidies on the Medicaid and healthcare side of things. I think the bigger concern is sort of like what's going to happen if, Elon Musk is actually successful in sort of picking apart a lot of inefficiencies in the federal government and what that really means to, let's say, credits on the local level, like school districts, right? Getting rid of the Department of Education has been something that has been bandied about a few times. I don't know if that's actually going to happen, but it's interesting to sort of noodle on how that could affect state and local credits, especially school districts, right?
I think it's something that everyone has ignored. We all focus in on the proposals to bring big tariffs. We all focus in on the mass deportation. Of course, it helps that he had signs that said that at the Republican National Convention. And we all focus in on, the potential tax cuts, but we instantly throw away or ignore the threat of spending cuts. And I guess that's just because no one thinks it's really a possibility. But Elon Musk has done so many things that no one ever thought was possible. I'm old enough to remember when people thought electric car, not going to happen, because the big ICE manufacturers will never let it. And then Musk said, you know what, I'm going to do it anyway. And then someone said, you know what, private space exploration? No way, Jose. And then Elon Musk said, you know what, I'm going to do it. And now he's better at it than Boeing. So yeah, I think it'll be interesting to see if the Department of Government Efficiency actually gets off the ground. Eric, great spending some time with you. I hope you have a fantastic weekend. Eric Kozatsky, Senior Municipal Bonds Analyst, coming to us from Bloomberg Intelligence in Princeton, New Jersey. Emily, I'm watching the S&P 500 right now.
It's
just
so close.
So close to 6,000. It's been 5,997.9805. That's the highest tick that we've seen so far.
We're like 3 ticks away. I hope it happens during this.
During this hour?
During this hour, because you would get so excited and I'd be able to witness it. I'm looking at the Russell 2000, Matt, on pace for its best week since 2020. It's up more than 8%. It's just been on a wild ride as people bet that if you're a small company, you're going to do well under a President-elect President Trump administration.
Yes. I think there's official guidance on what we're supposed to say. In any case, you do see the Russell 2000 continuing to rally today. Nothing like the 5.8% gain that it put up on Wednesday. And I'm actually surprised that you're not seeing a stronger performance now, because on Wednesday it made less sense. Yes, small caps may do better under President-elect President Trump, but rates were so high at almost 450 on the 10-year, and so many of these companies, I think 40% in the Russell 2000 are money losers. They still need to finance, and they need lower rates to do better there. So on a day like today, when you see rates turn back around and head down towards 430, you would think you get a bigger rally than just 0.3%. Barry Ritholtz is going to join us later on in this program, founder of Ritholtz Wealth Management and host of Masters in Business on Markets and Investing.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow in your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Major stock averages mixed right now at the end of their best week in 2024. Stocks advancing for a fourth consecutive session. The S&P 500 on track for its 50th record this year, and we're just 5 points away from the 6,000 level. The mega cap space, a little mixed right now. And according to Bank of America, a whopping $20 billion flowed into U.S. equity funds on the day that Donald Trump claimed victory. Did have some data today. Consumer sentiment climbing to a 7-month high in early November. That was boosted by Americans' optimism about the future of the economy and their finances. Again, this was before the election. Goldman Sachs Group, the prospect that investment banks and buyout shops will be among the top beneficiaries of Donald Trump's regulatory and tax agenda, that sent its stock price soaring. And if the gains hold over the coming weeks, it's going to trigger a key threshold for the CEO, David Solomon, who would eventually collect a special payout, which current performance levels, that would be worth at least $50 million. S&P 500, 23 points higher at 59.96, I'll call it. Dow Jones Industrial Average up 253 points. That's a rise of 0.6%. That's a record there, as well as the S&P 500. And the NASDAQ 100 right now unchanged. As for yields, 2-year yield, 4 basis points higher. That's at 424. The 10-year yield, 1 basis point lower, and that's at 431. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Emily and Matt.
Is it just the Business Flash, or can we talk music as well?
Oh, you want to do nominations?
Yeah, the Grammy nominations have come out, and Emily's all over it. Emily, is it Billie Eilish? What's the story? Who's the big winner?
Well, Beyonce,
or the big nominee,
is nominated the most. So she got 11 nominations.
Which all time, I think, for an artist, that's a record.
We also have Kendrick Lamar, Charlie XCX, Billie Eilish, each earning 7 each. Now, I feel like some of the Grammy categories, it's like the same thing. It's
yeah, they all sing the same song. I mean,
it's a lot of pop. It's a lot of pop.
It's all pop music.
Yeah.
Interesting.
It's not like my generation, way back when it was all protest music and really had.
But they didn't win Grammys, right? Isn't it the case that like Bob Dylan didn't win a Grammy when he put out?
They didn't care.
Yeah.
They had a bigger cause.
Record of the year, one of the nominations, Now and Then, from the Beatles. So there you
go. It's your generation, right?
Not quite. That was a little before me.
It was a little bit before. The Beatles is every generation's music.
All right, John Tucker, thank you so much for joining us.
From the garage.
Yeah, and please tell the people in the garage to get my car out. All right, let's get to Barry Ritholtz right now, founder of Ritholtz Wealth Management, the host of my favorite podcast, Masters in Business, after my own, that is. I have a podcast, Hot Pursuit, with Hannah Elliott. And actually, Barry's on that podcast a lot, too. So, in any case, Barry joins us now to talk about, I guess, first and foremost, Barry, we have to get your take on the election. I know in a 24-hour news cycle, we should have been done talking about this Wednesday, but what do you think we all got so wrong in saying, like, this is going to be a toss-up, and it was actually, Trump and the Republicans, like, demolishing the Democrats on Tuesday?
Right. So first, Billie Eilish is not a pop star. She's a chanteuse. She's going to do a whole album of Great American Songbook. We'll come back to that later. Don't underestimate.
I'll put a pin in it because I agree and would like to talk more about Billie Eilish. But first, President Trump,
fantastic singer. But what I love about elections is that all of the errors that we make as investors, because of that's how we're wired, we engage in the same behavioral mistakes when it comes to elections that we make with capital and risk and decision making. So it's really kind of fascinating. I do this every election. The last one I did that really kind of a lot of people chatted about was back in 2016. But let's just pick a few things that everybody got wrong. So first of all, forecasting, LOL. How many times are the polls going to be wrong? And
before we stop listening to them.
And right. I mean, I've had conversations with various people at MSNBC, at CNN, at Bloomberg. Hey, why a year out are you guys spending so much time talking about polls? It's 50-50 that even the people in the polls are going to be the actual candidates. And that happened this year. That happened in 2016. It happens surprisingly regularly, but the polls blew it in 16, 18, 20, 22, now again in 24. Why do we listen to people who make forecasts when they're consistently wrong? And I want you two to keep that in the back of your head the next time you ask a strategist or an economist, so what's GDP or non-farm payroll going to be? Because they don't know, they can't know. Someone is randomly going to be right. So that's number one.
Well, non-farm payroll is different. I mean, the margin of error is bigger than the number typically. The betting market's got this right, and the options market got this right.
And that's the second question, which is, when you see someone who gets something right, was it skill or luck? Probably the poster child for this is the ARK Innovation ETF and Cathie Wood, who had the greatest year in 2020 of any ETF or mutual fund manager, just about in history. Peak to trough, the fund more than tripled. For the year, it was up something like 164%. And then reversion to the mean happened. And it turned out that, hey, it wasn't skill, it was just a lot of luck. And she's been unable to reproduce that before or since. Despite having the greatest year in history, she's still underperforming the S&P since inception in 2014. And the S&P is the wrong index. It should be the NASDAQ 100, where she's substantially underperforming. So that's the second issue, is being able to separate skill from luck. The people who got it right, I'm not convinced that it was anything more than someone's going to get it right, but it's dumb luck. Probably the single biggest thing that investors get wrong, that we all got wrong this election, was how much we allow narratives to dominate our thinking. And just think about what the consensus agreed this election was about. It's razor thin margin. It's deadlocked. This is the year of turnout. This is the year of the woman voter. None of that turned out to be true. We just love a great story.
Well, we don't have a ton of time left.
I know. We got to swap. Guys, can you swap Barry's block with the Muni block? So we had let's kill the break. We had 15 minutes to talk munis, right? And 5 for Barry? That doesn't seem right.
Because I want to talk more markets, but I also want to talk music quickly. But let's just stay on markets, because, I mean, Barry, how are we then supposed to kind of understand? We talk so much about the Trump trade. Should we not be thinking that the reason why, Bitcoin is now reaching a new record high, stocks are all near a record high? Should we not be kind of connecting that to the narrative that, oh, the market is happy that we have a new president?
Well, generally speaking, we like the market collectively. We like tax cuts. We like deficit spending. We like deregulation. So the markets like this, although, let's be blunt, the market, did great under Obama. It did great under Trump, other than the pandemic. And even then, there was a huge recovery. It did great under Biden. Here's another lesson. We put way too much impact and import on who's in the White House. If you only invested when a Democrat was in the White House, going back to I think it's the 1950s, you would see a return that was about your $100 would generate a return of about $1.70. And if you only invested when Republicans were in the White House, it would be slightly less than that, like $1.40. But if you invested over the entire time, well, then compounding is your friend, and that $100 turns into something like $2,400. And so, markets compound over time. Dividend reinvestment is a big part of that. And who the president is matters a little bit around the fringe, around the edge. If they really mess up, well, then that could have a pretty big impact. But for the most part, every day, everybody has to get up. They have to dress their kids, send them off to school, pay the mortgage, take your car to work. In a $24 trillion economy, what I just described is more or less $20 trillion of it. So there's a little flexibility around the edges, but not a whole lot. The U.S. economy is so enormous, and the global economy is so big that who's in office matters much less than what's the overall trend in jobs, what's the wage trend, where are we with inflation, what's consumer spending like. That matters a whole lot, and the president has really a de minimis impact on that.
Barry, I wonder, you make a point on your blog, Ritholtz.com, that we all have this filter bubble. And I noticed that even though I don't want to be in an echo chamber on Instagram, for example, I always unfollow people that are complete morons. And that probably just means I always unfollow people who don't agree with me. Is there anyone who's good at getting outside the echo chamber? Are there any, investors or, leaders, billionaires who are good at getting rid of yes men and actually, getting a diversity of opinion?
It's very, very challenging to do that. And I like to quote Danny Kahneman, who wrote Thinking Fast and Slow, won the Nobel Prize for essentially helping to create the field of behavioral economics. And he used to say, no, you have a bias blind spot. We all do. You could take steps to try and operate, put rules in place, put strategies in place that prevent you from getting in your own way. But it's really hard. Think about it. What drives your bubble? It's not just the media you consume. It's who your friends are. They probably have similar thoughts and values to you. Even when I get together with my car group, there are Biden and Harris voters and Trump voters in this. But separate from that, everybody in this group is driving a pricey car. They're all making a nice income. They're all highly educated. I live on the North Shore of Long Island, so they're all in a very high tax neighborhood, rich neighborhood. And so as much as we all think we're politically different, hey, the things that we share in common are much more similar than the things that separate us. And so even if you're trying to have a conversation with people who are different from you, your friends, your family, your neighbors, you are so similar. And so the example I like to tell people, even if you're a farmer or a blue collar worker or an internet, Instagram creator or a finance bro or someone in the media, the people you spend a lot of time with are probably very similar to you. And most of the rest of the country has a very different personal experience than you do. Even if you're a farmer, you probably spend a lot of time with other farmers, and your view of the world is going to be different than the blue-collar worker in the factory, the knowledge worker in an office. And that's just human nature. Everything you do within your bubble becomes a lens that you look at the world. It's very hard to get outside of that. One of the most astute things I heard from someone on the losing side of this election, and a little bit of self-reflection, they said, I guess there are a lot fewer people like me than I previously realized.
Yes.
And that's true for all of us. We're all in our little group, and
although
that
very
does not
few
represent
people,
the electorate.
Everyone I know on the losing side, which is, everyone I know because we're in New York, right?
Oh, really?
They have said, like, I can't believe it. I can't believe I didn't know this. I can't believe I didn't see this, but it's still a horrible outcome. And then they proceed to say the same thing they were saying before the election and haven't expanded their horizons at all. Barry, great to have you on. I'm going to call you after because I still have a million questions. Barry Ritholtz there. He is the founder of Ritholtz Wealth Management and the host of Masters in Business. I want to talk more about tariffs. And to do that, we're going to bring in Poonam Goyal. She's senior U.S. e-commerce and retail analyst at Bloomberg Intelligence. And I think tariffs are especially important to retailers. I noticed the National Retail Federation came out with a warning about tariffs and said, for example, apparel costs to U.S. consumers could go up $24 billion next year. Poonam, are we sure that that's how tariffs work? Or, I mean, who's doing this analysis?
Well, I mean, if you just start from the beginning, right? We import about 35% of the footwear we consume just from China, and that's 24% of apparel. So if there was a tariff imposed on those goods for up to 60%, which is what Donald Trump has proposed in his running, then that means your goods will have a 60% increase. And that's a huge increase. It will definitely lead to inflation. Now, will it be $20 billion? Will it be $30 billion? It all depends, because we do expect manufacturing to then shift to other places as well. But just because you're not in China doesn't mean that you're protected, because he's not saying that just China will be taxed. He's saying other Asian countries like Vietnam and Bangladesh and India, where production has shifted since his last round of tariffs, they're going to face a 10 to 20% tariff as well.
So what do you expect the results of this to be? Are people going to finally stop shopping on these fast fashion websites so much? I mean, my doorman is always complaining about how many packages people are getting, because you can buy a dress for like $3.
Also, let's be clear that nobody in America cares about the slave labor conditions of fast fashion.
A topic for another day. But I mean, do you anticipate, Poonam, that people will shy away from spending
No, I
so
don't.
much?
I actually don't, because I think we're talking about two different things here. So when you're talking about companies like Shein and Temu, which is I assume what you were referring to, they are
Or H&M or Zara, right?
Right. So anyone who's shipping directly from China, like Shein and Temu are, if the product is under, I believe, $800, they have a de minimis exemption, which means they don't have to pay any tariffs. So unless we revisit that exemption, which is on the table, those goods can still come here without that added implication. It's companies like Macy's, like Adidas, like Nike, who import still, a double-digit figure of their apparel and footwear from China or other Asian countries that will be exposed to these higher costs, because they will be paying tariffs on them. So what do? Either they absorb the costs or they have to pass them down to the consumer. Depending on the magnitude of the increase, I think that's really what's going to dictate. Are we going to 60% or are we going to 20%? I think that's really going to define how much the consumer will have to pay more. And if they have to pay more, they're going to trade down or they're going to buy less. It's one or the other.
And it's not just clothes, right? You write about
No,
that.
yeah.
Cars could also face kind of the same problem.
Absolutely. It's anything. It's anything coming from China or the Asian countries, right? There will be a tariff on them. Semiconductors to clothing to toys to, you name it, electronics, whatever is coming from these Asian countries is exposed to higher costs. The big question is how much higher? I think that's a wait and watch story, but it is negative nonetheless, because we expect some sort of increase.
I mean, the NRF looks at the National Retail Federation looks at 6 consumer product categories: apparel, toys, furniture, household appliances, footwear, and travel goods. And they say that the tariffs will be between $46 billion and $78 billion in additional costs to the U.S. consumer a year. I have a viewer writing in who asks about bringing manufacturing back. That's the whole point, right? Are companies not bringing manufacturing back just because of costs? I mean, I imagine that our labor costs are just way too high.
It's not just about the cost. If you remember, we were a hub for apparel manufacturing, 40, 50 years ago. We had the talent here in the US to make garments, but that talent is now long gone. So how do you get that skilled talent back to even bring the extent of manufacturing that has shifted abroad back to the US? That's not something we can do overnight, and definitely not at that magnitude. So while yes, some manufacturing will come back, but you can't take the 30% of footwear that's manufactured in China, 30% plus, and all of a sudden just bring it back to the US.
Yeah.
We just don't have the infrastructure, nor do we have the talent to do that.
Although I like to buy all my boots pretty much from the U.S. West Coast. I like Baker's boots. I like Westco. Yeah, some good American-made boots. Japanese do it well as well. By the way, Donald Trump is asking Robert Lighthizer to run U.S. trade policy. That, according to the FT. More political news from Joe Matthew and Kaylee Lyons in Balance of Power next.
politics to the world of business. This is Balance of Power.
From Bloomberg's world headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew alongside Kaylee Lyons here in Manhattan as we welcome Friday. Kaylee, it's been a long week. With still some races to call and some important breaking news that we're going to bring you through as we set the baseline. Kaylee, Senate races in Nevada and Arizona are keeping us waiting. So is the House of Representatives. But this idea of an early transition for a Trump 2.0 is continuing to take shape.
Yeah, of course, we got the first confirmation of who will be close to the 47th president last night when Trump announced in a statement that Susie Wiles will be his chief of staff, the first ever female White House chief of staff in American history. She, of course, one of the architects of his successful campaign this cycle. And we just got some more news from the Financial Times reporting that Robert Lighthizer, who, of course, was the U.S. trade representative in the first Trump administration, has been asked back to take that job again as he builds out his cabinet. The Financial Times also reporting that Robert O'Brien, who served as the national security advisor during the first Trump admin, will not be returning. But again, according to the FT, Lighthizer will be.
Yep, reprising his earlier role, having also expressed interest in serving as Treasury Secretary. There are a lot of names around that job. We talked to one of them yesterday in Senator Haggerty, the Republican from Tennessee. Didn't have much to say on that front. But one of the names being considered here on a list that we're going to talk about here with Laura Davison, Bloomberg Politics editor, is joining us off the top here from Washington, D.C. with her eyes on the transition. Laura, it's great to see you. We just checked one name off the list here, Lighthizer, second round. What do you think?
So this really suggests that the aggressive trade policy that Trump had in his first term, he's ready to do that plus some. We already know that he wants to do across-the-board tariffs of 10%, perhaps up to 60% from imports from China. So the fact that this is one of the earliest names coming out right after White House Chief of Staff indicates that this is a top priority for Trump. We know that, day one, day two, day three, he wants to start on this tariff policy. This is something he doesn't need Congress. He doesn't need the agencies. He can do this by executive action, and so we should anticipate to see that, come January 20-something.
Well, so this would be a return act, obviously, Laura. Do we have an understanding of who else from the first Trump admin might be returning for the second go-around, knowing that a lot of people who were close to Donald Trump from 2016 to 2020 are no longer so?
Yeah, and there's a lot of folks who Trump has said, if he had to do it again, and now he, is doing it again, he would not have hired. He's suggested that was one of the mistakes. Folks like Rex Tillerson. There are other people that we may see. Names like Mike Pompeo are back in the mix. Of course, he was Secretary of State and CIA. Other people on the national security front, people like Rick Grinnell may be back in the fold. This is all being worked out. And down at Mar-a-Lago, Trump is taking a bunch of meetings. A bunch of folks are there at Mar-a-Lago, hanging out in Palm Beach, waiting to see if they can get a little bit of FaceTime with the president, Wiles, and potentially Elon Musk, who's also reportedly down there.
Wow, that's got to be quite a party. You mentioned the former Secretary of State suggesting he might be Secretary of Defense this time around, Secretary Pompeo, and Senator Marco Rubio's name continues to emerge for a potential state role. Does that sound realistic to you, knowing that would create another seat to fill?
Yes, in the Senate, it's much easier. There's a Republican governor, Ron DeSantis, of course. He could appoint, someone to fill Marco Rubio's seat. Someone else who we may see is Doug Burgum, North Dakota governor, who was also a vice presidential contender like Rubio. Where it gets tricky is with these House appointments. There's a bunch of House members, folks like Brian Jack, Elise Stefanik, Mike Walz, who are interested in jobs because we don't know the size of the Republican majority, or if there will be a Republican majority at all. There's a lot of concern that if they pull people from the House to some of these cabinet-level jobs, that it means that Republicans either won't have a majority or at least not a big enough one to get through the policy agenda. So folks who are in the House are being told that their candidacy is a little bit on ice right now while that is all being sorted in the House.
We're also getting some more reporting from the Financial Times, Laura, about the potential Commerce Secretary. Apparently, Trump is likely to offer that job to Linda McMahon, who, of course, ran the Small Business Administration during his first admin. So that would be another familiar face, according to the FT. As we consider this transition transition process, knowing we've heard from both the loser in this presidential race, Vice President Kamala Harris, and President Biden himself yesterday pledging a peaceful, smooth transition of power. Do we have a sense of the extent to which the Trump transition team really wants to be working with the incumbent administration, knowing their skepticism around the General Services Administration, the U.S. intelligence agencies? Could this still be tricky?
Yes, this could be very tricky. And so the public posture, the statements from Trump and his team have been very positive and warm to the president. They've accepted Biden's offer to come to the White House and meet. But behind the scenes, there is concern about, sort of the FBI running some of the background checks. The team hasn't yet, signed on to use federal buildings for the transition. This is all being run out of Mar-a-Lago. They've not yet taken federal government money. So this is, there's still very much a rift between where the Trump team is and, sort of integrating back into the federal government.
It's really fascinating. Should we expect that to change, or is that the way this goes? Simply move everybody into the administration once Joe Biden leaves. And to that end, is there going to be the traditional welcoming of the family on the South Portico? They're going to have breakfast together before the inaugural, or does that just sound like comedy right now?
We'll see how that goes. Biden, at least publicly, has sort of indicated that he wants to have this peaceful transition of power, do everything sort of by the book, and that would be sort of the traditional way of doing it. It's also noteworthy to note that a lot of the people that Trump wants to bring in may not be able to be confirmed. So this is sort of one of the things that's being discussed. If they can't be confirmed by the Senate, or maybe can't pass a background check, what are sort of the ways that Trump could bring these people into special advisor roles in the White House that don't involve sort of the normal government apparatus?
Well, that confirmation will get easier, presumably, with every additional Republican Senate seat in the majority. Laura, obviously 53 is where we stand right now. It's unclear whether or not that's going to be expanded via Arizona or Nevada. But how much does that matter, that this isn't a 51-49 Senate we're looking at?
It gives Republicans in the Senate a lot more room for error. They can lose some of these more moderate members, Lisa Murkowski, Susan Collins. They don't have to support some of the more controversial or far-right nominees, and they can still pass through. So this gives Trump and his team a lot more leeway of who they can bring forward. They just need a simple majority. And, when you look at the roster of Republican senators, the vast majority are very closely aligned with Trump.
All right, Bloomberg Politics editor Laura Davison, thank you so much. As I alluded to right now, the Senate, as it stands, is 53-45. 53, of course, the size of the Republican majority at this time. The House, though, Joe, remains too close to call. Right now, Republicans have won 211 seats, Democrats 199. There are 25 left to be called, and of course, it takes 218 to have a majority.
This still could go either way. I think favored Republican right now, but as we warned everyone on Tuesday, California is going to end up deciding this. And Kaylee, we just have no idea when that's going to be done.
Yeah, it could take some time still, but we want to get a check-in on sentiment within the Democratic caucus in the House and turn to Florida Congresswoman and former DNC chair Debbie Wasserman Schultz, who is joining us now here on Bloomberg TV and radio. Congresswoman, thank you so much for your time. Could you just share with us what you're hearing from your leadership in the House, the degree of confidence or not that is being projected?
Kelly and Joe, thank you for having me. And, what we're focused on right now, with 25 seats still outstanding in terms of the election result, is making sure that every vote is counted. And, we've seen in the past efforts to, try to cast doubt on, the counting process on the West Coast in particular. There are a lot of mail ballots. Washington State, Arizona, Oregon actually conduct all or nearly all of their elections by mail, and California has postmarked by Election Day. So we've got a long 3-day weekend with Veterans Day on Monday. So we have a little bit of time before we're going to know how this plays out, and we have to just make sure that ballots are cured, because people have an opportunity when there's been a mistake that's been made to fix their ballot so that their intention is clear. And so in America, we've got to make sure that we follow the law and make sure that every valid vote has an opportunity to be counted.
Well, I don't want to walk you into too much speculation here, but I do wonder if Democrats take control of the House, and that is going to be the scenario where we have a split Congress and a Donald Trump administration on the other end of Pennsylvania Avenue. What would be the role of what I presume would be a very thin majority, not unlike Republicans have right now? Would it be one of insurgency? Would it be the party of no? What would Democrats consider their role in government to be?
Well, if we do have an opportunity to serve in the majority, as you said, it would be with a slim majority, and that's the situation that the Republicans have now. Regardless, it would be a slim majority either way. We've had a lot of success as Democrats in the minority, with the Republicans only having a 5 and then a 4-seat majority, in being able to make sure that we were the party of normalcy. I mean, they couldn't, because they haven't been able to get out of their own way and even pass legislation with a majority. They've needed Democrats to be able to not shut the government down. They've needed Democrats to be able to not crash the economy into a cliff and lift the debt ceiling. We've had so many things that have happened as a result of Democrats being team normal because Republicans were team extreme. That will particularly be important with Donald Trump in the White House. And if we have the majority, we're going to need to make sure that we are the backstop to stop mass deportations, to stop him from bringing to a screeching halt all of the progress we've been able to make.
Well, on the subject of Donald Trump, Congresswoman, we are getting some breaking news just crossing the wire here. The U.S. Special Counsel Jack Smith has officially asked the courts to pause the prosecution against Donald Trump. He will announce plans for Trump's case by December 2nd. Keeping in mind here, there were 2 federal cases against Donald Trump, 2 indictments, one in Washington, D.C., related to results of the 2020 election and the attempt to subvert them. Another in your state of Florida, the classified documents case, Congresswoman. Largely, this move from Jack Smith was expected. The DOJ has a policy that says a president of the United States shouldn't be prosecuted, but I do wonder your reaction to this news. Keeping in mind already he has become a convicted felon in a state case, but federal is different.
That's right. The 34-count felonies that he's been convicted of, that's a state case, and there's still a sentencing that awaits him. The federal cases, let's remember, include that Donald Trump incited an insurrection on January 6th, and that he egregiously violated the federal law and took home and refused to turn over, as the law requires, vital intelligence documents that he hoarded and that he showed off. So it is essential to our national security that these cases be able to play out, but we do have Supreme Court decisions that established immunity, so those limitations exist, and it's going to have to be sorted out on the federal cases that remain. The state case is, I think, something that we're going to have to keep an eye out on. Certainly, Donald Trump had his day in court, was convicted on all 34 counts by a jury of his peers, and a sentence should hold him accountable.
Congresswoman, should President Biden pardon Donald Trump before he leaves the White House?
I'm not going to be here and tell President Biden what he should do. I personally don't think there should be pardons coming in these cases. These are very, very serious crimes that he's committed. The cases should play out under the rules that the Supreme Court has structured. And so, no, I don't think that President Biden should be pardoning him. President Biden, I know, will be focused on trying to make sure we can continue to finish our agenda strong, continue to bring down the cost of prescription drugs through the continued negotiation after the Inflation Reduction Act successfully brought down the cost of so many prescription drugs. That has to continue. We have to continue to make sure we bring the CHIPS Act implementation forward, because as Speaker Johnson clearly indicated that they were going to look at trying to repeal that. That would be outrageous. We need to make sure that we manufacture computer chips in the United States, continue to create those homegrown jobs. So we have a lot to do while the lame duck session is in session.
Well, and in the remainder of Biden's presidency, Congresswoman, I don't have to tell you that there is within your party a lot of blame being cast on Biden for not stepping away from his reelection campaign sooner. You, of course, used to chair the DNC. We can, I guess, Friday morning quarterback this all we want to. I wonder, though, if you can diagnose what went wrong in this cycle and what the Democrats need to do differently in the midterms in 2026 and then looking forward to 2028.
I've been through a lot of aftermath analyses in post-election losses, and one thing that we need to not do is finger point. The blame game is inappropriate. Look, we have to face some hard realities here. we had tremendous accomplishments under President Biden. We have the strongest economy in the globe post-COVID, but we failed to connect, obviously, with a lot of key constituencies that were previously supportive of Democrats. And we've got some work to do that I know we're going to come together as a family and focus on under Hakeem Jeffries' remarkable leadership, whether he is the minority leader or the Speaker of the House of Representatives, and I still think that's possible. We need to come together with our other Democratic leaders on the leadership team that I'm proud to be a member of and do an analysis. And we have to make sure that we focus on the priorities of the American people, that the diffuse communications system that exists today made it unable for us to penetrate. We have to make sure people know we understand the challenges that they face. When I was on the campaign trail, Kaylee, I still hear from people about the price of groceries. We cannot let grocery companies not pass on savings that they are clearly feeling in the retail at the retail level. And we have to make sure that we're listening to people and responding about the impact of the remaining dregs of inflation that still exists.
Congresswoman Kaylee recalls your time when you chaired the DNC, and we all remember shortly after 2012, the autopsy that the Republican National Committee put forth. It was a 100-page report. Remember, Reince Priebus said, we're going to put our cards face up on the table and better appeal to Latino American voters. That was part of the outcome of this election, that in some cases, Latinos broke for Trump. And I wonder your thoughts on why. We only have a couple of minutes. I don't want to set you up here for too much of a dissertation, but what would your autopsy say today?
I represent a very large Hispanic constituency in my congressional district, and that outreach is absolutely critical. I wouldn't say that the Republicans under Trump have done such a good job allowing someone to call the island of Puerto Rico a floating island of garbage right before Election Day. Probably wasn't the best way to show that they support Hispanics, but we have to recognize Hispanics are a multi-ethnic population. They can't be treated as one size fits all, and you can't only talk to them near an election, and that's something that we have to get to work on, and we have to make sure that we're talking to them about their priorities. The economy, education, healthcare, that's top of the list. And then we also obviously have to deal with immigration challenges and some of the other things that are more uniquely specific to the Hispanic community as well. We're going to do that and more.
Congresswoman, great to have you back. Debbie Wasserman Schultz of Florida, appreciate the conversation and have a great weekend. Kaylee, with breaking news today, this is going to be one of these days with races breaking and news on the transition with more headlines crossing the terminal.
Yeah, again, the special counsel Jack Smith asking the court to pause the prosecution against Donald Trump. Jack Smith, of course, overseeing the two federal cases against Donald Trump. The state cases are another matter. As we discussed with the Congresswoman, he's already a convicted felon based off of the state case in New York around falsifying business records. But his team is also pushing for the other state case, the racketeering case in Georgia, also related, of course, to the results of the 2020 election, to be tossed as well. So we'll continue to keep track of these developments. Get reaction from our signature political panel, Rick Davis and Jeannie Shanzano, right here on Balance of Power, live from New York on Bloomberg TV and radio.
In case you missed it on Bloomberg Technology.
We don't view any of these rumors as particularly meritorious. We laid out a strategy. We reaffirmed that with our board of directors. And obviously, as we've taken these steps this quarter and restructuring and getting our costs where they need to be, we have the capacity to go on the journey that we've laid out.
Don't miss Bloomberg Technology live every weekday.
As we we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Speaking of the Hall of Fame, you were elected with 98.5% of the vote. Have you ever figured out who that person was that didn't vote for you? I mean, who is this person waiting for?
I've hunted all 5 of them down.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Balance of Power on Bloomberg TV and radio, live from global headquarters in New York, alongside Joe Matthew. I'm Kaylee Lines. The election, of course, is over, but we are still dealing with breaking news as it comes in, pertaining to the outstanding Senate and House races, but also pertaining to the ongoing legal cases, at least for now, against the president-elect Donald Trump. But news breaking just moments ago, Joe, that the special counsel Jack Smith has asked the federal judge overseeing specifically the election interference case against Donald Trump to cancel all upcoming court deadlines in a step toward dropping the case.
Yeah, I guess he'll be making a filing on December 2nd. The kind of an anticlimactic finish, it appears to be, for this massive effort that Jack Smith put together in these 2 cases. And we're joined right now on this breaking news by Bloomberg legal reporter Eric Larson, who's been covering this since the very beginning. Eric, this is how it ends.
Yeah, I mean, we will see what the judge says, but the writing was on the wall as soon as Trump won the election. And just a few days ago, of course, we learned that the Justice Department was already looking into ways to make these 2 cases go away. And, of course, it is a result of this Justice Department, longstanding Justice Department policy that you can't prosecute a sitting president. Of course, Trump is not president yet, but they want to get these cases, I think, out of the way before his inauguration, and this is the first step in doing it.
Well, of course, it's too late for one case against Donald Trump already, Eric. In the falsifying business records case here in New York, he already was convicted on all 34 felony counts, making him a convicted felon. He's supposed to be convicted, or rather sentenced in that case on November 26th, just a few weeks from now. Is that still going to happen?
Well, as of right now, that date is still on the books. But you can expect that Trump's lawyers are going to make a strong push to prevent this sentencing from going forward. Of course, he faces as long as 4 years behind bars for these crimes. And even though most legal experts have said that he would probably get far less than that, or even just probation, I don't think they're going to want a judge to be able to issue any kind of sentence at all before the president-elect takes office. So just the mere threat that it could be a sentence of incarceration that would hang over him as he takes office would be the argument that they would make that would interfere with a president's constitutional rights and interfere with his ability to do the important work of office.
All right, Bloomberg's Eric Larson, thank you so much for jumping on the phone with us as we handle this breaking news. Appreciate your time. And of course, there's another case to consider here as well, Joe, another state case, the one brought against him and many other defendants in Georgia.
Absolutely.
Also related to efforts to overturn the 2020 election. That's the racketeering case that the DA of Fulton County, Fani Willis, has brought. It's unclear how that moves forward. The Trump team would like it not to, obviously.
That's for sure. And we have to remember that even if there was a Biden pardon, that doesn't apply to state-level cases. So it's an interesting component here to this whole story. Remarkable, though, just within days of this election turnout, we're having this conversation right now. We want to bring in our signature panel, Rick Davis, Stone Court Capital partner, Republican strategist, and Jeannie Shanzano, political science professor at Iona University and senior democracy fellow at the Center for the Study of the Presidency and Congress. Is this how you saw it ending?
Yeah, this is how it should end. I mean, the Justice Department should move forward with dropping these charges. Their long-standing prohibition against prosecuting a president should apply to a president-elect. It is unhealthy for the democracy. And I hope that Alvin Bragg, the DA in Manhattan, is able, or the judges in New York are able to put that to rest as well, because we do have to move forward, and this cannot continue. You cannot do democracy in the courts. It has to be decided at the ballot box. He won, and we have to get behind him and move forward.
Yeah, Rick, could another way of viewing this is the Justice Department abiding by what the will of 74 million Americans is?
Yeah, well, you don't want to just trust 74 million Americans to decide what is legal and what is not legal, right?
Sure.
No one should be above the law, and sitting presidents don't have immunity against their personal acts, right? So just to put it in that context, but it is not healthy for a democracy to be chasing after former presidents or current presidents, you know, for things done not related to their official acts of the presidency. So I think we should have all learned our lesson on this. You know, the indictments of Donald Trump buoyed his campaign in the primary when other people were running against him. And in assuming those things were all done for the right reason, that it was because of the normal course of the legal system, we really did bend the political dynamic here by having all this legal activity around Donald Trump during a presidential year.
I asked Debbie Wasserman Schultz, I'll ask you, should Joe Biden pardon Donald Trump?
No, you know, I don't think so. I would hope
Wouldn't that be good for the sake of the democracy?
You know, I don't think he needs to pardon him. I think the Justice Department does what Jack Smith is asking them to do, and on these state cases, the New York and Georgia, which are very different cases, they move forward as well and ensure that there is no issue involving prison or anything else. And let's put this behind us. I don't think we need to see Joe Biden doing a pardon, and I do think it's a reminder that what Mitch McConnell said during the impeachment and then the trial of that, this should be handled in the courts, was dead wrong. These are political decisions, and he should have stepped up if he thought Donald Trump was guilty, which he said he did, and he should have brought Republicans along to remove him from office at that point, not throw this to the judiciary.
Well, but when we consider the future of the judiciary, obviously Donald Trump, we don't know who it is yet, will be able to appoint his own attorney general. We'll have a new-looking Department of Justice, and we should point out, consistently during his campaign, Rick, he talked about weaponizing that against his political opponents in the way he felt it had been weaponized against him in all of these cases, this retribution tour. Should we still expect that to happen, or if they go away, does this all move into the quiet?
Oh, we'll never know, right? I mean, I don't think you can predict an outcome on anything in a prospective administration, whether it's Donald Trump's or anybody else's. That being said, I thought Mitt Romney had the right concept 8 months ago, you know, before this campaign really heated up, and said that President Biden should have pardoned him at the time these charges were brought. In other words, you know, why wait till all of this unfolds and all this negativity takes hold in our society when it would have been appropriate for one president to pardon another? This has happened before. The last thing we should be doing is prosecuting for, if there's any shade of political motivation to it are leaders. And so if you want a healthy democracy, you got to take a step back from this kind of lawfare.
Well, as Donald Trump watches all of this unfold, he's not waiting around to find out. He's going ahead with the transition and reaching out to world leaders. There was a phone call, as we already talked about, with President Zelensky of Ukraine. And there's reporting today, Jeannie, that Elon Musk was also on that call. And of course, the Starlink service has, I guess, something to do with the conversation here about the way forward in Ukraine. But what does that mean for what this administration is going to look like and the role that Musk will play? Because it seems like a pretty big one.
Yeah, I mean, out of Tuesday night, in addition to Donald Trump, the big winner there was Elon Musk. And that is very clear. He was at the speech at Mar-a-Lago on Wednesday morning. He is on the phone with Zelensky, and we assume other world leaders. He has said he will take some kind of role, not necessarily a cabinet position, certainly, in the administration. So he has a big role to play, and I think it's going to be the job of the investigative press to be the watchdog. We hope that they are, and to follow what is happening, because this is somebody whose business and life benefits enormously from billions of taxpayer dollars.
So whether or not Elon Musk is in the cabinet remains unclear, but we are getting more reporting on what that cabinet could look like from the Financial Times this hour. Rick, you guessed this last night when we were on Balance of Power. Apparently, he's looking at Linda McMahon, the former Small Business Administrator, for Commerce Secretary. Robert O'Brien, who was NSA, or National Security Advisor during the Trump admin, will not be coming back, but coming back for a second round, U.S. Trade Representative Robert Lighthizer.
Robert Lighthizer, probably the sharpest protectionist in the Republican Party. And he, as far as Donald Trump was concerned, he did exactly the right thing in his first term, organizing the tariff regime against China and others. So we can expect a lot of that to happen again. Look, I think one of the things we're going to be surprised about is that there aren't going to be that many big surprises, around Donald Trump's selection of people for his cabinet or his sub-cabinet. It's a trust relationship there, and these are all talented people. I mean, Linda McMahon, really did a fabulous job at the Small Business Administration, especially as COVID started to take a hold. So I think we can anticipate a professional cabinet, but one that is intensely loyal. And so, and look, I mean, I think the jury's out right now. We don't know what role Elon Musk is going to take, but Elon Musk has reformed the space program, satellite program, infrastructure development. I mean, we could do worse than to have someone like him sitting next to the president when he's making decisions. That being said, we'll see where he winds up if there is an official position for him.
As a former lawyer for the U.S. steel industry, which kind of gives us an interesting backdrop for the Nippon proposed acquisition of U.S. Steel, which obviously Donald Trump doesn't want to see happen. But what does this appointment, he hasn't accepted it yet, suggest about Trump 2.0?
I think Trump 2.0 in this way, I think, is not going to be like, unlike Trump 1.0. He didn't have much use for the cabinet beyond some critical positions. He left a lot of that to his folks, and his number one demand was loyalty and assisting him in fulfilling his promises. So I think that's what we are seeing here. And I think, what we're hearing also is that those people who cannot make it through Senate confirmation, and there are some, are going to be put into the White House as officials. So I think we're going to see a movement of officials who can get through confirmation, going that route to the cabinet. All of the other ones, and we know their names, are going to be put in the White House regardless. And I do think on Elon Musk, we have a system of checks and balances. We do not anoint somebody to fix infrastructure and everything else without those checks. So he is brilliant and he does a lot, but he also needs to be checked.
We know their names. Steve Bannon, who are you talking about?
Oh, well, we know their names, right? Steve Bannon, you can think about, I mean, we can think of a whole host of people. We know some of those people, when you think just about Stephen Miller on the issue of, trying to, for instance, work on his number one promise, which is deportation. That is Stephen Miller's game. He won't make it through a Senate confirmation, but he'll do it once again from the White House.
Well, it'll get easier with every additional senator in the Republican majority, right, Rick? There's still 2 races outstanding.
Still 2 races races outstanding. I think we're at 53. Yeah, I mean, I don't think additional races will matter other than, comfort going forward when you need to get a closer vote for 60. So the real question is for fiscal issues, whether or not Republican majority will hold in the House. I think we're going to be waiting around until California counts all their ballots. So that could be weeks before we actually know the content of Congress.
How about Arizona? You've got people on the ground there. When are we going to get a call?
For the Senate race, I think very soon. There are 45,000 votes still uncounted. Most of those are in Maricopa County.
Right.
And the way Maricopa County releases things, it's in the order of which they came in. So last night, for instance, we got a release from people who dropped off ballots on Election Day. They didn't vote on Election Day by walking in and casting a vote. They voted by just turning in their ballot like they mailed it that same day. So those were counted, and, Republicans picked up a little bit. So we'll see.
Maybe we'll find out while we're in the late edition of Balance of Power. Rick Davis and Jeannie Shanzano, thank you so much. Coming up, we have much more ahead from World Headquarters in New York as the second Trump administration begins to take shape. Alongside Kaylee Lines, I'm Joe Matthew on Bloomberg TV and Radio.
There is no backwards in recycling. There is no backwards in treating pollutants in the water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services, even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
Season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The leader in technology for as long as you have been. Do you think AI is just as landscape changing as everyone else seems to think it is?
Sometimes things are overhyped. I don't think that AI is overhyped.
I think Etsy's uniquely positioned to benefit from AI. Finding that needle in the haystack is tricky. That's part of what makes Etsy both delightful and frustrating to people. And being able to serve the good stuff to the top fastest is where AI can really benefit us.
Our mission is keeping commerce human, and actually we talk about AI as helping us to be superhuman. It's really the partnership between AI and humans that makes Etsy work.
AI can help Etsy's customers personalize their searches and steer shoppers more directly to items they may want to buy. It's also helped the company improve reliability by predicting delivery times more precisely. But that doesn't solve a larger challenge, getting more consumers to think of Etsy more often and ultimately become repeat buyers. To this end, Etsy invented gift mode.
Getting in the top of mind consideration when you're thinking, I have a gift, I'm going to go to Etsy, just getting that to be more habitual. Gift mode provides a perfect opportunity for that. We get to know the gifter, but we also get to know the recipient. So it's a way to, sort of a more viral way to bring in more, introduce more people to Etsy.
The top names in business are on Bloomberg.
I've made so many mistakes in my investment career. One of them was I sold all my NVIDIA, probably in somewhere between 800 and 950. I think it's 1,300 on that stock now. I own none, and I own none the last 400 points. It was a big mistake.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
The notion that we would cut rates. Financial markets are wide open. Equities are at all-time high. Financing is available. Real estate prices are going up in every market. And yet we're stimulating. And we're stimulating fiscally. It is not clear that we need more rate cuts at this point. To the extent we accelerate the economy and have to go in the other direction, that would not be a good day.
Nobody covers business like Bloomberg.
This is Balance of Power on Bloomberg TV and radio. We're live at World Headquarters in New York. I'm Joe Matthew alongside Kaylee Lyons. You made it to Friday. Welcome to the threshold of the weekend following quite a week in the history of politics, and Kaylee, the markets as well. I have officially lost count of the record highs on the S&P 500, but it looks like we have another one today.
Yeah, I mean, we're closing in on the 6,000 level. If Donald Trump were already president, we might be making some hats at this point, or at least when it comes to the Dow, which is encroaching on 44,000 here. So let's get a check of these financial markets with Bloomberg Markets correspondent Abigail Doolittle. So Abigail, we just keep climbing.
It is pretty impressive, this rally that we have, and in fact, relative to those record highs, we are at another record high, in fact, the 50th of the year. A lot of this, of course, having to do with this week's stunning events with President-elect Donald Trump winning the U.S. presidency. Investors love it, that Trump trade in full effect. Now, it started to come into effect back in September, frankly, but this week we're looking at the best week in more than a year, up 4.7% for the S&P 500. The idea that tax cuts and other protectionist behaviors, policies out of the Trump administration could help the economy and therefore stocks. But the Russell 2000, that small cap index, those domestically based companies really outperforming, signaling that Trump trade, up more than 8% or 7% on the week, the best week going back to 2021. It's not just the Russell 2000, though. Bitcoin surging by about 10%. And then, of course, DJT higher at one point on the week. It's been flipping. Interestingly enough, Tesla higher significantly on the week, up more than 10%. So Donald Trump's biggest supporter, Elon Musk, really benefiting. And then, Joe, I know you love that VIX at a 14 handle. Last week, it was at a 22 handle. The fears that we've had, well, they have certainly gone away. Investors excited for what this new administration could bring, again, to the economy and the markets.
All right. Abigail Doolittle, thank you so much for all the help this week, keeping tabs on the markets for us as we cover politics here from our desk. Notable Wall Street names, as we've been discussing, are expected to have a bigger role in Washington next year. Former hedge fund CEO, now U.S. Senator-elect David McCormick told us back in June about his plans for public office and fighting high prices.
We've got to get inflation under control, but the drivers of inflation are bad energy policy that have driven up the prices of fuel and too much spending. And so I would say reversing certainly some of those Biden spending bills and rolling back the war on natural gas and fossil fuels is the key to getting our economy back in check. And I wouldn't, particularly now when so many families are burdened by this inflation, I wouldn't burden them further by rolling back the tax cuts that President Trump placed.
Bloomberg's Sonali Basak was part of that interview and has interviewed Howard Lutnick and others in the past year. Joins us right now at the table. It's great to see you. Our worlds are truly colliding here, aren't they?
They certainly are, because there are a lot of business names, aren't there? Yeah. Especially when you're thinking about the Trump transition and who could be in office next.
Mm-hmm. So talk some names here, because this is your Rolodex. Apparently, is going to be populating the White House some of the agencies, and also having the ear of the president. There are a couple of different levels here that they could influence policy in this next administration.
Well, we already talked about Howard Lutnick, of course, being a very close part of this transition, but also this new news about Robert Lighthizer and trade is significant because it opens the door more on who might be chosen for Treasury Secretary. I am going to cite the election betting odds because not only have they been right before, they actually also have now Scott Bessent, longtime hedge fund manager, formerly at Soros, now at Key Square, in the lead on that. That is someone we're watching very, very closely. John Paulson as well is high up on the odds, not as high up in as Scott Bessent. But the thing to consider here is y'all have been talking a lot about the Fed as well, right? Scott Bessent is one of the people that put forward the idea of a shadow Fed president and how likely that might be. That's something that still has not been addressed. And so there's a lot of scuttle about the people themselves and what it would mean. As it pertains to Lighthizer, one other important aspect of this is the protectionist policies that could come with him. And the idea of what mergers may or may not get through. U.S. Steel, for example, is something that a lot of bankers have had their eye on, a lot of investors have had their eye on. Prominent banker this morning telling us you could just look at where U.S. Steel is trading and it tells you what they think will happen of this deal. For those folks on Wall Street, very excited about a return of a lot of financial activity, mergers and acquisitions. There is a role protectionism would play here to thwart some of that, particularly when you have foreign investment coming into the U.S. and buying U.S. assets.
As our Bloomberg television audience sees some photos here of people who could potentially be Treasury Secretary, we actually spoke to one of them on Balance of Power last night, Senator Bill Hagerty of Tennessee. We asked him specifically, Shonali, about the comments made by Fed Chair Jay Powell in the news conference yesterday when he was asked whether he would resign if Trump asked him to. The answer to that was no. Also asked, though, about the legality of demoting at will any Fed governor or vice chair, like, say, Michael Barr. And Hagerty said, yeah, we should test that legal theory. He does not like Michael Barr, or maybe more specifically, the Basel III endgame Barr initially put forward.
I'm glad you brought that up because even when you look outside of the Fed and the Fed supervision role here, very, very important because Basel III is one critical piece of the pie here, but then you broaden the net and think about the SEC, the CFTC, the FTC. I spoke to Rina Agarwal in just really an hour or so ago over at Georgetown. She was part of the Biden-Harris transition. She said it's a very common for that SEC chair, CFTC chair to step down quite swiftly. So a lot of people are now watching not just these initial cabinet posts, but how quickly you're going to see those names for SEC and CFTC come up. Because remember, the SEC wasn't just tough on crypto. They were very, very tough on the banks and the hedge funds. There were billions of dollars worth of fines levied in the last couple of years for things like texting outside of the traditional email channels on WhatsApp and other threads. So a lot of expectation for a full-scale wind back of some of the rules and enforcement actions being taken.
You mentioned quickly Scott Bessent and the idea of a shadow Fed chair. We talked to him about that on the program, gosh, I don't know how many weeks ago at this point. Jay Powell yesterday was asked if he would leave the building if he was told to resign, and he said no. Is the idea here to just turn him into an instant lame duck?
Well, that's not how the shadow Fed part would work, right? He could stay in that spot and still have a shadow Fed.
But also not have the influence potentially with this person sitting right behind him.
That's the biggest problem, and that's where a lot of clarity is needed. There are a lot of people, Stan Druckenmiller included, that say that, and Scott Bessent worked for Stan Druckenmiller, that's why that was relevant, that say that that would erode the credibility of the Fed in a very significant way and how the markets read the Fed. The idea there is Powell would stay where he is. You put somebody else in who would then become the Fed chair in the next term, but he would that next person would undermine Powell at every turn. The markets would be confused, wouldn't it? And I think something very important to consider here is the role the Fed has been playing as a backstop to markets. Even if in the next couple of months you see the bond markets misbehave, underpinning this market, you have a lot of people who are very worried about overnight rates, even at this juncture, as you still have Treasury issuance as heavy as it is. It's a tough calculus to not have that kind of confidence from a market perspective at this point of time. And the answer to your point is not clear on whether Trump would try to seek to put a shadow Fed official there.
All right, Bloomberg, Shonali Basak, thank you so much. We're, of course, going to stay in very close contact with Shonali as we follow this transition and the economic and Wall Street players that could be involved in it. Now, as I mentioned, we did speak to one name that's being floated out there, Senator Bill Hagerty, last night on Balance of Power about Michael Barr and Basel III. Listen in his words to what he told us.
This Basel III endgame, this is, in my view, a rogue operation that has put a great deal of uncertainty into the marketplace. I'm glad that I've seen the banking community stand up against this. I certainly think that Basel III has been, all the proposals that I've seen have been largely bad for the American economy because they make us less competitive as a nation.
Joining us now from our Washington, D.C. bureau is someone who's been chatting Basel III with us for a long, long time now. Nathan Dean, Senior U.S. Policy Analyst at Bloomberg Intelligence. So, Nathan, for all of the talk about it, is it now dead in the water? What realistically is going to happen once this admin moves in?
Yeah, so I don't think it's dead, but it's certainly delayed for a year, if not longer, because, you know, while the Fed and Michael Barr, the vice chairman, are going to stay there for some time, the OCC and the FDIC will most likely flip. And if you don't have all three together, then you don't have a rule. Because so I think when the Trump administration comes in and the new regulatory leadership takes place, I think they're going to say, you know what, we're not going to move forward with Basel III. We're just going to sit and wait. Now, there is some thought here that potentially would finalize in 2026 or 2027, just because the Europeans have already finalized their version. It's called Basel IV. But we just think it's a wait-and-see moment, but we don't think that 9% capital increase for those big banks are going to happen anytime soon.
You put the Basel III T-shirts on hold, Nathan. We've been watching bank shares rally, and I'm sure your phone has been ringing as we remind our listeners and viewers that from your perch at Bloomberg Intelligence, you're the one who actually has some experience on the front line with terminal users, the questions and concerns that they have going into another administration here. What will it mean for mergers and acquisitions, the animal spirits we keep hearing about since Tuesday night?
Yeah, so, you know, we obviously saw a positive reaction from Capital One and Discover because they have, I think, the biggest merger that a lot of people are looking at the moment. And, you know, our view is that the Fed was going to take a positive look at it under the Biden/Harris administration. And we also think the Fed's going to take a positive look at it. And I think the real opportunity for the Trump administration here is that a lot of the DOJ risk is beginning to decrease for that merger. And so maybe the speed of mergers will certainly increase. And I think a lot of the questions that have been asked in a Democratic administration won't be asked in a Republican administration. And, you know, the other thing, just going to the prior point about Michael Barr and whether or not you demote him or not, there's a lot of optimism in the markets about this deregulation effort amongst banks. But if Michael Barr stays at the Fed in his role until 2026, it's going to take the Trump-era regulators years, potentially not even enough time in a first administration to get all these deregulatory efforts through. You still have to follow a comment period and a rule process. So I think that's what's driving a lot of this question of will President Trump demote Michael Barr and try and speed up that deregulatory effort.
Well, and he wants that deregulation effort to go well beyond the banking sector. We could apply it to energy as well. That's part of what drill, baby, drill means, is make it a lot easier to build out that infrastructure and start that actual leasing and permitting process. And that's, of course, a doubling down, Nathan, on oil and gas in the U.S., less so on cleaner energies, as he's talking about peeling back a lot of the subsidies from the Inflation Reduction Act, including for EVs. How easy is that repeal actually going to be, though?
Yeah, so this is where you have to figure out which regulation goes into which bucket. Is it legislation, regulation, or executive order? Something like the LNG pause, that's executive order. President Trump can do that fairly quickly. The IRA, the Inflation Reduction Act, that's legislation. And so the bulk of that, in terms of the EV tax credits, that's going to have to go through Congress. Now, look, it looks like the Republicans are going to take the House. They've already taken the Senate. So if they use reconciliation for tax reform, there's a lot in the IRA that they can play around with. But we have heard, and this is what we're telling our clients, is that the IRA is somewhat popular in Republican states. There's a lot of CapEx coming into those states in terms of building new plants in the renewable sector. So certainly the EV tax credit, I think, is at risk. But a lot of the IRA, we do think, is going to stick around.
You wonder if Elon Musk would talk to him about that. I want to ask you about the CHIPS Act, Nathan, because there appears to be an eagerness to undo or unwind portions of the bill, if not get rid of it altogether. But it actually seems to align more with the Trump philosophy when you consider reshoring, bringing jobs here, lowering our dependence upon Taiwan. Doesn't that sound like a favorable Trump plan?
Yeah, I think when they get into the nitty-gritty of their legislative priorities, I don't think they're going to touch the CHIPS Act all that much. One thing, a lot of it's already been spent. I think somewhere like 85–90% of the monies have already been doled out. I think certainly any unclaimed monies and untaxed, or tax incentives, they can certainly claw back. But I wouldn't be surprised if they were to try and tackle, they being the Republicans, would try and tackle some of the social elements of the CHIPS Act, maybe like environmental or labor requirements that go along with accepting this type of incentive. But we're telling our clients that largely we think the CHIPS Act is okay just because of the bipartisan nature it passed through Congress. It doesn't go through reconciliation like the Inflation Reduction Act would. And so we do think that the bulk of the CHIPS Act should be secure and something that's very important to those chip makers.
Finally, Nathan, obviously a lot of what underpinned the promises made by Donald Trump on the campaign trail, and a lot of them were tax related. How quickly do we expect a tax package could come together in the next Congress and then get over the finish line? Keeping in mind, in 2017, it was passed in 2017, the very same year that Trump took office.
Yeah, it's certainly going to happen before January 1st, 2025, because that's when those individual tax cuts increase. Now, we saw from Representative Scalise earlier this week that they want to move on this within the first 100 days of President Trump's presidency. But I will caution that it's going to cost plus of $4 trillion to keep those tax cuts going. And not many people in Washington really have any good ideas. There's a lot of square pegs going into round holes at the moment. So I would caution, I think it's going to take Congress a little bit of time to figure out how they're going to pay for it. There's maybe talk about putting tariffs in there, the SALT deduction and so forth like that. So I think they will probably see it before the summertime. It just may not be within the first 100 days.
Nathan Dean, Bloomberg Intelligence. Thank you so much, Nathan. I know you're about to embark on a long journey to talk to more terminal subscribers. We wish you safe travels. Coming up, hour 2, Balance of Power, will be joined by Rohit Kumar, the former Deputy Chief of Staff to Senator Mitch McConnell, as we follow the bead here on the transition, not only the administration, but what's going to be coming next, the balance of power in Congress. Our conversation ahead with Jonathan Tamari as well from Bloomberg Government as we anticipate a possible recount in Pennsylvania. The Senate race there. We'll have a lot more coming up on Balance of Power on Bloomberg TV and radio.
A feeling that I had in talking to Steve that he was a very different kind of CEO. He was focused on products, and had a belief that small teams could do amazing work. I love that vision. And I also love that in an environment where everyone was going to an enterprise kind of company, he wanted to refocus Apple on consumers. And it was brilliant because at the time, nobody was doing that. Everybody thought you could not make any money selling to consumers. And, I've never thought it was a good idea to follow the herd. I thought I had a chance of a lifetime to work with the creative genius that started the entire industry. And I didn't want to pass that up. People have forgotten this, but Apple was on the verge of bankruptcy. And it was a really awful time, and people advised me not to come to Apple because they thought that it was headed straight down. But I saw something different. I saw the sort of the sparkle in Steve's eye. And it just meant that we could pull out this turnaround for this American treasure. And I'm so glad to have been a part of that team. He taught me the value of innovation, the fact that small teams could do amazing things. I look at the size of the iPod team initially. I look at the size of the iPhone team. These were very small teams in the scheme of things. Hiring the best people to surround you, that challenge you, that have skills that you don't, and being confident with that. And also not to be married to my past views. You know, not to be so proud you can't change your mind when you're presented with new evidence and things. He could change like this. I initially was sort of taken aback by that, and then I became so enamored with it. Very few people have that skill because they get married to their past views, and I thought it was a brilliant skill.
ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, this is Balance of Power.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Both of these cases.
Yeah, of course, there's still questions around the two state cases against the president-elect. He is set to be sentenced in New York, at least for now, on those 34 felony counts of falsifying business records on November 26th. Unclear if that will change, and unclear what the future is of the prosecution against him in the state of Georgia in the racketeering case.
That's right. And we'll, of course, keep tabs on all of these for you. With votes still being counted, to Kaylee's point, we're still waiting for some big races outstanding here to be called, specifically in the Senate as well. You mentioned the House, but we still need calls in Nevada and Arizona before we can zip those up. And there are a lot of questions about what's going on and what might come next in Pennsylvania.
Yeah.
Kaylee, this is fascinating to think that Senator Casey is likely headed for a recount here after the race was called for David McCormick. Puts a big question mark over the swing state of Pennsylvania. Joining us now is an expert on Pennsylvania, Bloomberg Government Congress reporter Jonathan Tamari. It's great to have you, Jonathan. Is a recount assured?
Just about. Right now, Senator Casey is about a half percentage point behind David McCormick, the Republican, and that is within the number for a mandatory recount. So Senator Casey will have to request it, but it will be granted as long as the count stays within that number, and we'll see if there are enough votes to be picked up to make up the gap there.
Well, and of course, assuming that the gap is not made up, if these results largely stand even in a recount, it will be part of that 53 Senate majority at least. Jonathan, we don't know yet about Nevada and Arizona. The Democrats are both ahead there by narrow margins. What difference would a 53-45 Senate make relative to a 54-44 Senate?
I mean, it could be a really significant difference. All you have to do is think back to the first Trump administration when they were trying to pass the Affordable Care Act repeal, and a few handful of votes, derailed one of Republicans' biggest policy promises of the last decade. And so you have two moderates in particular, Susan Collins and Lisa Murkowski, who sometimes break with their party on some of the more far-reaching things that they push. And, you know, the difference is if there's 53 and they break, all it takes is one other defection, and that prevents Republicans from getting what they want, or maybe two if they have the vice presidency. So two additional defections. If they have 54 seats, that's just that much more margin for error on nominations and on anything they try on reconciliation, which will be the main vehicle for legislation early in the Trump administration.
We've been watching headlines drop on the name game here as Donald Trump moves to fill out his cabinet. We just got another from the Financial Times, and not a surprise, Donald Trump eyeing Doug Burgum as a new energy czar. I don't know if we're talking about running the energy department or not, but we could have more to come here. What are you seeing?
Well, according to the Financial Times reporting, the energy czar role would likely replace the climate czar or national climate advisor established by the Biden White House, according to the FT. Exactly.
Fascinating. This also comes alongside a headline from Politico here, Jonathan, that's hits closer to home in Congress where you spend your days. Senator Tim Scott, who of course was a presidential candidate, is now moving to launch a bid to take over as chair of the NRSC for the 2026 cycle. That might tell us the extent to which he would be, or not in this case, involved in a Trump administration. Why is he going here? It's a far cry from being president.
It is, but it's a pretty significant position within Congress. It's a strong stepping stone. You know, the current chair of the NRSC, Steve Daines, has gained a lot of clout based on Republicans' strong performance this year in Senate races. So it's a way to move up the ranks within leadership in Congress. If Tim Scott has run for president, that option is still open to him. But if he wants to become a Senate leader, this is a really good way to do it. You connect with fundraisers all across the country. You connect with candidates all across the country. You visit all their districts, their states. So it's a good way both to build your profile within Congress and nationally for whatever he wants to do down the line.
Could he, Jonathan, be both the chair of the NRSC and also still chair the Senate Banking Committee?
That I'm not sure of. I believe you can because the NRSC is more of a political position, but Republicans may have limits on what type of how many leadership positions you have to hold. So I would actually have to check on that to be sure, to be honest with you.
What are you hearing from leadership meetings that were held yesterday on both sides? Jonathan, they're both waiting for news, but also trying to position themselves for whatever the next session is going to bring. What are you hearing from leadership?
Yeah, I mean, the big question on leadership is actually among Senate Republicans, who's going to be leading this new majority, and that's going to all unfold next week. As you know, Mitch McConnell is stepping down as the Republican leader, and so it'll be the first time in almost 20 years Republicans are choosing a new leader there. And you've got John Thune and John Cornyn, two very veteran senators who are considered the favorites, but Rick Scott out of Florida is someone to keep an eye on. He's kind of considered more of a Trump-like figure, more close with Trump potentially, and given the momentum that Trump is going to have coming into the presidency, given the momentum behind the MAGA movement after the showing they had Tuesday night, it's worth keeping an eye on Scott in that race as well. The Republicans are going to vote, Senate Republicans are going to vote on Wednesday to pick their next leader.
Of course, we have questions about House leadership as well, which may depend on whether or not Republicans retain the majority. If they do, everyone in House leadership currently could keep their spot. But there is a question, Jonathan, about how difficult it might be to pull from the House for any positions in a Trump administration if it is a narrow majority they're looking at. Right now, it's 211, 199 Republicans to Democrats, 25 yet to be called. 218 makes a majority. If it's in that 218 and maybe just a few extra range, can Donald Trump really afford to take any one individual Republican out of the mix?
Yeah, I mean, it's a really big question. It might depend on the individual laws in that state. You know, some states fill their vacancies faster than others. So it's certainly something they're going to have to consider, and will probably depend on how much the president values that individual member and their insight. So I think it'll depend on the state and the district that they come from as well. If it's a competitive district, you might not want to remove an incumbent. If it's a really safe district that can get filled quickly, maybe you take that chance for a little while.
All All right, Bloomberg Government Congress reporter Jonathan Tamari, thank you so much. Now, as we discussed with Jonathan, obviously there is a Pennsylvania Senate race that has been called for Dave McCormick, but is likely to go to a recount. We still have two outstanding that have not been called, one being in Arizona, which hasn't been called at the presidential level, I would add, though Donald Trump obviously is leading it at this stage in the count, and it ultimately won't matter for electoral college purposes. But in the Senate race, it's actually a bit tighter than many people anticipated. Ruben Gallego, the Democratic candidate, only up right now by 1.5 percentage points on the Republican candidate, Carrie Lake, with 77% of the votes counted.
It'll be very interesting to see what the next drop from Maricopa County brings and whether this race is called over the weekend. We knew Arizona would take a long time, but this is one of the last two.
So let's go to an expert on Arizona politics now. Joining us is Samara Klar. She is professor of political science at the University of Arizona. She's also co-author of the book Partisan Hostility and American Democracy, Explaining Political Division. Samara, thanks for coming back to Bloomberg TV and radio. Last we spoke was in the wee hours in the aftermath of the election on Wednesday morning. When we look at this Senate race, this tight margin between Gallego and Lake, knowing Gallego was pretty consistently with a healthy lead on Lake in the polls, what are you thinking here? Is there a chance Lake pulls this out?
I mean, there's a chance. It hasn't been called. Gallego's maintained his lead throughout the count, and you know, I think we're now at 78%, 79% reporting. He's up by 1.5 points. Anything could happen. That's why it hasn't been called. They won't call it till they know for sure. You know, it looks as though, you know, he's still obviously outperforming Harris, who is more significantly behind Donald Trump. That, as you mentioned, hasn't been called either, but is sure to be called for Trump. Now, we knew there was a percentage of Trump voters who were going to be voting for Gallego. It looks as though that did happen. The question is, how many of those Trump voters stuck with that decision and decided to vote for Gallego? How many of them maybe decided to not vote in the Senate at all? But we won't know until this thing is all done.
Well, based on where we are in the count here, is there still a path for Carrie Lake to win?
For last I checked, it's about 1.5 points, and there's about 20% votes coming in. It's possible. If it weren't possible, they would have called it already. I think that it looks unlikely. I mean, it looks as though Gallego will most likely hold on to the lead, but we don't know. I mean, Arizona is a state where candidates win by incredibly tiny margins. I mean, in our House race right now, I believe Christian Engel is ahead of Siscomani by just a couple hundred votes. So this is the Arizona way. Every single ballot has to be counted before we know for sure.
That's the Arizona way. What about the Carrie Lake way, Samara? We all remember her failed gubernatorial bid in which she never actually accepted that she lost the race. How would we expect it to go down if indeed this is ultimately called for Gallego? Would the story necessarily end there based off of what we've experienced in the past?
Well, listen, we know that Carrie Lake did not accept that defeat in 2022 against Katie Hobbs. I think things are a little different now in that Trump has won, and he probably doesn't want to be part of the election is rigged narrative that doesn't really benefit him. And I think there probably is a lot less of an appetite for it among Republican voters in Arizona generally. I think the momentum towards this election denialism has certainly calmed a bit in Arizona. And Trump being the victor is kind of going to seal the deal on that. I don't think Trump wants to discuss rigged elections or fake elections. He's won. He's happy with it. And I don't think Carrie Lake's going to have a lot of support if she starts, sharing conspiracy theories about election denialism again.
There was a lot of reporting somewhere, and Bloomberg did quite a bit of reporting as well on the hardening of polling locations, the drone coverage, snipers on roofs, the extent to which Arizona went to create some confidence around the system here and also protect the vote from poll watchers or other bad actors potentially. How did Arizona do? Because there were no reports of trouble that I saw.
That's right. I mean, Arizona and the election officials here worked really overtime to try to ensure that there was absolutely no doubt that our elections were being conducted fairly, that everybody was going to feel secure. I was doing polling on Arizona where I asked voters, do you believe that elections in Arizona are safe and trustworthy? The overwhelming majority of Democrats believed they were. Republicans were split about 50-50. We had about half of Republicans saying, yes, I have confidence in our elections, half of Republicans saying no. Those without confidence in the elections were significantly more likely to vote for Donald Trump, as it happens, as it probably is in part due to some of the messaging he shared since 2020. But ultimately, we've heard of, no funny business going on with our elections, and hopefully, once this is all said and done, people will be able to move on.
Well, Samara, as we discussed with you the morning after the election, Arizona also had abortion on the ballot in this cycle. Abortion rights were protected at the same time that it looks like Donald Trump will have the state called for him at some point. And I wonder if we can treat Arizona as a microcosm for the way all of this played out on the national level, which is that abortion is not quite the mobilizing issue that Democrats were necessarily counting on, that maybe issues like the immigration issue, obviously hyper-relevant in a border state like Arizona, are much more significant.
Sure. Well, I'd say probably the most significant issue for voters in Arizona was the economy. They were repeatedly saying that that was the issue most important to them. Latino voters, non-Latino voters, men and women. The economy was really number one for voters. I don't know if we can necessarily say that having abortion on the ballot didn't help Harris. It may have actually helped Harris. We don't know this counterfactual world where abortion wasn't on the ballot. It's possible she may have done worse without it. But having abortion on the ballot certainly did allow pro-choice Republicans the option of supporting their preferred candidate, Donald Trump, and supporting reproductive rights. And we do know that, in the polling that I've been doing, over a third of Republicans were planning on voting in favor of this measure. So from that perspective, having it on the ballot kind of gives Trump an out. People can both vote for Republicans, can vote for Trump, and can support abortion separately.
Interesting. The so-called single voter when it comes to the issue of abortion is something we talked about a lot. How about the single issue voter when it comes to the border? To what extent did they play into this result in Arizona?
Yeah, the border was a huge issue in Arizona, and similarly to abortion, we had a big ballot measure that gives the Arizona state law enforcement the power to both arrest and deport immigrants who cross into Arizona unlawfully. So that's a really, really conservative border policy. There's a good chance that may never make it into law. It probably has quite a bit of a legal battle ahead of it. That ballot measure passed overwhelmingly. A significant portion of Democrats supported that. So we saw both Republicans voting in favor of abortion rights and Democrats voting in favor of this really punitive border policy. So you can see how voters here in Arizona were taking these issues pretty seriously and considering them separate from the presidential race.
Well, but when we consider the presidential race of the future, look ahead to 2028, what lesson needs to be learned for the Democratic Party that they need to do differently the next go around to be able to win the state of Arizona? Is it going to have to be a border hawk at the top of the ticket?
Well, I think we've got months, if not years, of speculation over, what did or did not go wrong for the Democrats or in this election. I will say that, Donald Trump currently looks like he's winning Arizona by about 4 percentage points. That would still put him at probably one of the lowest margins of victory ever for a Republican candidate in Arizona who still wins the state. He set that record already in 2016. So we're not seeing overwhelming support for Donald Trump in Arizona. We do have an electorate here that is, has significantly more Republicans than Democrats. Our registration numbers show about a 6 percentage point advantage for Republicans and about a third who identify as independents. So a 4 percentage point win for Trump in Arizona is still a fairly narrow margin, especially in a state with more Republicans than that. Now, obviously, what the Democrats were hoping for was a win. The fact of the matter is Democrats rarely win in presidential elections in Arizona. We did it once in the 90s. We did it once in 2020. But Arizonans, we typically vote for Republicans at the presidential race. And I don't know if we can take this win by Trump and say that the Democrats have lost Arizona. I think it's still in this long-term trend away from being a heavily Republican state, more toward a purple state.
Well, Professor, I know that your specialty covers more than just Arizona, and I wonder, just broadly speaking, about the results this week, save a few of the races that have yet to be called. Your thoughts on the comment from Bernie Sanders that the Democratic Party abandoned the working class and therefore the working class abandoned the Democratic Party. Nancy Pelosi is speaking to the New York Times today, condemning those remarks, saying Bernie Sanders has not won, and I have a great deal of respect for him, but says she does not respect him saying the Democratic Party has abandoned working class families. Was that part of the narrative?
Well, again, I think it's going to be months of speculation here. What did the Democrats do right or wrong? We know that there has been, a global trend since 2022 of incumbent parties losing their elections. The United States is now part of that. We know that we've had high levels of inflation since COVID. The Biden White House was going to have a hard time getting a second term, and Harris was seen as part of that administration. So, I don't know if I'm ready or anyone should be at this point to pinpoint one specific thing that went wrong. I think think Bernie Sanders is correct in suggesting that the economy was the #1 issue. And if the Democrats were to win, they really had to connect with voters on how they were going to improve their financial lives.
Always a great conversation with University of Arizona political science professor Samara Klar. Professor, thank you so much for the insights. It's great to have you with us. We'll have our panel together next, Kaylee, and a lot to talk about with Rick Davis and Jeannie Shanzano. There's quite a bit of news is broken here, including the news about Jack Smith.
Yep.
Looks like the 2 trials he was pursuing, the 2 cases against Donald Trump, are coming to an end.
At least that's what the Department of Justice would like, to continue abiding by their longstanding policy of not prosecuting U.S. Presidents while they're in office. We'll see if the judge cooperates with that, Joe, right. And just reminds us we still have much more news to go, even as we wrap up this election week here, live from New York on Balance of Power on Bloomberg TV and radio.
You were elected with 98.5% of the vote. Have you ever figured out who that person was that didn't vote for you? I mean, who is this person waiting for?
I've hunted all 5 of them down.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's the world's 2nd largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show, weeknights at 8 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute technology news whenever and wherever it happens. I'm Annabelle Drawlers in Taipei, and this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
The top names in business are on Bloomberg.
I've made so many mistakes in my investment career. One of them was I sold all my NVIDIA, probably in somewhere between 800 and 950. I think it's 1,300 on that stock now. I own none, and I own none the last 400 points. It was a big mistake.
Nobody covers business like Bloomberg. Context changes everything.
This is Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons alongside Joe Matthew, live from World Headquarters in New York as we close out our week of coverage from headquarters, Joe, and get ready to head back to Washington now that this week of the presidential election is about to wrap up, though we do still have a few outstanding questions. The balance of the House, certainly, the rest of the Senate majority, or the size of it, rather, as we wait for the news of two more Senate races, but also the architecture of the Trump cabinet. We're getting more ideas of who might actually end up in this administration that will take the helm, of course, in January.
Yeah, that's right. Robert Lighthizer, as we've been talking about, U.S. Trade Representative, could be reprising his role. He hasn't actually accepted that job, according to the Financial Times, but there have been a couple of others here, and they're familiar names, remembering who was on the campaign trail. Doug Burgum, also apparently being pursued as an energy czar. Kaylee, to your point, not an energy secretary. Think of John Kerry's job with the Biden administration, and it would be the Trump 2.0 version.
Well, yeah, I guess that's true, although it's going to look basically exactly the opposite. What was climate goes back perhaps to traditional oil and gas. So let's get into all of this now and welcome back our signature political panel. Rick Davis, partner at Stone Court Capital and Republican strategist, alongside Jeannie Shanzano, political science professor at Iona University and senior democracy fellow at the Center for the Study of the Presidency and Congress. So as we consider this cast of characters that we've already come to learn a bit more about, a lot of people that are not too surprising, and I know, Rick, in the last hour you suggested we won't have a lot of surprises necessarily when it comes to the Trump cabinet, but what is going to be the hardest decision for Donald Trump and those close to him, including his named chief of staff, Susie Wiles, to decide what role is it that might have the most debate and not take the longest for us to find out who's going to fill it?
Well, I think that you look at the major cabinet positions, right? State, Treasury, Defense, and you really wonder, those are the big building blocks of any administration, right? And the model in the past when Donald Trump was first elected in 2016 was to get, people who had a lot of gravitas and experience, and none of them were there at the end of that first term, right? They'd all been replaced at least once, in some cases multiple times, although Mnuchin at Treasury survived the entire time. So I think that he'll draw upon that experience. I think you'll find that being a creature of Wall Street to some degree, he'll be deferential to wanting someone who has that experience in the past, because it served him very well, in his first administration. But as State and Defense, he did not have a good track record. And I would think that he was going to get real loyalists in there rather than, people who might have, independently established themselves in those fields.
Some of these names being attached to various agencies, Linda McMahon at Commerce, makes you wonder how Elon Musk will interact with all of them. They'll have their own interests in their own agencies as he attempts to cut trillions from government spending. How's it going to work?
Yeah, and of course, he has the president's ear. Of course, Linda McMahon as well has a very close relationship with the president. But, I think Elon Musk is more likely to work through the president and with the president. And he is. It's not easy. We've seen this movie over and over again where somebody comes in and says, I'm going to cut the size and scope and spending of the federal government. Sure. Now, we haven't had an Elon Musk, and he has been incredibly successful in all aspects of his professional life. So that may make this different. But the reality is that attempt to decrease the size of this federal government is a fraught endeavor. And he is going to have to, let's not forget, work with the House to do that. He can't simply go in and cut the way he might at Twitter or X. He's going to have to work through the House. The House is likely to be Republican, but narrowly so. So it is going to be a lot different experience for somebody like Elon Musk than he has had in his other aspects of his professional life.
Well, I'm glad you said the phrase narrowly so, keeping in mind we don't know ultimately if Republicans will retain the majority in the House, but it hasn't been extremely easy for them to deal with that majority during this Congress over the last 2 years, Jeannie, because it has been so tight. We've seen multiple, even just rules, fail on the floor of the House chamber. chamber. And so I wonder, even if they are able to get to 218, if Mike Johnson is still going to have a really difficult job trying to get some of these what could be big pieces of fiscal policy legislation over the finish line.
He absolutely is. I mean, let's not forget what we lived through last time. It means one person, two people. You know, a Matt Gaetz who is upset at a speaker because of the ethics challenges he's facing and says, I'm going to blow up the House, right? It only takes one or two of them. So I still think that Mike Johnson, if he wins Speaker again, has the toughest job in Washington, D.C., trying to keep this caucus together because he has no room to maneuver.
So it's an easier job for Hakeem Jeffries then to play the insurgent role, is it
well,
not?
Possibly. I'm glad Jeannie brought up, though, the ousting of Speaker McCarthy is what she was alluding to. That was written into the conference rules. Any one member could bring forward a motion to vacate. If they keep the majority, Rick, they got to rewrite the rules, right? Or it's hard for Mike Johnson to continue to navigate this.
Yeah, I would say none of those rules apply any longer. Republican Party is a hierarchical party. The House is going to take their lead from Donald Trump, not from the Speaker. And Donald Trump, as we've seen, even out of office, was not bashful about telling the House of Representatives what to do. So we should not kid ourselves. There's going to be a lot of unity in the Republican caucus if we have the House, the Senate, and the presidency. And the calls will be made from the presidency, not from the leadership in either of those other two chambers. And I would be shocked if in the first 2 years of this administration, there are any real dissents within the Republican caucus in either one of those two chambers.
Wow.
Back to the Democratic autopsy. Nancy Pelosi sat down with the New York Times and did a full interview about her impressions of what went wrong. Joe Biden didn't get out early enough, and she thought there would be a, quote, open primary, unquote, something that a lot of Democrats were calling for in that process. Is she right about both?
She is right about both of those things. I don't think those are the only factors. There's a lot of other factors, but certainly had he gotten out earlier, had there been an open primary, and had you allowed the voters to choose and not force them to be looking at a 78-year-old man, and then his vice president, when he's incredibly unpopular, is hoisted on them, because literally, as we talked about the other day, she became Hubert Humphrey of the Democratic Party, and then nothing she did, but that's the reality. You can't win that way. So Nancy Pelosi is right about that, but there's other factors as well, including the fact that they cannot continue to try to operate as a party that is appealing to suburban, wealthy, educated people and talking about issues that are not about pocketbook. It's just not appealing.
Tend to forget that she was his vice president. That is what would happen when the president steps down, right? Should there have been some kind of shotgun primary to codify her status in the party?
Oh, I think that you could go all day long about all the great ideas that you coulda, shoulda, woulda done, including him not actually running for re-election. Well, that's which was his original promise to the American people when he got elected the first time. So, look, none of that matters anymore, right? The Democratic Party has an identity problem. They've been pursuing identity politics, for the last 20 years, and it's been successful for them by and large. That ended really practically in 2016. They ignored it in 20. COVID, no question, had some impact on the election then. But as of, Tuesday night, there's a new majority party in town, and it's the Republican Party. And if the Democrats want to win, they have to do what Jeannie was just saying, which is find a way to communicate with a broader band of voters, because they have shrunk that party. It's not about the candidates, it's about the party. They don't have a message for the American people that is a majority message.
So can they do that work in 2 years, Jeannie? Because the next time they get a chance to try to change the balance of Congress, it's not 2028, it's 2026.
Yeah, I mean, it's tough. It's going to be tough. I think politically the best thing that could happen to the Democrats now is that they do not take the House, that they allow the Republicans to own, as Rick's talking about, what they're going to do in Washington, D.C., and then they become a loyal opposition. If they, in fact, narrowly get that House, then they can be used to say anything we didn't pass, well, that was the Democrats in the House. So that's, I think, not a great political strategy for them. And then they have to figure out how to appeal to an American public that is saying, stop demographically stereotyping me. If I am a woman or a Latino, it doesn't mean that I automatically only care about one narrow issue like abortion or immigration. I care about my life, my family, and the economy and my future and my jobs. You've got to talk to people where you find them.
All right, Jeannie Shanzano and Rick Davis, our signature political panel, thank you so much for joining us on this Friday and for this entire election week. Now, as Jeannie's talking about the economy, obviously the stock market is not the economy, but the stock market's doing pretty dang well. We're at another record high on the S&P 500, encroaching on the 6,000 level. And Bloomberg's markets correspondent, Abigail Doolittle, is tracking it for us. Abigail, what a way to end a week.
What a way to end a week, indeed. We're looking at the best week for the S&P 500 going all the way back to November of last year. So basically a year that S&P 500 up the better part of 5%. The Russell 2000, incredible, up 7%, the best week going all the way back to 2021, the highest level since that. But we also have that Dow higher and the NASDAQ higher. In fact, right now, as I speak, taking a look at this board, the Russell 2000 up more than 8%. So these big gains on the Trump trade, the certainty around who the next president of the United States is, Donald Trump, investors really liking that. His economic policy that they are assuming will be put in place, tax cuts, protectionism. It's interesting, though, there are some parts that have fallen away. But one way of looking at the Trump trade and one way to say that this week is not new is DJT, Trump Media and Entertainment. It is up more than 140% from the September lows. At that point, VP Harris led him in the predicted odds pretty significantly. But from that low, the stock higher, that was and is really still the market's way of voting for Donald Trump back then and saying that they thought he would be the next president of the United States, and it was a correct vote.
Trump trade still turning away from emerging markets, China stocks. Abigail, this continues.
It does continue. It's really interesting because the NASDAQ Golden Dragon Index, that HXC, it's down nearly 5% today, so really bucking the trend of the gains that we're seeing. Now, this is interesting because I read one headline saying that the reason that China stocks were down in the Asian session and also this index is lower has to do with the idea that the stimulus folks wanted out of China is not going to happen now, that President Xi of China is going to hold off for when President-elect Trump is in office to offset the possibility of the 60% tariffs. Do we know that there's 60% tariffs? No, that's the beginning of the negotiation, but it is certainly a strong stance. And it's interesting to see that maybe it's already shaping what's happening over in China.
Abigail, thank you so much. Abigail Doolittle, Bloomberg markets correspondent, with us on Balance of Power as we connect the dots between this campaign and the markets. Fascinating headline, Kaylee, coming from Punchbowl here as we talk about the prospect for our relationship with China, the downturn in China stocks. This won't help. Jake Sherman at Punchbowl tweeting, top House Republicans are looking to strip China of its normal trade status with the U.S. That would be a massive development.
Yeah, it certainly would. According to Punchbowl's reporting, they would do this through legislation in the next term. And frankly, this is something we need to consider as to whether or not it could get through on a bipartisan basis, even if Republicans can't keep control of the House, knowing that being hawkish on China has bipartisan popularity in Washington. The China Select Committee, the ranking member of which is frequently on this program, is very much advocating for restraint in what they call, of course, a strategic competition. And this would be interesting to consider how tariff policy specifically would play into that. If you revoke the normal trade status, how does that counterplay with potentially 60% blanket tariffs on everything coming out of this
country?
It
aligns with reporting from the Financial Times, Robert Lighthizer, who's USTR in the first term in the trade war with China, is coming back, assuming he takes that role in a Trump 2.0. We'll have a lot more ahead on Balance of Power. Live from New York, this is Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile. and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
After each day, do you look at how they're doing each day, or do you look at them each week, and how much time do you give them before you say, you know, you're not doing so well?
I mean, we look all the time. So, you know, I have screens on my desk that, you know, staring at all day long. But it's not exactly like that. I think one of the things people don't fully appreciate in this model is you're really building businesses. So we look at every strategy as a business. So you have the long-short equity business, or macro business, commodities business, quantitative business. And you have business plans for that strategy. How do you become world-class in that strategy, which is, you know, multi-year, multi-decade, you know, undertaking. And you want to get better and better every year. And so then you go down to the team level. What team do you need to have this particular exposure? What is their edge? How are they going to get better year to year, month to month, right? And so then you go to the hiring of the team, the analysts, the infrastructure, the risk management, and you're constantly trying to improve the process and the people in each of those facets all the time. And so you're always looking at them on an absolute basis, how are they doing, and on a relative basis to other people in that strategy, and you're evaluating it, you know, every quarter, every year. But to answer your question, we usually look for a couple years of performance to make people decisions, unless something is really off.
The top names in business are on Bloomberg.
The notion that we would cut rates. Financial markets are wide open. Equities are at all-time high. Financing is available. Real estate prices are going up in every market. And yet we're stimulating. And we're stimulating fiscally. It is not clear that we need more rate cuts at this point. To the extent we accelerate the economy and have to go in the other direction, that would not be a good day.
Nobody covers business like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg.
In case you missed it, on Bloomberg Technology.
We don't view any of these rumors as particularly meritorious. We laid out a strategy. We reaffirmed that with our board of directors. And obviously, as we've taken these steps this quarter and restructuring and getting our costs where they need to be, we have the capacity to go on the journey that we've laid out.
Don't miss Bloomberg Technology live every weekday.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
This is Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons alongside Joe Matthew, broadcasting live from World Headquarters in New York for the last day this week. We'll be back in Washington next week. And you know who else is going to be back in Washington next week, Joe? Congress,
lawmakers.
Specifically the U.S. Senate, which has leadership elections that will start in earnest come next week.
We've got a specific focus on the leadership battle in the Senate, because now we do know that it will be led by Republicans, Kaylee. There will be a vote next week. This is going to be one of the big stories that we are talking about in what is currently a three-way race to replace Mitch McConnell. And we're We're joined now by Bloomberg Government Congress reporter Zach Cohen, who's got his eyes on this for us. He lives and breathes Capitol Hill, and there's a question, Zach, about whether the election of Donald Trump will effectively scramble that three-way race, bring in someone else like a Steve Daines. I know that there's been some reporting that he might not want to go in that direction, but when it comes down to the two Johns, Thune and Cornyn, add Rick Scott, how's this race shaping up?
Well, certainly Trump hasn't formally endorsed any candidates in this race. In fact, Senate Minority Whip John Thune, one of the frontrunners for this job, a Republican from South Dakota, has actually said a couple of times in the last couple of days that Trump should stay out of this contest, that it could actually backfire in a couple of ways if there are members of the Senate Republican Conference who say, I'm not a big fan of Trump weighing in on what is a secret ballot, very personal election. You have to remember that Senate Republicans are not just picking a majority leader, they're picking their top fundraiser, their chief tactician. Somebody's going to need to have their back on all the major legislative and political fights in the coming months and years. And so certainly Rick Scott, the Republican from Florida, who was just reelected on the same ballot as Trump, much closer to Trump than certainly Thune or Cornyn is, has been agitating for that endorsement for some time. He's told me he wants it and has been elevating endorsements from key Trumpian figures in hopes that that could sway a couple of senators to his side. But it has to be emphasized, this is a secret ballot election. This is not a speaker race. And so certainly there's less influence here than we've seen in the McCarthy or Mike Johnson fights.
Is there any potential really for a dark horse there then, Zach? Because obviously there's been a lot of buzz about Steve Daines, who's coming off a very successful cycle with not just the Senate majority attained, but more seats added than was understood to be likely. What role is he really going to play?
Yeah, Steve Daines, the Republican from Montana, who chaired the National Republican Senatorial Committee and I believe the top fundraiser for all Senate Republicans in the last 2 years in that position. And certainly Republicans coming in with probably 53 seats, assuming this call in Pennsylvania holds and the current leads for Democrats in Nevada and Arizona hold. 53 seats is certainly bigger than anything Democrats had during the Biden administration, and it gives them some leeway on things like the 2026 Senate races or on votes on really critical legislation going forward. Daines has said that he doesn't want to run for leader. There had been some speculation that Trump could push him into that race or that he could have a mandate basically for that job. But certainly I've seen some reporting that he is in favor of Thune instead for that role. And so someone could jump in at the last minute. Nothing is stopping them. There's no filing deadline. But Thune, Cornyn especially have been running for this job for months at this point. And a number of Republicans have already dedicated their support for one of those candidates or for Rick Scott. And so it's going to be harder for a dark horse to come in at this juncture.
Well, what does a post-McConnell world look like in the Senate? Are we going to see some deal making that that kind of waters down the authority of the leader in the upper chamber, as some have suggested? We saw what Kevin McCarthy experienced making a deal like that.
Yeah, I mean, some of that debate, some of that will be up for debate Tuesday night. Senate Republicans, basically as soon as they get back to Washington, are going to meet behind closed doors and talk with the candidates for leader about what changes, if any, that they would support that could potentially weaken the leadership position. There are certain proposals raised by Senator Mike Lee, a Republican from Utah. He chairs the steering committee, which is essentially a group of sort of hard right Republicans, similar to the Freedom Caucus in the House, that have been asking for things that would make it harder for the leader, for instance, to stop debate on a bill when they're fighting over amendments in order to move a must-pass vehicle forward, or maybe limiting the ability of the leader to name his allies to key committees after Lee and Scott lost their seats on the Commerce Committee when Scott ran against McConnell in 2022. And so the key question becomes, what concessions do people like Thune or Cornyn make to appease some of these folks who maybe on a second ballot, once Rick Scott doesn't have the support to go forward, assuming that is the case, where do those folks go, and what concessions do Thune and Cornyn make to try to get that support? Certainly there's a broad interest in trying to limit the power of the leader. It's something McConnell is the longest serving leader in American history of either Democrats or Republicans. And I think there's a lot of interest from committee chairs to rank and file to having more say in these legislative vehicles. And that's going to have a really critical impact on things like the Tax Cuts and Jobs Act renewal, the tax code overhaul from the Trump administration, on government funding, and all of that that's going to come up in the next 2 years.
All right, Bloomberg Government Congress reporter Zach Cohen, thank you so much. Now, as we consider Senator Mitch McConnell, who is about to see his long tenure in Senate leadership end, we, of course, heard from the man himself in the aftermath of the election results. Here is McConnell in his own words.
With regard
to the Senate. You guys know how long I've been around. I had really hoped I'd be able to hand over to my successor the majority. I've been the majority leader. I've been the minority leader. The majority is a lot better.
Joining us now is someone who used to work for Senator McConnell. He's now principal and co-leader of Washington National Tax Services as PricewaterhouseCoopers. Rohit Kumar is back with us on Bloomberg TV and radio, having served as Deputy Chief of Staff and Domestic Policy Director for McConnell. Rohit, thanks so much for being with us. I would love just your reflection on the legacy McConnell is leaving here after 18 years serving in this leadership position. He said, "I was hoping I would be able to hand things over in the majority," and that's exactly what he's getting.
Yeah, I mean, he's getting what he wished would happen, which was a Senate Republican majority. But it'll be interesting because, as Zach referenced in the prior segment, one of the big fights that's coming ahead of Congress in 2025 is this expiration of all the 2017 individual and pass-through tax provisions. And Senator McConnell actually had a fair bit of experience in dealing with these expirations in 2010, then again in 2012, after they expired yet a second time. It was Senator McConnell and then Vice President Biden who negotiated, a resolution to those fiscal cliffs. And so this sort of next time around, you're going to have a whole new set of actors. No one that was there last time will be there this time. At least they won't be in the room. President Biden will no longer be president. Senator McConnell will still be in the Senate and could be a sort of a sounding board, much in the way that former Speaker Pelosi has stayed in the House and I think served as a resource to Minority Leader Jeffries. But he won't be the one, presumably, in the room in the final negotiations, because that's the role for the new leader, whoever that ends up being.
So what's your thought on the leadership battle here? Will it be one of the three that we have been mentioning, Thune, Cornyn, Scott? Could that pool expand because of the election of Donald Trump? And no matter who gets this job, what will it mean for the culture of the upper chamber?
Yeah, so, I mean, it's always possible that someone else throws their hat into the ring, but it would be extraordinarily difficult for someone to do so at this stage in the equation. The vote is scheduled to happen next week. The three candidates that are running have been running for the bulk of the year, ever since Senator McConnell announced that he was not going to stand for leader again. And as Zach indicated in the prior segment, it's a secret ballot vote. So even if someone were to throw their hat in the ring, and even if they were to secure the endorsement of the president-elect, it's not a speaker vote. It's not done in public. You can promise that you're going to vote for whoever you think you need to promise you're going to vote for, but then at the in the end of the day, you get to cast your vote wherever you choose to. And I think that was part of the Senator Thune's sort of the rationale for his argument for why endorsements are not wise here, because you just never know if it's going to be outcome determinative, and you risk alienating. If your preferred candidate doesn't prevail, then you risk alienating whoever does prevail.
Well, of course, while this leadership election is going to get started next week, the new majority won't actually be seated with that new leader in place until January, when they'll have to start working on the very ambitious agenda outlined by President-elect Donald Trump. It's something, Rohit, that we spoke about with Senator Bill Hagerty of Tennessee last night on Balance of Power. This is what he told us, and we'll have you respond.
President Trump's overarching goal is to see a lot more economic growth here in this economy. You can count on another effort to undertake a massive deregulation thrust. By some measures, the cost of deregulation under the Biden administration has been more than $1 trillion. It's a compliance burden that is enormous. That's something that can be lifted on our businesses. It will have an impact in a positive way on the economy, and that can be undertaken without any cost.
And I wonder, Rohit, as we consider the costs here, just the way in which even deregulation, how quickly it would move through this incoming administration and Congress. Help us set realistic expectations here, if you would.
Yeah, so deregulation can happen sort of one of two ways. One's more sort of quicker than the other. To the extent that there are pending regulations that have not yet been finalized, then on day one of the new administration, and you would see this typically in a new administration, you get sort of a pencils down order across the board. Whatever you're working on, stop. Let us take a moment, evaluate where things stand, if we want to pursue this regulation, or if we want to go a different direction, or we don't want to do it. In some cases, and maybe we don't want to do this at all. We don't think there's any version of this that's a good idea. So that's not a lifting of a current burden, but to the extent that there's a proposed regulation out there and the private sector was preparing to comply with some version of that regulation and altering its behavior in anticipation of that rule being finalized, that has sort of an immediate effect on behavior. The other is if there is a regulation that's already been finalized, and if it was finalized long enough ago that it's not subject to congressional review, then the way to undo it is, frankly, you have to issue a new regulation, which means you have to go, propose a new rule, go through a notice and comment period, and that can take, several months, maybe even, up to a year or longer, depending on the complexity of the rule, how quickly you get a new proposal out, how many comments you get, things like that. And then for rules that were finalized within 60 legislative days, and legislative days is an important concept here, within 60 legislative days of the end of the session, those rules in theory are eligible for review by the new Congress using sort of what's called the Congressional Review Act, which is a statute that dates back to the mid-90s, was used probably most expansively in the first Trump administration, again, coming off a Democratic administration with a bunch of rules that Republicans were not fans of. And I think they overturned 16 rules using the Congressional Review Act in the early part of 2017. So you would anticipate some of the more recent rules, the ones that were finalized, in the latter half of 2024, perhaps being eligible for deregulatory move, but by an act of Congress. It does require the president to sign the disapproval resolution into law, which is why it would not have been effective if, President Biden had been reelected or President Harris, if Vice President Harris had become President Harris. But in a change in administration, it opens up the aperture for that form of deregulatory movement as well.
Right. You mentioned the Trump-era tax cuts. Our audience should know you helped to lead PwC's National Tax Office. And as we focus our conversation here on the Senate, if the House does turn Democratic, I realize the odds are better for a Republican-led House. What would it mean for the effort to extend or make permanent the tax cuts?
So, I mean, clearly it would be a different negotiation if it's divided government. Yeah. And my anticipation is that that negotiation drags into the, the wee hours of 2025, somewhere between Thanksgiving and the end of the calendar year is when that negotiation probably takes off in earnest, not unlike the 2012 fiscal cliff negotiations, which took off really in earnestness, like the week of Christmas going into the new year. And in that scenario, you would anticipate some pressure on the headline corporate rate, and you would expect some pressure on the top marginal rate, returning from 37 to 39.6, and then perhaps a debate about at what income level that upper bracket, that higher upper top bracket would kick in. And then in addition to that, you would anticipate House Democrats to continue to pursue their preferred version of the child tax credit, a pretty dramatic expansion of the child tax credit, if not the 2021 version in the American Rescue Plan, but something approaching that. But, it'll be interesting to see House Democrats would have to just sort of figure out what to prioritize. Is it prioritizing raising taxes on corporations and upper income individuals? Is it, prioritizing tax relief for lower and middle income families? With some leverage, but not, without the Senate, without the White House, you don't have an unlimited amount of leverage. So it'll be interesting to see what do House Democrats choose if they were to find themselves in the majority. What would they prioritize in a negotiation, and what would they, say? Look, if we had total control, we would do these things, but with only the House, we have to focus our political capital on the places where it matters most.
We're out of time, but is John Thune in the lead to replace Mitch McConnell?
That is the conventional wisdom, but these are notoriously tricky things to predict because it is a secret ballot. And I think it was Senator Lamar Alexander, who's no longer in the Senate, said at one point he wrote, like something like 25 thank you notes for 24 votes. So it does happen sometimes that people say they're going to do something, but in the, the secret ballot, they do something perhaps else.
Let's compare notes once we know. Rohit Kumar, co-leader of PwC's National Tax Office. Thank you so much for being with us here on the Friday edition of Balance of Power. I'm Joe Matthew alongside Kaylee Lyons. We learned a couple things since the start of this program.
Yeah, and of course we have more coming up later today. We'll be back for the late edition of Balance of Power at 5 p.m. Eastern Time as we close out our election week here live in New York City. And Bloomberg Business Week is straight ahead after this, right here on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everyone. Live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week. I'm Tim Stenevec. Carol Masser is off today. We got with us Bloomberg News Deputy Team Leader and Senior Equities Reporter Jess Menton. She joins us in the Business Week studio. Jess, good afternoon. Quite a few superlatives with the trade today and this week.
There are, looking at the S&P 500 as well as the NASDAQ 100, actually both on pace for their best weeks of the year. And of course, as we know, the post-election day rally that we did see on Wednesday was the best post-election day rally actually that we've ever seen here. So obviously, stocks still taking a bit, even though they're just marginally higher heading into the close here.
All right, we're going to have much more on the markets and the trade in just a few minutes when we hear from Charlie. Still ahead, though, we are covering all angles of the new administration, how it could affect the Fed, the courts, the C-suite, and more. Also, what we're learning about the new administration's economic agenda. Names already emerging to fill key positions, Jess, in trade and in commerce.
And of course, Trump is set to move courts further right, deepening his judicial clout, the opportunity he has with the judiciary, Tim.
All that and more coming up over the next hour right here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here is Charlie.
All right, I thank you very much, Tim. And we are looking at an S&P right now above 6,000. Got to keep it locked into Bloomberg to see if it closes above or below that threshold. But right now, 6,007 is where the S&P stands, up 34. A gain right now of just about 0.6%. A record there. The Dow also at a record, up another 321 points to 44,044. That is a gain right now of just about 0.7%, while the NASDAQ Composite Index up another 36, also at a record, up by about 0.2%. 10-year 4.29% with a 2-year 4.24%. Spot gold pushing lower today, declining 0.8%, 26.85 the ounce, and a big retreat for West Texas Intermediate crude down 2.9%, 70.27 for a barrel of WTI. So bottom line here, stocks surging, the Dow, the S&P, NASDAQ, all very much in the green. And worth pointing out that year to date, the S&P 500 index is now up by 25.9%. Airbnb, booking holdings, and Expedia all issuing stronger than expected outlooks, suggesting growth is not slowing as fast as thought. Airbnb, however, trading lower, down 7.7% after earnings. Booking up 0.4%. Expedia up now by just about, pushing higher now by just about 5%. An appeals court has ruled that partnership between American Airlines and JetBlue Airways did violate U.S. antitrust law, affirming a lower court decision to end the alliance. Both airlines are higher. American up 1.6%, JetBlue up by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, we've had close to 24 hours to process almost everything we heard from Fed Chair Jay Powell at yesterday's press conference. That, plus the election of Donald Trump, have led economists and strategists across Wall Street to dial back their expectations for U.S. interest rate cuts next year. We got with us Michael McKee. He's Bloomberg News International Economics and Policy Correspondent. He joins us here in the Bloomberg Business Week studio. Mike, you're back from D.C. I still think a big headline from yesterday's press conference was less about the path of rates and more that Jay Powell is ready to defend the U.S. Central Bank from political pressure following the re-election of Donald Trump. Just give us a little lesson here in what power the president has over the Federal Reserve.
Well, I think Jay Powell summed it up when he said not legally possible for the president to demote or fire any of the governors or the vice chair or chair. The way the law reads, they can be removed only for cause, and being a different opinion on interest rates is not cause. So it would end up in court. It would be a big battle. And I think probably that what Powell was trying to do, and you notice he addressed specific questions about asking whether he would be, resign if he were asked, and whether the president could demote the vice chairs. And he gave very succinct, short answers to that. And my guess is he was trying to draw a bit of a line in the sand so that if it gets into Donald Trump's mind that he wants to get rid of these people because he doesn't like what they're doing, his aides will come to him and say, you know, we're not sure you have the power. We can take it to court. We can see what'll happen, but this won't look good. It'll be just a big fight, and you may not win it. And maybe that keeps the pressure off. But what will really keep the pressure off is if the Fed keeps cutting interest rates, because then they're doing what he wants in the first place. And so at this point, there doesn't seem to be a reason other than Trump has said in the past that he'd like to get rid of Powell, but doesn't seem to be a reason now to do it.
So give us kind of a reminder and a refresher of what it was like during Trump's first term, especially because he did appoint, when it comes to Powell, as his current chair, as obviously overseeing the Federal Reserve.
Well, interest rates were going up in the first term because we were coming out of the great financial crisis, and took them a long time, but it was finally, rates were finally moving up, and Donald Trump didn't like that, and he thought the Fed should be cutting rates to zero, and so he tweeted a lot about Jay Powell, and that Jay Powell was, I think, the enemy of the people, which kind of was annoying because I thought we, the press, were the enemies of the people. And he said something about who's worse, Putin or Powell. So it was a kind of an ugly but standard Trump way of operating, but he didn't act on any of it.
Well, we know that Powell's term is up in 2026. Is it too early for us to start thinking about the type of person that Trump would want to see as Fed chair?
Well, I don't think it's too early to think about the type of person, because he's obviously going to want somebody who is subservient to him. And I can say this because I'm not insulting any particular person at the moment, but Trump doesn't want anything but loyalists in his positions. He's said that. So you can try to think of people who have some economic expertise or leadership expertise, because remind you, Jay Powell's a lawyer, not an economist, and but who would be much more willing to listen to the president's advice.
Mm-hmm. But I'm wondering if there are certain guardrails is a weird term, but would the market push back on a Fed chair that seems to be doing something that is not in the best interest of the dual mandate?
Well, even if you had somebody who was nominated and the market thought that they weren't qualified, you would definitely see a pushback there. And
would you'd see it? Where would you see it? In the 10-year? Where do you think you'd see it?
Well, you would see it in the bond market probably. You might see it in the currency markets, less so equities. But we have seen big equity moves when the market is really upset. I think back to 2008 when the TARP bill was turned down first. So you could see that kind of thing happen. But it'll depend on how things are going otherwise at the time as well. And that's why it's kind of hard to say, because we don't know what the economy will look like then. We don't know what Trump will look like then, whether he'll have popularity or no popularity, whether his proposals would have worked or not worked. So it's really kind of hard to say, Trump may not make a bad choice because he knows that it would be a problem. It may just be somebody that, you know, the economics world doesn't like, but they can't say he or she is not qualified.
Also kind of the conundrum of where we would see the Fed funds rate a year from now, because there's been, as you know, a number of, if you think about big firms that are readjusting their forecast for where rates could be next year. Say Goldman Sachs for their 2025 Fed call, they see a slower pace of cuts. TD actually changed their forecast for next year for a pause in the first half. I know Nomura was thinking potentially we might see even just one cut next year. Where do you kind of view the direction when you think about the potential policy outlook, but then still a lot of things, and we don't really know what's going to happen with the House and what could happen overall with Congress and what could be passed?
Well, I would put it this way. Those financial firms, economists and strategists are paid to put out forecasts, so they have to put out a forecast. I don't. And if they weren't paid and told to do it, they wouldn't. Right now, we don't have visibility about the December Fed meeting because we don't know what's going to come up with the economic data between now and then. There's going to be 2 CPI reports, a PCE report, and we get a jobs report. And you saw September jobs huge. We saw October jobs terrible. What is December going to tell us? And if December were to come back really strong in terms of jobs, and we don't get any more progress on inflation, it's always possible the Fed pauses in December. And then once you get into next year, we have no idea because we don't know, first of all, what exactly Trump's policies are going to be. We know his slogans, but we don't know his details. We don't know how fast he can implement them. Some of them he can do almost immediately. Some will take longer. And you don't know what the impact on the economy is going to be from that. So it's almost impossible to predict what the Fed's reaction would be.
So take us back to yesterday and help us look forward, and also help us understand how the path maybe changed with the election of Trump. As I said in the beginning, it was inflation, a recent inflation report, but also the election of Donald Trump that have led, well, mostly the election of Donald Trump that have led economists to think differently about their expectations for rate cuts. But why is that specifically? Is it because of what happened in the bond market?
It's the bond market that was driving the conversation because the bond market sees Trump policies as inflationary and bad for the economy. And by the book, by theory, they are. Tariffs just raise the price level for domestic customers. Americans will, quote unquote, pay that tax. And if the president then cuts taxes in other areas, Social Security or tips or whatever, that's just making up for money that you're going to, it's coming in one pocket and going out the other. So it's really not going to do anything for people, and that could slow the economy. The deportations, obviously, people have talked about the size of the labor force and the disruption that could pose certainly to a lot of industries. I mean, you look at the meatpacking industry in Iowa, and it would devastate it if they go in and round up all those people and send them overseas. So, the theory tells you that this is not going to be good, but nothing's been put into practice and we don't have details yet. So that's why it's really hard for any of these forecasts to be taken seriously, other than we know it's going to be different.
Different, I think, is a good word to end on. Michael McKee, international economics and policy correspondent, joining us here in the Bloomberg Business Week studio. Well, for more on the second Trump administration, we bring in Joe Matthew. He's the co-host of Bloomberg Balance of Power on Bloomberg TV and radio. Joe, on Thursday, Trump named campaign manager Susie Wiles as his White House chief of staff. She's a longtime player in Republican politics. You can go back to the Reagan administration, his first presidential campaign. She worked for many years in Florida before she worked for Trump. She's part of the old guard, but also worked for Trump in 2016. How should we look at her selection?
Well, first of all, it's a very important one. I mean, this is a glass ceiling that's breaking. This is the first time a woman has ever been chief of staff at the White House, which is something that Republicans, I think, feel like more of us should be talking about, and it is a big deal. Look, she managed to do something. She pulled off the most remarkable political comeback, as you keep hearing, in modern American history, as his campaign manager. She and Chris LaCivita were the architects of this campaign. Against all the odds, love him or hate him, agree with him or not, it was a remarkable political achievement. And so frequently you'll see the campaign manager go straight into the White House to be the chief of staff. And this is known as the most loyal and most trusted handler that Donald Trump has. He actually pulled her up on the stage. I don't know if you watched his acceptance speech in West Palm Beach the other night, and she refused to speak. She was literally without words. As he said, something I've never witnessed before. But she was standing right next to Donald Trump when he walked out, stood next to him during the speech, and is a big reason why he's going to be the next president.
Well, as you know, the Democrats have insisted that they still have a path to a House majority, but it's so close right now. Walk us through the dynamics and what we know so far.
The most important dynamic is that this could actually take until next week. You know, we knew it was going to be a long time for the House to be called, and it's about something called California. 52 seats, the biggest delegation on the map, and they just do things differently there. It takes a really long time to process, to count, and to transport the votes in this case. There is still a path for Democrats. It's a thin one. It's still possible. It's really, frankly, too close to call, like so many things were going into this campaign, but odds are on a Republican-led House, which would mean Donald Trump will have free reign.
But doesn't that also mean that it could actually be better news for Democrats for 2026, because then they can come back and say, hey, if there's anything that has gone wrong in these last couple of years, you have nobody to blame but Republicans. There's no obstructionist, Democratic majority in the House.
There were a couple of things there. Number one, it is easier to be the insurgent minority. It's just easier job for Hakeem Jeffries to be the party of no. Nancy Pelosi specialized in it when Democrats were in the minority. So yes, that might well be. But you're pointing to the midterms, and that is everything here.
Yes, we're talking about the midterms.
Not only the midterms. By the way, that starts right now. That campaign is already underway. And yes, traditionally we would see a swing.
Joe.
By the way, 2028, I'll keep extending the game here a little bit. The map for Democrats in the Senate is much more favorable. And so you could see these in the next 2 to 4 years, which would not be unusual, go in that direction. What would have been unusual, and the first time in over 100 years it happened, is if both House and Senate switched opposite parties on Tuesday night, as many predicted, and that is not what we have.
So what do you think would be, when you're specifically looking at U.S. leadership on the world stage, what does that look like under a second term under Trump?
Well, boy, that's a big question. You know, it's like Robert Lighthizer, you might have seen the Financial Times reporting, would be U.S. trade representative. It's still coming to shape here. Marco Rubio is being floated for Secretary of State. Imagine that. What would they do with his Senate seat? That would be a really interesting part of the story from some of the things that we're hearing. But look, this is not Donald Trump from 2016. He's got his people. They've already started vetting them without the use of the FBI, which I find fascinating.
Talk about that a little bit.
Private security firm to do this.
Why?
They don't trust the FBI, and nobody wanted to do an official transition operation because supposedly Donald Trump is superstitious, and he didn't want to have the conversation about who would be picked until he won.
But is it okay to use a private security firm rather than the FBI?
We're going to find out. It's it's different because these are not necessarily people who are going to go into positions that need to be confirmed. Think of Elon Musk. They'll be in the fringes or kind of in the orbit, have Donald Trump's ear, but won't necessarily be in the West Wing. So you don't need to have necessarily FBI vetting or a confirmation to worry about.
Speaking of Elon Musk, Axios reporting a little earlier that he was in the room.
How about that?
When the president-elect made a call, had a call with Volodymyr Zelensky of Ukraine. How do you read into something like that?
That's remarkable to me, to think that he was on the call with the president of Ukraine, knowing that, you know, Donald Trump on the phone with Volodymyr Zelensky is kind of news as it is. Remembering this was the perfect phone call. This is how we got to one of his impeachments. They're back together again. Zelensky says the call went well. Why was Elon on the phone? Was it about Starlink or was it about more than that? Because it really raises new questions about the extent to which he will have influence and power in this White House.
When it comes to the types of policy agendas that they want to push through, depending on what happens, obviously, with Congress, what do you think is the first agenda? What gets passed first, potentially?
Well, boy, that's a good question. Look, you remember his first day in the first administration, it was all about executive orders. And I suspect we're going to see the Sharpie out, and he's going to do some stuff in the Oval Office the minute he gets into the White House. Think drill, baby, drill, some of the other executive actions that he's talking about, maybe tariffs. But it's going to be all about the Trump tax cuts, 2017 tax cuts, and all of the other promises that came from it. This is where you're supposed to ask me about salt now that I'm in New York. That's going to be
are you getting taxed
big
more
ball
by
that starts rolling. Yeah, well, I'll tell you. And then, of course, funding the government, guys. There's a lame duck session that still has to happen. The government runs out of money basically on Christmas Eve. And when lawmakers come back, they got to figure this out again.
He did make a lot of campaign promises about taxes, including repealing the salt element of that, which he put into place in the Tax Cuts and Jobs Act. Does he pull it off? Is he able to come through on these promises?
Well, I think it's a question of how many. You know, extending the Trump tax cuts was already a steep climb. He's got a lot of people working on that. You start adding no tax on tips, on overtime, on Social Security, and the rest that I'm not even thinking. That makes that a lot more difficult because it's more expensive, and we still don't know how he pays for them.
15 seconds on the FT reporting that Doug Burgum could be an energy czar.
Energy czar. Not energy secretary.
Energy czar.
This would be basically the role that John Kerry has now in the White House. Flip it from the complete opposite political spectrum, and that's what Burgum would be doing.
Joe Matthew, it's been great having you in New York City.
My great pleasure.
Really appreciate you joining
Cheers.
us. Joe Matthews, the co-host of Bloomberg Balance of Power on Bloomberg TV and radio. Coming up next, we're continuing our coverage, this time talking about the U.S. judiciary. That's coming up next on Bloomberg Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Couple of developing stories at this hour. New York Governor Kathy Hochul said to be seeking to revive the New York City congestion pricing plan with a lower toll. That according to Politico. That story right now on the Bloomberg Professional Service. Also, Jay Clayton, the former head of the SEC during Donald Trump's presidency, said to be in talks for potential roles in a Trump term. That according to Reuters. We're looking at records on the U.S. stock market. The Dow, the S&P, NASDAQ, all advancing. S&P right now up 34 at 6,007, a gain now of 0.6%. The Dow above 44,000, 44,088 right now, up 358, a gain of 0.8%. NASDAQ up 35, a gain of 0.2%. So again, records for the Dow, the S&P, and NASDAQ. The Russell 2000 index, by the way, up 0.5%. 10-year 4.30%, the 2-year 4.24%, gold down 0.9%, 26.83 the ounce, and West Texas Intermediate crude oil down 2.8%, 70.32 a barrel. President-elect Donald Trump says he does not plan to be selling shares of Truth Social. He put out a statement this morning responding to people who have set off fake rumors or statements about a sale, saying, quote, they should be immediately investigated by the appropriate authorities. DJT shares, they're up now by 15.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Really do appreciate it. Well, Donald Trump rapidly filled a swath of vacancies in the U.S. judiciary in his first term as president, dramatically reshaping the federal bench with right-leaning judges. Now he's got a chance to cement his influence, particularly over the appeals courts that rule on some of the most important and divisive issues in American society. We got with us Greg Storr, Bloomberg News Supreme Court reporter. He joins us from Washington, D.C. Greg, I want to start big picture here with you because so much of our focus, so much of my focus over the last few months has been on the executive branch, who will win control there, and then, of course, on what happens in Congress, what happens in the House and the Senate, the balance of power in the House and the Senate. Why should we be particularly focused, though, on the judiciary?
Well, for starters, Donald Trump and his first administration made it such a priority and made such a huge imprint there. We talk a lot about the 3 Supreme Court justices, but he also got confirmed upwards of 200 federal appeals court and district court judges. And those judges handle the vast majority of cases. Most of them don't get up to the federal appeals court level. And he had the effect of shifting a number of appeals courts so that they were controlled by Republican nominees. And going forward, he may not have quite as many vacancies to deal with, but he's also got tremendous ability to fill dozens of appeals court vacancies, many more federal district court vacancies, and they're going to be deciding all these cases challenging his policies and other disputes.
What are among some of the far-reaching issues that are going to be most prominent here and key for people when you think about financial regulation as well as abortion?
Yeah, so there's almost so much we could spend a whole hour talking about them. The president has obviously talked a lot about immigration, mass deportations. That's going to be a challenge. He's talked about a broad tariff, an across-the-board tariff of 10 to 20% on all goods coming into the country. That will certainly get challenged. A slew of administrative regulations, deregulatory steps involving energy, the environment, all those are going to be challenged. And to the extent Donald Trump is able to shift the balance of the lower courts, it gives opponents of those policies fewer good places to go to lodge their challenges. So back in the first Trump administration, liberals and Democrats like to go to the Ninth Circuit, which is based in San Francisco, the Second Circuit based in New York. Right now, those courts are slightly liberal in leanings, but not by a whole lot. And so if Donald Trump can shift those even more, it will make it just that much harder for opponents to challenge his policies.
Greg, what does it look like in terms of the bench for these potential appointees here? I mean, I think about something like the Federalist Society, which obviously comes up a lot every few years when there's a vacancy on the Supreme Court. But I'm wondering if that's where, on the lower levels, these judges are formed as well.
It certainly are, and Donald Trump has also, built up a bench for himself. So An estimate from Russell Wheeler at the Brookings Institution is that there may be as many as 60 federal appeals court vacancies, or at least possible vacancies. And Donald Trump appointed some 170 judges at the district, the lower court level, his first time around. Well, those 170 judges are going to be prime candidates to be elevated to those appeals court seats. So he's got sort of an established bench of people whose records can be judged and potentially nominated for a new position. And as you mentioned, the Federalist Society is still out there as a network for younger people who might be candidates for those district court vacancies.
Is there sort of a liberal counterpart to the Federalist Society?
There is. It's called the American Constitution Society. I think most folks would say it is not nearly as influential as the Federalist Society has been. Certainly Joe Biden relied on that to some degree in formulating his nominations to the courts. The Federalist Society has been at this for decades and has proven to be an incredibly powerful force, probably more so than the liberal groups.
I have to ask about the Supreme Court, because we know that during Trump's administration, he had 3 key conservative judges that he put on the bench. When you think about Neil Gorsuch, Brett Kavanaugh, obviously Amy Coney Barrett, when it comes to retirement talk surrounding Thomas, maybe even Alito, where do we stand on this, and what could this potentially shape when you already had 3 conservative judges put on this court?
Yeah, there will be a lot of attention on those two. So Clarence Thomas is 76, Sam Alito is 74, anchors of the conservative wing. They've both been on the court for decades at this point. And, with a Republican-controlled Senate, it is a prime opportunity for them to retire if they want to, and be certain or pretty darn confident that somebody like-minded will take their seat. If so, that just extends this conservative majority farther into the future, means that for another 20, 30 years, that seat is going to be held by a conservative. And then there's always the possibility of something unexpected. I'd be very surprised if a Democratic appointee voluntarily retires while Donald Trump is president. But, things happen, and this 6-3 conservative majority could theoretically become an even stronger conservative majority.
Is that already being talked about, given the Trump's victory this week?
Certainly the potential retirements are being talked about a lot. A man by the name of Mike Davis, who's been a leader in Republican judicial nominees and is close to Donald Trump, put out a tweet or posted on social media this week that there's a prospect that Sam Alito will retire. That was speculative, but that is certainly something people are going to be watching very, very closely.
Don't worry, Greg. I still call them tweets, too, so...
So do I, actually.
Post, tweet, we know what it is. Our thanks to Greg Storr.
Yeah,
thank you so much, Greg. Appreciate you joining us on this. That's Bloomberg News Supreme Court reporter Greg Storr joining us from Washington, D.C. Well, from Washington, D.C. to New York, we go. It's Donald Trump's home state, and no, he didn't win it, but for him it did shift right, helping him potentially win the American popular vote. Todd Gillespie is a Bloomberg News finance reporter. He joins us here in the Bloomberg Business Week studio. So 48 hours later, a lot of number crunching. We look closely at what happened in New York, and it turns out that more New Yorkers went for Trump than they have in the past 2 elections.
Absolutely, Tim. Yeah, I mean, Kamala Harris won the lowest number of votes by a Democrat since Al Gore in the state by, in 2000, right? So we're talking 24 years later. And, my colleagues and I, we interviewed people all across the city on election night, the day running up to it, the days, after it. And really, we're getting the sense, people on the street, bodega owners, NYU undergraduates that I interviewed, crowded in dive bars in the East Village on election night, wearing MAGA hats, unafraid really now to put their name to a story. I had 24-year-olds proudly telling me that they're voting for Trump, that they'd been kicked out of parties before, but now, they really do feel somewhat emboldened now. And, all of these issues that are coming to the voters now are often just the same issues that we see everywhere. These are economic issues, these are pocketbook issues, these are questions about inflation, about the economy, and also just about the influx of migration in the city as well, which I think a lot of the times people will relegate given the diversity of the city, but actually, this impacts, or is perceived to impact, a lot of people in different ways.
When you're looking at New York State, or even just within New York City and the boroughs, what districts particularly flip more dramatically than you would have seen in the prior election?
Totally. I mean, we saw every county in New York City swung towards Trump versus 2020. In fact, every county in New York State flipped towards Donald Trump, swung towards Donald Trump, apart from one small upstate county, which went slightly more to the Democrats this time around. Kings County, Brooklyn, where I'm from, or where I live at least, I'm not where I'm from, you can probably hear that. But I was going to say, you have a Londoner on Bloomberg Radio talking about New York. I am a fraud, Tim. Yeah, I'm sorry. But, I moved to Brooklyn. That county swung pretty strongly towards the Republicans. The Bronx, even more so, Queens more than Brooklyn as well. So, we've seen this, and even in bright blue Manhattan as well, we've seen the same thing happen.
Can you attribute it in the sense of, yes, there's more enthusiasm in terms of anecdotally you speaking to folks about President-elect Trump, but also I wonder if there's a lack of enthusiasm for Kamala Harris. And you can look at the vote tally right now in the popular vote, and Democrats just didn't show up.
Totally, yeah. I mean, New York State as a whole, turnout was down by about 4%, I think, this cycle compared to the last one. So we are seeing, a lot of this could just be down to a lot of apathy, right? We also have a lot of very strong progressives in New York who maybe saw Harris as too moderate, right? Over issues like, Israel, Palestine, over economic issues that they perceive, not really being fully addressed by, the mainstream Democratic Party.
There's been a lot of debate as to why more Democrats didn't show up. Just anecdotally, in your reporting, what are you hearing as to why that happened?
Yeah, I mean, people I know, and in fact, I'm 27, a lot of people in my social circles in Brooklyn are very progressive folks. I mean, I've had two people I know didn't vote for Harris. They went and voted down ballot, but they just left it blank at the top for president because they disagreed with her on her stance on the Middle East right now. There are all sorts of different more progressive takes on this. We're also seeing, I think, just a greater social acceptance even in New York that Trump is just someone who actually maybe just gets it a bit more, and that the Democratic Party, the central Democratic Party, is just so out of touch nowadays.
So we only have 30 seconds left, Todd, but help us understand if we're going to see if this is a permanent shift, right, for the city and the state, or if this is something more based on Trump and Harris.
I mean, that's really hard to say, right? I mean, we've seen, I think what's the sense that I get is that you have a lot of issues in the city, right, that aren't being addressed as well by the city, by the mayor, and I think a lot of people are projecting this onto a national level. So there are a lot of local dynamics here which are hard to see how they'll play out in the next election cycle.
Todd Gillespie, Bloomberg News finance reporter, also Brooklynite, as we learned today, joining us here in the Bloomberg Business Week studio. Coming up next, we're talking about what CFOs are doing ahead of the Trump administration.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. It is an up day, a record day for the Dow, the S&P, NASDAQ. Stocks right now, best level of the session. We've got the S&P above 6,000 at 6,011, a gain now of 38 points, up by about 0.6%. Dow Industrials up 406 now to 44,135. That is a gain of 0.9%. NASDAQ also advancing up 46, a gain there of 0.2%. The Russell 2000 index of small cap shares up by 0.7%. The 10-year 4.30%, with the 2-year 4.24%. Gold, though, tumbling $20 the ounce, 26.86, down 0.8%. And a retreat for West Texas Intermediate crude down 2.6%, 70.44 for a barrel of WTI. CNH Industrial, one of the world's biggest farm machinery makers, plans to cut production further as dealer inventories remain too high amid a slumping farm economy. It owns brands including Case IH and New Holland. Shares right now, they are down by 9.1%. And Paramount Global, the parent of CBS, MTV, and its namesake Hollywood movie studio, reported third-quarter sales that missed analyst estimates. Paramount down now by 4.4%. And New York Governor Kathy Hochul seeking to revive the New York City congestion pricing plan with a lower toll, that according to Politico. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, do appreciate that. Thank you so much. Well, the Associated Press reporting this afternoon that the shoe company Steve Madden is set to cut imports from China by as much as 45%. This as a result of this week's election of Donald Trump. The AP reporting that Steve Madden has been building a factory network in Cambodia, Vietnam, Mexico, and Brazil. So those jobs not necessarily coming to the U.S., but certainly the supply chain being changed. I would imagine that C-suites all over the U.S. are scrambling right now to figure out what they're going to do to prepare for the next Trump administration. And that's why we've got Nina Trentman with us. We know she's all over this. She's Bloomberg News senior editor who writes the Bloomberg CFO Briefing newsletter. You can subscribe to it by going to bloomberg.com/CFO Briefing. She joins us here in the Bloomberg Business Week studio. We're also joined by Mandy Fields. She's CFO at Elf Beauty. She joins us from Oakland, California. Nina, why was Mandy a good person to talk to this week after the victory by Donald Trump?
Yeah, thanks for having me again, and thanks, Mandy, for joining. I think, well, of course, we are looking for companies who can tell us how this will influence their planning, strategy, and their finances. And I think Elf is an interesting company because, and we'll talk to Mandy more about this in a second, they import a lot from China. They have a sort of price point customer that is sort of basically one that is sort of exposed potentially to inflation. So like the average product, I think Mandy told me before, is sort of paying $6.50. And so, of course, there's a sensitivity to potential inflation and increases in prices. So, yeah, why don't we turn to you, right, Mandy? Talk to us a little bit about how you navigated the first round of tariffs under Trump's first administration and how that could help as a playbook for this time around.
Well, thank you so much for having me this afternoon. We are certainly familiar with tariffs. We were impacted by tariffs back in 2019, and we experienced them at about a 25% level on the majority of our product that we import from China. And at that time, we had a couple different tools in our toolkit to help offset the impact of tariffs. We had cost savings and concessions with our suppliers. We saw the foreign exchange rate between the U.S. and the Chinese yuan move into our favor. And then we also had pricing. We took pricing on about a third of our portfolio at that time to help mitigate the impact of tariffs.
So, Mandy,
I would say now.
Continue.
Go ahead, Yeah, I would just say now that, back in 2019, I would say maybe 99% of our product was coming out of China. We've made a lot of progress now, about 80% coming out of China, but we also have diversification in our back pocket. And so we have identified suppliers in other parts of Asia outside of China, and then also working with suppliers here in the U.S. and in Europe, also helping to produce our products. And we also have further diversification from a top-line standpoint with in this latest quarter we just reported, 21% of our net sales coming out of other countries outside of the U.S. that when we import into those countries are also not subject to tariffs. So that also will help us mitigate any incremental tariffs that we might face.
What about how this hits the bottom line of the company and sort of where it's absorbed? The changes, are they absorbed through price increases, or would tariffs be absorbed through price increases, or do you just get this hit on this with the bottom line?
Well, in the 2019 instance of tariffs, we actually were able to expand our gross margins during that time because we did take pricing, we had the cost savings, we had FX move into our favor. Now, some of those things like FX, we're not in control of. So that was just an additional help that we had during that time period. So I guess I would say it's too early to tell what this next round of tariffs may look like. But certainly we have the playbook from 2019 when we got the 25% level.
So what kind of preparations could you potentially do in advance of this, especially when you're thinking about what shareholders are looking toward when it comes to these types of potential issues?
Well, I think many companies are just scenario planning. You know, what can you potentially expect to see on the road ahead? And certainly leveraging the history that you have in this area. You know, we treat our pricing very seriously, and we actually have only taken pricing in response to kind of macro things. The tariffs back in 2019 and the 2021-2022 period in response to the container cost increases that we were seeing just with travel on ocean. And so we really take that very seriously. As Nina mentioned, our average price point is $6.50. And so we're very much a value price point, and we want to maintain that value. And so even in 2019, when we took pricing on a third of our portfolio, we were not the only ones that took pricing. I mean, there was pricing across the board. As we know, we went through a period of inflation post that time. And so certainly want to take that very seriously and minimize what we'd have to do from a pricing standpoint.
Mandy, how do you think about inflation and the impact on consumer confidence? We talked about this when we spoke earlier this week, that you said, of course, tariffs can drive inflation. And of course, this country has just gone through a massive wave of inflation. Like, how do you think your consumers would potentially react to that?
Yeah, so I do think that there is broadly, not just in beauty and not just with e.l.f., but just broader fatigue from inflation. I think you're seeing that with many companies talking about value being of utmost importance to consumers. And even when you look at the beauty category overall is down 5%. But e.l.f., you know, we just delivered a 40% quarter, continue to resonate with consumers. And I do believe our value proposition is a key differentiator for us in the market. And so I think consumers are fatigued on price increases and all of those things and are going to be seeking value in an inflationary period.
Yeah, I think that for a lot of people who are looking at sort of a postmortem of the election, they would certainly agree with that, and voters certainly voted expressing that, it seems like. I'm wondering about other policies that within a new Trump administration that you've got your eye on, apart from tariffs. I mean, what does a second Trump administration mean for e.l.f. Beauty?
Well, I think irrespective of who is in office, you know, we're really focused on what we can control. And we know that our investors, our employees, everyone is focused on what we're able to do from a net sales growth standpoint, what we're able to do from an EBITDA expansion standpoint, and really continuing to build market share in this environment. Those are the things that we can control and are focused on at this time.
We only have about 30 seconds left, but how do you view the trajectory when it comes to the debate around what could happen with corporate taxes?
Yeah, you know, I would say that, you know, we have been more focused on the tariff impact because we do know that that is a bigger potential for us to have to scenario plan against. From a corporate tax standpoint, I think a little bit of a less of an issue for us. We're pretty vanilla when it comes from a tax basis, and so have not been as focused or see that as much of an issue for us as we look out.
All right, Mandy Fields, the CFO at e.l.f. Beauty, joining us from Oakland, California. Also here, Bloomberg News senior editor Nina Tretman. She writes the Bloomberg CFO Briefing newsletter. You can sign up for that at bloomberg.com/CFO Briefing. Taking a look at markets right now, we're seeing records. The S&P 500 at its best levels of the day, above 6,000, up 0.6%. The NASDAQ up 0.2%. Coming up next, it's Options Insight with Abigail Doolittle. That's on Business Week.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenivek. That's Jess Metten in for Carol Master this afternoon. It's time now for Options Insight with Bloomberg News Markets correspondent Abigail Doolittle. She's joined today by Carly Garner, founder of DeCarly Trading. Abigail, guessing you're talking about some trading implications as a result of the recent election?
There's a slim possibility of that, Tim, given the historic nature of this week. And Carly Garner, founder of DeCarlyTrading.com. Thank you so much for joining us. We love to gain your insight on this because you've held a somewhat bearish view for a long time, and yet we have this best week in more than a year for the S&P 500, the best week since the Russell 2000, since 2021, on the certainty around who the next president will be, and certain of those possibilities. And then, of course, the Trump trade seems to be adding extra luster to it. I believe, however, you're still holding that longer-term, let's call it cautious view.
I am. I'm very cautious up here. I mean, and as you pointed out, I have been for a little while, and obviously the market is experiencing some euphoria based on all kinds of things. But it's been my experience, and if you look throughout history, anytime the market becomes this euphoric in regards to risk assets, particularly when it's this euphoric based on fiscal and monetary policy, it's not that we've manufactured prosperity. We've just pulled it forward. We saw this in In Japan, it took the Nikkei almost 35 years to recover the highs from 1989. We're seeing it in China. China's the Shanghai index peaked out in 2007 during a similar euphoria period. And guess what? We haven't seen the Shanghai index recover yet. So I'm not saying we get 20 years of dead markets. I'm just saying if these prices are good enough for Warren Buffett to be taking risk off the table, probably good enough for us as well.
Yeah, good point there, Carly, because Warren Buffett, Berkshire Hathaway, nearly 50% of their portfolio is in cash, and we've been hearing about this for years, but it is interesting at this time when there so much money can be made off of yields. That could be one reason. On the other hand, yields have come in, and it's still high, and I know that they're not market timers, but interesting point there for sure. You've also had a pretty distinct view on bonds, and the Trump trade, a piece of that is actually the opposite of what you're saying, yields going higher, because the possibility of more spending would press on bonds and yields. Do you see some sort of a rally for bonds ahead, or has that been changed by the election of Donald Trump?
I have not changed my view on bonds. In fact, I think this is a really great opportunity for, I'm in my late 40s. I don't have 20, 30 years to recover if the stock market goes bad. So for me, for my investment portfolio, this is a really great opportunity in my eyes to buy bonds. One thing I will say is the Trump trade, I feel like the markets are gaslighting us a little bit. The Trump trade ideally is pro-growth, pro-inflation, and you see that being priced into stocks and bonds with the big sell-off in bonds. But if you look at his last administration, inflation was under wraps, and the 30-year bonds started at around 3% when he stepped into office, and when he left, it was about 2.5%. And to be honest, had we not had COVID, it probably would have been closer to 3%. The peak, I think, was 3.5% during his administration. So we're looking at 4.5% to 5% 30-year bond right now. So in my view, the market's way overpricing in what the inflation that we're talking about with the Trump tariffs and things like that.
That's an excellent point in terms of what actually did occur with the last administration, his last administration. And in addition, in terms of anything does seem possible with Donald Trump, so it wouldn't be surprising if it's not the expectations. It's interesting, we were talking about this yesterday, the Fed is not making the assumptions around that growth and the policy changes, but the markets are. So do you think that the Fed is prudent to hold off to see what will be next, and the markets may in, say, a month or two, or perhaps when Donald Trump takes office in January, that there could be maybe even a little bit of, I don't want to say sell the news, but maybe tapering of the news?
I will say, I think we get buy the rumor, sell the fact. I think once we get into 2025 and we start seeing what's going to happen as opposed to us speculating on what might happen, I think things unwind a little bit. Keep in mind, if you look at the COT report on the future side of things, there's basically a record net long position being held in the stock index futures and a record net short being held in the 10-year note. So everybody's on the same side of the boat. There are way too long stocks, way too short treasuries. It takes some time. These things don't happen in a week or two, but if you're talking 6 months to a year, I think we get a big unwinding of that position.
So let's bring in commodities, because that's another area of your expertise. And China is the world's largest user of commodities. So if President-elect Trump is in fact punishing toward China, maybe not the 60% tariff we're hearing about, maybe that's the starting point of the negotiations. Maybe it will be, maybe it'll be 30%. We don't know, but it does seem that there's going to be a tough on China stance. Is that going to hit the commodity complex? Do you think that we've seen some sort of a near-term top? And we have about 30 seconds or so, Carly.
I think commodities are already pricing that in. You're right. The art of the deal is to throw some wild number out there as a negotiation point and then come down from there. And I think that's what will happen. But if you look at copper, grains, not quite crude oil yet, but I think crude oil will follow into the low 50s. Those markets are already pricing in weakness and deflation due to the trade war, potential trade war.
Interesting. So perhaps stocks will follow. Carly Garner of Descartes Trading, thank you so much for joining us on this Friday for Options Insight. Tim, back to you.
And a big thank you, of course, to Bloomberg News Markets correspondent Abigail Doolittle just now as well for Options Insight. Hey, coming up next on Bloomberg Business Week, if you're sticking with us on radio, YouTube, and Bloomberg Originals, we got a great program. We're going to be speaking with Mark Gongloff about what climate policy looks like under a second Trump administration. Also, we're going to be joined by Wendy Benjamin Simon, who's talking about the Trump economic agenda that is starting to take shape with these names being floated. All that and more coming up next on Bloomberg Business Week.
is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Stacey Lynn.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financial.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week on this Friday afternoon. It's our second of 3 hours right here on Bloomberg Radio, YouTube, and Bloomberg Originals. Happy Friday, everyone. I'm Tim Stenevec. Jess Metton in for Carol Masser. Carol should be back on Monday. Jess, I don't always remember all of your titles.
Deputy Team Leader and Senior Equities Reporter for our equities desk here.
Congratulations.
Well, thank you. Thank you. Dual role there.
On the dual role.
And then I come in and get to have fun with you guys.
Well, so talk very briefly, and we're going to get to Charlie in just a minute, but talk briefly about what you're seeing in the equity trade today.
Yeah, so actually, S&P 500, of course, crossing 6,000. That's important. You have the Dow actually also crossing 44,000 40,000. And of course, Intel joined the Dow today. It's actually a little bit lower. It's down more than 1%, but it hit a record earlier today. But we actually have a positioning story I'm doing with Alex Simonova this week and kind of taking a look at kind of the week that was and what the positioning looks like heading into the next couple of months. Okay, well, just breaking down the trade. We're going to have more in just a few minutes from Charlie. But over the next 3 hours, we got a great program. 2 hours coming up, excuse me. We got Mark Gongloff joining us in just a few minutes talking about what a second Trump term means for the climate. We're also going to hear from Wendy Benjaminson over at Bloomberg News about the economic agenda for Trump moving forward. And we're going to check in a little later with the CEO of Butterball ahead of the Thanksgiving holiday, and also talking a little bit about what he's seeing from a cost perspective and how he's preparing for a second Trump administration. All that and more coming up over the next 2 hours right here on Bloomberg Business Week. First up, though, a check of the day's trade and top business stories. Here's Charlie Bell.
Thank you very much. Let's talk turkey on markets because we have got the Dow, the S&P, NASDAQ all advancing. We're looking at records right now. The big question this hour, will the S&P close above or below 6,000? 6,003 where we stand right now, up by about 0.5%. The Dow above 44,000, up 346. Up by 0.8%. NASDAQ up 20, a gain there of 0.1%. Stocks are higher. We are very close to session highs, but retreating just a little bit here. But again, worth repeating. We've got the S&P up 0.5%, 6,004 where we stand right now. Sort of a broad-based rally here with the Russell 2000 index up by about 0.8%. 10-year 4.31%, the 2-year 4.25%. Spot gold down $18 the ounce, down 0.7%. And West Texas Intermediate crude down 2.6%, $70.49 for a barrel of WTI. The Consumer Sentiment Survey out of the University of Michigan climbed to a 7-month high in early November, boosted by Americans' optimism about the future of the economy and their finances. The University of Michigan's preliminary November Sentiment Index advanced to 73, exceeding all but one estimate in a Bloomberg survey of economist. Joanna Shu is Director of Surveys at the University of Michigan.
What we saw on the eve of the election, in the 2 weeks leading into it, consumers were feeling much more confident about the future of the economy. Not much change in current conditions, but in terms of the future of the economy, we saw improvements in terms of business conditions, personal finances, people's incomes, unemployment rates. Consumers were really feeling like the future of the economy was on an upward trajectory.
Joanne Shu of the University of Michigan interviewed on Bloomberg Intelligence. New York Governor Kathy Hochul is seeking to revive the New York City congestion pricing plan with a lower toll. That, according to Politico, it says that Hochul is seeking now a $9 toll, according to one of the sources. Again, recapping here, U.S. stocks trading at records. The Dow, the S&P, NASDAQ all in the green, with the S&P up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, do appreciate that update. Thank you so much. Well, as I mentioned, we are covering all angles of what Donald Trump returning to the White House means, what it means for the markets, the courts, for trade, for international alliances, and of course, for the climate too. Mark Gongloff, an editor at Bloomberg Opinion who writes about climate change, does not have great news, at least in his opinion. He writes that, quote, "For the climate, the best we can hope for is that the aftermath of the 2024 election will remain just short of catastrophic." Mark joins us here in the Bloomberg Interactive Brokers studio. So, Mark, where do we begin with the climate and a second Trump administration? Because I think we can kind of look to what he did in his first administration and what comments he's made since then. Not necessarily a priority for him.
You could say that. To say the least, it's not a priority for him. In fact, he was actively hostile to it in his first term. And as far as we can tell, we have two things to go by. We have his first term, where he was actively hostile to it, pulled us out of the Paris Climate Accord, gutted environmental regulations, tried to put a bunch of climate deniers in the government, on and on. The Project 2025, this blueprint that the Heritage Foundation put together that he disavowed, but then it has been written by a lot of his former advisors, calls for doing that on steroids and privatizing the National Weather Service and doing a whole bunch of other stuff, drilling for oil and a whole bunch of stuff like that. So none of it looks great. On the other hand, there are some reasons for hope.
So you've also written about how Americans clearly care about climate change, but then the second time in 3 different presidential elections, you've seen someone come in that's elected that obviously has different opposition towards that. What's the conundrum there? Why is there a divergence?
Yeah, it's crazy. consistently people say, we really care about climate change, we really want to do something about it, and then they turn around and vote against that. It's a weird dichotomy that you've seen in this election and many others. People, inflation is an enormous problem, and that is something that affects people's daily lives. Climate is affecting their daily lives if there's a big hurricane, if there's a drought, if there's a wildfire, but that's not a constant drumbeat, how do I feed my kids? So I understand that if you're going to go to the polls and be mad about inflation, you're going to vote about inflation or the economy. The difficult thing we need to message is that this is an economic issue. Climate change is going to raise prices in the future and cause economic loss in the future, but it's causing those losses as we speak.
Why do you think your insurance is more
insurance
expensive?
rates are going, exactly. Building costs are going up. All these things are problems in the now, and so we have to express that message better. And that's one of the things about Trump taking over again and cutting off the U.S. government sort of activism in climate, is that we have to sort of take up that mantle ourselves.
Well, you mentioned it's not hopeless, and I wonder about the people that he has around him right now. And that could change. We know how he was in his first term and what some of those folks are saying now about the former president and president-elect. But what about someone like Elon Musk being so close to him? Because he's, I think it's fair to say, done a lot for the transition to cars run on by electricity.
It's such a weird thing. Yes, I mean, his fortune is based on Tesla, and one of the weird things, though, is that if you cut off the IRA, cut off the Inflation Reduction Act, and in subsidies for other electric car makers, suddenly Tesla is king of the hill without that many competitors. So there are some competing interests there. It is possible, though, that he could kind of bend Trump's ear on that, but I don't know if we can rely on that at this point. We may have to rely on state and local governments. Washington kept alive a carbon tax, a cap and trade scheme that they have there to help sort of like make carbon more expensive. That's a huge thing to help keep fossil fuel use down. Other state and local governments are doing that. And the other thing, the ironic thing, is that Trump has called climate change a Chinese hoax. If we stop subsidizing green tech production in the U.S., a lot of that business is going to go overseas, and a lot of it is going to be dominated by none other than China. It already is to some extent. They're making super cheap EVs, they're making super cheap solar panels, and they're spreading them around the world, and we risk missing, the U.S., when I say we, the U.S. risks missing out on that business and, that ability, that manufacturing and those jobs that the IRA was starting to provide. And that's another reason to hope. A lot of those jobs are being created in Republican districts, and so a lot of Republican lawmakers are already saying, hey, maybe keep your hands off of this, please.
So Project 2025, because there's a lot of discussion about this, it's unclear about everything that's in it, but how does climate change end up fitting into this specifically?
Well, they really talk about the NOAA, which runs the National Weather Service and a bunch of other things. They talk about taking that, breaking it up, stripping it down. The National Weather Service, which provides, tons and tons of data, climate data. They want to they don't privatize that, but they want to commercialize it so that it sells all that stuff, sells all of its data to like AccuWeather, for example, which is like a private company. AccuWeather says it doesn't want any part of this, but it's of course saying that now because it wants to stay out of that. Who knows what's going to happen? But it wants to pull climate change out of the science that the National Weather Service and the NOAA perform, and that will be a huge loss for scientists here and all around the world. They'll have to scramble for other data sources, and it's just, we all need to be rowing in the same direction. We've got 4 years in order to really close the window. We've got a window of 4 years to cut fossil fuel emissions down enough to keep warming to the window that we've all said we want, like 2 degrees Celsius or less. Everybody needs to be rowing in the same direction to make that happen. If the U.S. pulls its data out of that fight, its powers out of that fight, then it doesn't help anybody.
I'm wondering where markets come in here, Mark, because we mentioned the rising cost of insurance, and I don't know if you've been on since I found this out about a friend of mine, but apparently he can't sell his condo in Florida because it keeps flooding. There are insurance issues, and to me that sounds like the market is kind of taking care of this.
Yeah.
It's anecdotal, but you are seeing some issues, especially with some other regulations in Florida related to the collapse of that building in Surfside a few years ago that are making it really difficult to sell real estate in certain areas.
Yeah.
Donald Trump's a real estate guy.
Yeah.
Like, is that message, and in Florida, like, is that message going to get to him that, okay, this is an issue because it is affecting the cost of housing, and he wants to bring that down?
I don't know what messages will get to him, but I do think, because who knows what, but messages will get to politicians in Florida. I mean, they already see that the real estate market is having problems, especially in the coastal areas. Insurance rates are going up. So that is going to be a big market, and you can see that in other parts of California, wildfire-prone areas in California, flood-prone places in Louisiana and Texas. It's going to be an issue all around the country and not just in Florida, and it will be an economic issue. On the other hand, I guess if you pull away government support and subsidies for clean tech, then that becomes another sort of the countervailing market thing. We're already seeing hedge funds making a bunch of money by betting against clean tech this week. Is that going to keep going if the U.S. government pulls its stops away? Will VCs keep putting money into that stuff? So that's another market wrinkle that we have to think about.
We've talked a lot broadly about the U.S. government, but what about when it comes to local government and what they can do for those types of policies or initiatives when it comes to climate change?
Yeah, there's so much that they can do. Nashville and Columbus, Ohio, both passed mass transit bills this week. And other
Those are two states that voted for Trump, by the way.
Exactly. Ohio and Tennessee, those are deep red states, but their local governments in these two towns passed mass transit bills. Washington, as I mentioned, passed this cap and trade bill. So there are lots of things going on, but then at the same time, again, it's difficult because I think with South Dakota voted against a pipeline that would pipe carbon dioxide. So you have these carbon capture. Another big thing we're going to need maybe is carbon capture and storage, which we go on about how effective that is. But if you have that, you want to pipe that carbon to other places. South Dakota said, no, we don't want that pipeline in our backyard. And so it is a fight, but local governments can do a lot. California, the state of California has done so much to affect the entire U.S. auto industry with its environmental regulations, and so states can have that kind of power.
I'm going to throw a curveball at you, Mark, but we talked Elon Musk. What about someone like RFK Jr., who has a history in environmentalism?
Yeah. Again, I don't know RFK Jr., Elon Musk, Donald Trump. These are people who have brains that are more complicated than I fully understand. So I don't know maybe how those three will work together. It is possible that he could also have some sort of an influence on Trump. He already has had an influence on Trump, helped Trump get elected. Trump feels like maybe he owes him something, and so he may be more willing to listen to an environmental pitch from him. Who knows?
It does seem like his focus has been less about the environment in the last few years, and much more about health. Health and FDA and pharma companies.
Vaccines.
So. Yeah, well, we certainly do live in interesting times. Mark Ongloff, we are grateful to have you writing about it. Mark is an editor at Bloomberg Opinion. He writes about climate change. Check out his columns and more on the Bloomberg Terminal, OPIN Go, and at Bloomberg.com/opinion. Coming up next on Bloomberg Business Week, we talk a little bit about credit.
3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all advancing. We begin, though, with the Russell 2000 up now by 0.6%. S&P, to put it all in context, up right now by 0.5%. The S&P 500 index right now at 6,000 even, up 27 points. We've got the Dow at 44,046, advancing now by 317 points, up 0.7%. NASDAQ a little changed, up by just about 7 points. Bottom line here, S&P crashing through 6,000, the Dow above 44,000. 10-year 4.31%, the 2-year 4.26%. Gold down $18 the ounce, a drop there of just about 0.7%. And West Texas Intermediate crude tumbling 2.5%, $70.53 a barrel. Fed Chair Jay Powell made it clear he is ready to defend the central bank from political pressure following the re-election of Donald Trump, saying he will not resign if asked, and insisting that the incoming president does not have the power to fire him or other senior Fed leaders. You heard all that yesterday during the news conference here on Bloomberg Radio, and today we got reaction from former Kansas City Fed President Esther George.
Well, it's never an easy path when you get to a time like this, but remember, this institution was by design anticipating that there would be political influences on it, and so a lot of safeguards were put around it to allow the individuals that sit around that table to really maintain their focus on the American public and the mandate that was given to it by Congress.
Former Kansas City Fed President Esther George. President-elect Donald Trump says he does not plan to sell shares of Truth Social, DJT, that's the ticker, on the stock, up now by 10.8%. Again, recapping here, stocks pushing higher, S&P up 0.4%, 10-year at 4.31%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Mitten and Tim Stenovic here in the Bloomberg Interactive Brokers studio at our New York headquarters here at Bloomberg News. And of course, so much discussion, especially on the back of that Federal Reserve decision, as widely expected, obviously, yesterday, where the Fed did cut rates by 1/4 point here. But some other bright spots that we might look more broadly in the economy. The worst period of stress for underlying credit for credit borrowers is actually behind investors, and the beginnings of a more constructive credit cycle are showing signs of becoming clear, according to Kroll Bond Ratings Agency, who ended up analyzing the 3 most recent years of data for 1,500 companies. But of course, I have to point out that there's still a problem, even as interest rates have fallen in recent months, because many Americans are still feeling the strain of higher borrowing costs from everything from mortgages to credit card rates. So who better to walk us through the dynamics here? Bill Cox, Global Head of Corporate Financial and Government Ratings at the bond rating firm KBRA, joining us from Bucks County, Pennsylvania, to discuss why rate cuts will help most, but not all borrowers. You know what, Bill? I was actually looking at the latest Freddie Mac data when you're looking at fixed mortgage rates, whether you're looking at the 30 or the 15-year. I mean, the 30-year right now, it's around 6.8% in the latest weeks of data. The 15-year is around 6%. I know we saw it come down just marginally in recent months, but now they're back higher. Kind of set the scene here on the back of the Federal Reserve decision and sort of the conundrum here we're seeing more broadly when it comes to borrowing costs from mortgages, credit cards, auto loans, and all of the things above.
Yeah, and that's right. I mean, the 10-year Treasury is obviously the most important factor when it comes to mortgage and other consumer borrowing costs, and that has moved up a little bit. And we've also seen in your forward curve with regard to base rates for corporate borrowers, the SOFR forward curve, that's also bumped up a little bit, where a few months ago when we were researching this report, we were seeing a terminal rate at around 300 basis points on the base rate. We're seeing that bump up to close to 350 now. So certainly some shakeout still going on with regard to interest rates. But overall, as you said in your summary, Jess, the period we're entering right now is more constructive for middle market borrowers, as the period where they were dealing with high inflation, rapidly rising interest costs, and other things like slowing economy in some sectors is really coming to an end, and we're seeing some financial metrics significantly improve.
I'm wondering if your assessment changes at all with the election of Donald Trump, because some of his policies have been criticized as being inflationary, tariffs, for example, and also the concern about less government revenue as a result of tax cuts perhaps on tips, tax cuts on Social Security, or no taxes on Social Security, promises that he made on his campaign, which we don't know if he'll be able to get through, but certainly economists were sounding the alarm bells about those.
Yeah, I think that's right, Tim. I think that last part you said is most important. We don't know what will get through and what of these policies will be in the short run versus the longer run. Right now, the focus is on how our interest rates moving. And as I said, the base rates, if you look at SOFR, which is what most of the private credit industry is borrowing against, that has continued to come down along with the Fed cuts. And it's expected to continue to come down by another 150 basis points. And then in addition to that, what's really interesting in the private credit landscape right now is that spreads are coming in. So the reemergence of the BSL market and competition amongst lenders has led to spreads coming down from 650, 675 a year and a half ago to we're seeing some spreads at 475. So certainly a more constructive borrowing environment for middle market credit.
And I alluded to the latest report that you were looking at when it comes to private credit research. Why do you think the worst period of stretch for underlying credit, especially for borrowers, is actually behind us? And what do you see things ahead here when you do go into 2025 with a lot of question marks about where things could be headed on some of the policy decisions in Washington?
Yeah, that's right. I mean, putting that aside, which is a big thing to put aside right now because we don't know what things will be constructive for certain industries versus others. Certainly, there are some winners already, as the markets are suggesting. But broadly speaking, based upon the data that we have, which is a significant amount of data that's derived from the fact that we rate hundreds of transactions that are either feeder notes into private credit strategies or credit facilities into private credit or CLOs from private credit. What we do when we rate those transactions is we gather financial information on the underlying borrowers in the portfolios of those respective transactions. We assign credit scores, and then we monitor the credit performance of those companies over time. We've done this about 3,500 or so times in the past 2 years alone. And as you pointed out in the intro, we've looked at close to 1,500 unique companies so far this year. And that portfolio of 1,500 is a pretty good reflection of the broader landscape. It includes companies in size that revenues are above 700 million, all the way down to companies that are 60 million and below. Those are the upper and lower quartile. And it's also a pretty diverse group from the perspective of industries, which is very similar to what we understand the broader landscape of private credit to be. And what we're seeing in that portfolio, in the research that we did just launched this week, was first, we were trying to figure out why we are seeing so many fewer defaults than we would have expected, given the rapid rise in rates and the other headwinds that especially highly leveraged borrowers were facing. And what we discovered was surprising. I think you all have reported and we've all read and we've seen in the portfolio an increased instance of interest deferrals and other sorts of restructurings and accommodations that some lenders and sponsors have made for some companies under stress. But what we found is that the drivers of the relatively lower default rates are actually revenue growth, which has been really robust. In fact, 19% compounded annually in the past 3 periods, and EBITDA growth in this portfolio of 33% annually. That is tremendous growth, and it speaks to the resilience of these companies and the business models on average. Again, there are exceptions out there, and we could talk about them in a second. But what we found particularly remarkable is that 40% of the companies actually saw their interest coverage ratios improve despite the rapid rise in interest costs.
We are out of time, but you got to come back and join us to talk about some of those companies. Bill Cox, Global Head of Corporate Financial and Government Ratings at the bond rating firm KBRA. Well, back to Washington, because Donald Trump's team is forming a new administration and the president-elect is expected to draw top advisors and cabinet secretaries from a pool of Wall Street and business executives, including officials from his first term, at least the ones who stuck by him. Wendy Benjaminson is Bloomberg News Washington senior editor. She joins us from Washington, D.C. Even since I wrote this intro a few hours ago, Wendy, We've seen news that former SEC Chair Jay Clayton is in talks for several potential roles in Donald Trump's presidential term, that according to Reuters. Elon Musk was in the room during that call with Ukrainian President Zelensky. What do we know?
Well, we know those two things.
What else do we know?
We know that the transition team is hard at work, trying hard. They are on a accelerated schedule. They say they want to get things done. Certainly, they want to get most of the jobs filled before December, which would be extraordinary. That's what the transition team says. I think one thing we have to remember is that in 2016, Chris Christie, the former New Jersey governor, was the head of Trump's transition team then. He did it all by the book. He had all the positions filled very quickly, and then Donald Trump fired him and literally put the briefing book of names in the trash. So what the transition team thinks they may get done by December and what Trump thinks he might get done by December are two different things. Jay Clayton certainly is in the running for Treasury Secretary among Scott Bessent and Howard Lutnick. There's a number of other people, Senator Bill Haggerty, Robert Lighthizer. So there's just about 8 names per position that we could go through.
What's the timetable for when you would name leaders for the Treasury and State Departments?
Well, as I said, they're hoping to get everything done, in the next month. Treasury and State are usually first, and the theory is that that gives markets and allies some sense of comfort. But once again, this is Donald Trump, and he's not as interested in whether markets and foreign allies need security or confidence. He's going to do it the way he does it. He did name Susie Wiles, his campaign manager, as chief of staff yesterday. That is in the traditional order of things. Chief of staff usually comes first, and she is getting deeply involved now in the transition process.
What about Secretary of State? What are the names there?
Well, there's a lot of names. One might surprise you, which is, Senator Bill Haggerty and Stephen Mnuchin, who was Treasury Secretary under Trump in the first time, may be in line for Secretary of State this time.
Is that?
Of course, he had.
Yeah, okay, please. I know what you're going to say, and that's what I wanted to ask you about. Please go ahead.
Okay. He does now belong to Liberty Strategic Capital that has billions of dollars of investments in the Middle East, and that would be a problem, obviously, if he were Secretary of State.
Yeah, wondering if it complicates things at all. Marco Rubio, also a name in there.
Marco Rubio's a name in there, yes. The Senate does have now a comfortable enough Republican majority that he might pick from the Senate. We've also heard that Trump is a little reluctant to pick from the Senate or the House because the majorities they want are good but not great. And in some states, if he took Marco Rubio, a Republican would probably replace him, but it's not certain.
Wendy Benjaminson, Bloomberg News Washington senior editor, joining us from Washington, D.C. with the latest on the Trump administration's transition team. Coming up next on Bloomberg Business Week, we are driving to the close. That's next.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We're on track for a record close. The big question, though, will we see the S&P close above or below 6,000? Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. Main U.S. averages are in the green right now, with the Dow currently up 270 points. S&Ps are higher by 0.4%, while NASDAQ is higher by 13. The U.S. 10-year yield at 4.3%. Gold is down 18, oil trading in the red, but Bitcoin, that's higher by 0.8%. Among the main 11 S&P sectors, leaders were utilities and real estate. Materials were under pressure, and leaders to the upside in the Dow, Salesforce and Procter & Gamble, while Amazon fell 0.8% and led to the downside. Also after earnings, Akamai fell 14%, and in deal news, Boeing is set to explore a sale of its software business for more than $6 billion. And wrapping things up, Tesla shares rose 7.7% and are set to top $1 trillion in market value again. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Mitten and Tim Stinovic here in the Bloomberg Interactive Broker Studio. We have a little less than 20 minutes to go ahead of the closing bell, but of course, as we've been mentioning, the S&P 500 as well as the NASDAQ 100 on pace for their best weeks of the year. Obviously, a busy week when you had the U.S. presidential election. Obviously,
Busy
a Federal Reserve decision, that looming 13F deadline. Of course, another flurry of corporate earnings. But to walk us through sort of the week that was, who better to have with us? Jim Warden, CIO at the Wealth Consulting Group, here in the Bloomberg Interactive Broker Studio with us. I have to get your take after such a busy week with such a lot of different things on the calendar here. And now that we're past that, how have you been talking to your clients? What are some of their top questions, and how are you suggesting to them to position into year end now that we're past some of these big events?
Great question. Great to be with you here, by the way. This is fantastic. So, not a whole lot has changed for us. Like we're talking about, we're looking at the Fed cutting 2 to 4 times, getting closer to the year. That was prior to the 50 basis point cut. So we're right on track. The narrative for us hasn't really changed a whole lot in terms of what we're looking at. We still think that the consumer is really strong. There's a lot of cash on hand. Those are some of the things that we're looking at, and that we actually earlier this year we thought that we could hit 6,000, and so this is like a good day if today is the day, but we're actually thinking, looking forward that we could hit 7,000 for the S&P 500 is what we're saying.
When?
Well, it's going to be next year. It's not going to be right now.
So really a 1,000-point gain.
Yeah, we think so, and like really for us, it's looking at margins, lower rates is going to translate into better margins. Lower inflation translates into better margins. You get what's happening with AI integration, and that's going to help with margins. Then you get earnings, S&P 500, unless analysts really downgrade there, we should see 17%, 15 to 17%. For mid to small size companies, 27% earnings growth. So those are good numbers. Obviously, we could see some analyst downgrades there, but those are good numbers. And then you see just, the $6.5 trillion of cash. You got $1 trillion potential in buybacks going into next year. And then there's the healthy consumer and calmer markets, by the way, too, because when volatility comes down, a lot of these systematic trading strategies start getting back in.
Okay, that said, you also argue that there should be some caution due to what you're seeing in the bond market.
So we're looking at that, and like we think it's going to be a little bit range bound until the markets really figure out what are we going to do with Trump, and where is this going to go with tariffs, where is it going to go with immigration. there is some concerns, I would say, for sure, with the bond market about inflation or reflation. And so that's something we're looking at.
Are those fears warranted?
I think partially they are. But at the same time, I'm talking to bond managers, large bond managers that are saying, hey, if it gets to this rate, we're going to start buying more. So I think there's you certainly have some headwinds, but you also have some tailwinds that would make rates go higher or lower.
So with the yield story, at what point does that put a lid on potential gains more broadly in the U.S. stocks? If you just look at the 10-year where it was trading mid-September around 3.6, right now it's around 4.3, had reached above actually 4.4. So that's, I mean, right now it's over 70 basis point move in such a short amount of time. Obviously, there's a lot of factors that went into that. But at what point, if we see the high of this year around 4.7, could that be something that could put a lid on gains more broadly for stocks?
I think, yeah, the closer we get to 5, that is not going to be good for stocks, especially small cap stocks. We've kind of been saying that. I think what really changed here is that you had all this concern about a recession and, are we going to have one? And rates came down. A lot of the bond managers were saying it's a hard landing. We've been saying for a while it's likely going to be a soft landing, and now I think we're still going to see that. But there's some people now that may be saying like, oh well, Fed fund futures are factoring in too many rate cuts. And honestly, I don't have a crystal ball, but I would say that it's not out of the woods for the Fed to say, hey, look, we've cut a little bit. Let's pause. And then we can cut some more if needed.
What would you say to folks out there who say, wow, stocks look pretty expensive by historical standards right now?
Yeah, they do. They do.
So how do you put new money to work?
Well, no, we are. We think there's some good names out there, but like some names are expensive, and this is not a 2021 market where everything goes up, and that got really, really frothy. We have to be a lot more selective here.
I want to ask you more about that, because when you're looking more specifically at valuations in the terminal, you can look at the blended forecast for the S&P 500. When Trump first took office during his inauguration day in early 2017, if you looked at that forecast for the valuations for the S&P 500, what's around 17. Right now, it's close to about 22, 23. And obviously, the economy is very different. Inflation is very different than it was at that time. How do you position for that? And when you have the S&P 500 up over 50% over the past 2 years, if you think back to what the markets were doing in 2015, early 2016, which obviously we had Brexit in the middle of that year, how do you position on that when you had a big rally the last couple of years, and during that point, the economy, the stock market was in a very different place?
Sure, there's fantastic questions. And so for us, we still like technology. We've pared back because things were getting a little bit too stretched. But we see that there's opportunities in industrials and financials, real estate. Some of these were really beaten up in 2022 and part of 2023. Consumer staples is one area that we like. And so I think our focus really right now is finding quality, and it's quality growth. So if we find companies that are growing 30, 40, 50%, and maybe they have a high valuation, we're okay with that. But obviously we want to know, like, where is their growth going to be the year after next and the year after that?
Where do you want to stay away from?
So there's more that we like than that we don't like, but I would say it's the commercial office real estate, small regional banks. We're steering clear of those for now. And I know some of these have kind of gotten a bounce here, but those are areas we just don't, we're not trying to time some of those positions. We want to find the intersection of good quality and, if possible, value and momentum.
All right, Jim, appreciate you joining us today. I'm just trying to pull up what the regional banks are doing today. Jim Warden, CIO at the Wealth Consulting Group, joining us here in the Bloomberg Interactive Brokers studio. Taking a look at markets, we're off our best levels of the day for the S&P 500, the Dow, and the NASDAQ. NASDAQ pretty much flat. The S&P 500 shy of a 6,000 close, but, we still got 10 minutes to go. Coming up, we're joined by our Bloomberg TV team for our cross-platform coverage to count you down to the close.
Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenevec. That's Jess Menton in for Carol Messer this afternoon. Jess, we're off of the best levels of the day, but we're still up on the S&P 500 so far this week by more than 4.6%.
That's right. And so it's been a big week because you do have the S&P 500 crossing 6,000 for the first time ever, which coming into this year, if you look at those sell-side forecasts, they were much lower than where obviously you see the S&P 500 trading. So you have a lot of those sell-side banks and research firms really trying to play another year of catch-up because the same thing happened last year when people were underestimating just how strong the rally would be, especially powered by the Magnificent Seven stocks, but keeping a close eye on those, and obviously the S&P 500 and NASDAQ on pace for their best week of the year, Tim.
Hey, some New York City news, not to be, New York center of the universe and everything, but among the most read on the Bloomberg terminal is a story by our own Magdalena Del Valle, who writes that New York City is ending a program that provides migrants staying in city-funded hotels with prepaid debit cards that they can use to purchase food. It was a one-year contract with Mobility Capital Finance, is known as Mocafy. We've actually talked to the Mocafy CEO on our program. It's going to be allowed to expire early next year. That's according to city officials. The system has been providing about 2,600 families with the vouchers, with $3.2 million loaded onto the card since the program started. So a family of four with young children was eligible for about $350 a week.
Yeah, so the city will instead restart a program that paid for meals to be delivered to migrant families that are staying at hotels, and the program was actually criticized for prioritizing the needs of migrants over other residents struggling to feed their families amid surging costs of living in New York, but officials defended it as an efficient way to help some of the tens of thousands of migrants in the city's care. New arrivals, though, have slowed in recent months, reducing pressure on city services, Tim.
In the same interview with a local ABC affiliate where Eric Adams, the mayor of New York, said it was an emergency and now we're moving in another direction, Adams said that he would collaborate with President-elect Donald Trump's incoming administration to deal with, quote, pressing issues facing the city, including funding for migrants.
Right.
What else is your attention on the most read?
Well, given that I'm covering the markets here and the deputy for U.S. stocks. Actually, Esha Day, as you know, she's one of our senior equities reporters, also a fellow deputy team leader on our equities team, but she covers Tesla, Elon Musk very closely. But as we know, intraday trading, we saw when we're looking at what's happening with that particular stock, actually crossing above the $1 trillion valuation mark. Big milestone there. Obviously, that stock had been pressured, especially in recent years, just the outlook, and then those production questions, shortages as well. But we were looking at some of the size and scopes there. But then another one is when, don't forget, NVIDIA joining the Dow officially today.
Also Sherwin-Williams.
That's right. So
paint chips.
That's right. Replacing Dow Inc. for Sherwin-Williams. And then when it came to NVIDIA, they were replacing Intel, which has been
symbolic.
Right. I mean, that's been pummeled. But something that's interesting about that, when you talk to a lot of people that have been following this very closely over the years, a lot of times when these stocks have been kicked out of the Dow, you've seen some recovery, especially over the last decade. So say like GE around 2018, that was when it famously was kicked out of the Dow after about a century there. But then that stock has recovered pretty tremendously over that span. And then another one, 2020, of course, Exxon was one of those companies that was kicked out. And then, of course, we've seen in 2020, obviously the pandemic, but there was a point where we saw negative oil prices, if people can believe that, over 4 years ago. But at that point, and if you look at that stock too, another one that has recovered. So it'll be interesting to see what happens with Intel and its stock at this point. But obviously, it's been a lot of problems, and see what happens.
All right, well, we certainly know what happened this week. It was a week that was highly anticipated, not just for the Fed decision, but of course the presidential election. We saw stocks just absolutely surge. Markets aren't closed yet, but if you're long this market, you've had a pretty good week. The S&P 500 looking like it's going to close out this week above 4.6% just over the last 5 days. The Dow higher by more than 4.6% as well. The NASDAQ actually the underperformer, up by 5.7%. Coming up next on Bloomberg Business Week, we're joined by our Bloomberg TV team for our cross-platform coverage of the market close. Bloomberg's The Closing Bell starts right now.
The The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here alongside Scarlet Fu, taking you through the Closing Bell, a global simulcast. It starts right now. Tim Stenovic joining us from the radio booth. Jess Minton on by his side in today for Carol Master as we welcome our audiences across all of our platforms. That includes our partnership with YouTube. Tim Stenovic, record day for the Dow. I know you love the Dow. You're an old economy guy.
Hey,
record day for the
special.
S&P 500. And look at this. The Russell 2000, Tim, at one point came about 40 points away from getting a record high.
It's pretty remarkable to see. Just think about how much different things were a week ago, guys. How much uncertainty there was out there. There was a lot of concern that we'd be sitting here a week, later, that we wouldn't have a presidential choice. It wouldn't be a clear victory for either party. Well, look, it was a red wave, and investors certainly like that. We're going to see maybe the best week for the S&P 500 in a very long time, Jess.
And of course, so in 2021, that was the last time that it actually had hit that all-time high. So it's been a tough stretch there for small caps, but it'll be interesting to see also the trajectory of what happens with rates now, because that's obviously highly indebted, more domestically focused companies. So investors were thinking we'd see more rate cuts next year. Now they're bringing them back in depending on what happens in Washington and policies, guys.
Yeah, to Tim's point, event risk has pretty much disappeared. It's concluded, and you see a surge in volume as well. Volume in the Dow is 38% above the 20-day average. Now, we should note that the Dow is no longer so old school. It does have NVIDIA, after all, starting today.
Yeah, it's getting there. It's catching up with the times. Good to see they're still sticking by just 30 stocks here as a representation for the entire economy.
And price-weighted.
We should also point out that here, when we talk about what a wild week it was, the VIX having one of its biggest point drops on a weekly basis in quite some time, showing that at least the outlook here for volatility has certainly been tamped down. A lot to cheer about on the day and on the week. BlackRock ringing the bell there over at the NYSE as the Dow Jones Industrial Average closes out the day just below that 44,000 mark. It did trade slightly above that earlier in the session, but still up about 0.6% record high. The S&P traded slightly above 6,000 as well, going to close just below it at 5,996. Up about 0.4%. The NASDAQ up fractionally by about 0.1%. Look at the Russell 2000, only 17 points added, only 0.7%, but at 23.99 and change, Tim, it is now the closest it's ever been to reclaiming that record high in about 3 years.
Well, let's take a deeper look in the S&P 500. Peeling back the layers, 317 stocks did move higher in the S&P 500. 184, Scarlett, moved lower today.
And of the groups that did advance, 5 of them climbed at least 1%. So you had utilities, real estate investment trusts, and consumer staples, more of the defensive sectors, gaining all at least 1.5%. On the downside, materials, communication services, and tech actually did finish in the red.
All right, let's go to some of the gainers that I have for you today. I do want to start with Tesla. Shares of Tesla popping today by more than 8%, and that brings it to a market cap of more than $1 trillion in value for the first time, going all the way back to 2022. Investors continue to bet that Trump's return to the White House can be a positive force for the company, considering his now very close relationship with Elon Musk. We did see that shares closed just about 30% higher just this week, guys. So really a big move for Tesla so far this week. Huge.
Can I just say, too, because I mean, and I don't want to get too into politics,
Okay.
but this is going to go down.
I'll play.
It's probably one of the biggest gambles, right, that he made. Because there was a lot of people that when he aligned himself with Trump, I'm talking Elon Musk, they were saying, okay, this guy's, bad idea. But obviously, this is going to be a huge benefit for him, assuming he stays in Trump's good graces over the next 4 years.
Well, I wonder how that benefit will manifest. Look, I think you're right that it was a huge bet, and it was one that instantly became clear was a winner, at least for Elon Musk's personal
potentially lower regulation on the EV side, potentially an acceleration of robo-taxis and other things that are going to require some sort of government involvement. Obviously, he's got SpaceX, which is pretty much just a government contractor at this point. So, yeah, I mean, obviously no promises, but I mean, you can see where this is going to go.
And maybe a side gig as well, right, at the government.
Maybe if he wants that. I mean, Department of Government Efficiency, DOGE, right, as we've heard about and he's talked about. But at the same time, if you look at the history that Donald Trump has had with people who have been close to him, it has sometimes been tumultuous. I wonder if...
Yeah, we're not talking about that just yet.
Look,
it's optimism week here, Tim.
It's still the honeymoon period,
we'll
right?
get there. We'll get there at some point. But yes, your point is taken.
Okay, let's talk a little bit about Axon Enterprises. It's a parent company that makes police gear, including body cameras and tasers. Shares of Axon Enterprises surged today, higher today by more than 26%, higher by more than 28%. Look at that, almost 30%
What's going
higher
on?
this year.
Are we tasing more people or something?
Well, the company did raise its full-year outlook after third quarter results beat expectations. They also touted this AI era plan. I'm not going to make a Taylor Swift eras joke here, but for Axon, the taser maker, it is the AI era. Investors obviously are excited about that, sending shares higher by close to 30%. We saw at least 8 Wall Street analysts raising their price targets for Axon shares, data compiled by Bloomberg show. And one more on the President-elect. Trump Media and Technology shares moved higher today by more than 15%. They were a little all over the place today. There was a volatility halt. The former president and president-elect did send out a post saying that he has no plans to sell shares in it. The company also earlier this week, we should note, disclosed that it had lost $19 million in the third quarter on revenue of just $1 million. Net losses piling to $363 million in the first 9 months of the year. The valuation is more than $6 billion. Many people do argue this is detached from fundamentals.
Well, since I'm wearing red, guys, I'll go ahead and take those decliners. So the worst performer in the S&P 500 today, Akamai Technologies, actually falling after its results and lowering its outlook when it comes to its profit forecast. Also, if you look at its stock, down 14%, worst day since July 2017. This is a computer and internet technology consulting services company. Its market cap's around roughly $14 billion here. If you look at the A&R function, it has 15 buys, 8 holds, and 1 sell. Moving over, though, looking at Pinterest. So this, of course, reported earnings after the bell yesterday. Also down 14%. Pins is the ticker symbol on this. Worst day since July 31st here. Of course, the image sharing platform sank after weak ad trends were weighing on its revenue forecast, specifically for the current quarter and the fourth quarter. Morgan Stanley analysts flagged weaknesses in food and beverage ad spending. So that's what's weighing on that stock. And then finally, Sweetgreen, ticker symbol SG on this, down about 6%. Worst day since October 17th. So just a few weeks ago was that worst day, but the market is punishing it after Salad Chain actually reported a wider than expected loss for the third quarter. Unfortunately, the results failed to meet those high expectations, guys.
All right, let's take a look at yields here because we did see a lot of activity there, but forget what happened on Wednesday. Remember, you had that huge pop in yields on the back of the re-election of President Donald Trump, but that actually faded. And right now, we're talking about yields once again actually moving in the direction that a lot of people, well, weren't betting on. In fact, we're actually closing out on the 10-year yield at 4.3%. That's below where we were last Friday here. We had a move of about 2 basis points lower on the day, about 7 to 8 basis points on the week. We should point out the 2-year yield, though, the more rate-sensitive part of the yield curve, Fed-sensitive part of the yield curve, that's still staying elevated here on the week, up for a second straight week, those yields.
Hey, you guys remember congestion pricing?
No. Did it ever happen?
It didn't ever happen.
I saw they put up these big things around New York. They're like these tolls.
They spent most of their money on that.
Did they ever turn them on?
They did not turn them on.
Oh.
Yeah, there was
So we
this
wasted money on
abrupt
that?
shift by Governor Kathy Hochul just a few months ago. Well, it turns out that Politico is reporting maybe there's going to be a revival of this plan. It's going to be a little different, though, than the $15 to enter certain parts of Manhattan now that the election has passed, Jess. And they're looking at, what, $9
That's
polls,
right.
perhaps?
So looking at $9 poll
$9.
here, according to one of the people that the story said, and it was an MTA board member. So $9. So that would actually, the plan would lower it by 15, and would obviously require a lengthy environmental review.
Of course it would. Of course it would.
Well, no. Well, this is my understanding is that there's this range from $9 to $23. So since it's at the lowest end of the range, maybe the Hochul administration and the MTA can avoid another lengthy environmental review, and they could implement this before Trump actually goes to the White House, because there's some federal concerns too.
Really compressed timeline for a municipal government or a state government. But the other thing that we need to keep in mind is they had all these exemptions carved out for people, right? Does that change if the toll is something different? And can the MTA still sell bonds tied to the revenue coming in for all this congestion pricing?
And that's the thing I think gets lost on this. I mean, we all could be outraged about tolls, but at the end of the day, this was money that was really supposed to go to improve the subway system here in New York. I don't know the last time you folks have been on the subway, but
each and every day.
I can say this with confidence.
Charlie Pellet.
It needs improvement.
Yeah, it does need some improvement. Something else that we've been tracking here is, of course, the rally in financials on the election of Donald Trump. He's seen as positive for the sector overall because of deal making and, of course, lower regulation, consolidation in the industry. But on a personal level, for a lot of the CEOs at these firms, it's going to be really good news because if their stock continues to move up, they have bonuses that are tied to certain stock levels.
Yeah.
And so someone like Harvey Schwartz could get more money in his bonus, his discretionary pay, if the stock moves a certain level.
Yeah,
Another 10%.
Good for him, I mean, look, get your money. I don't think these guys needed it, but it gets to this idea, though, too, of kind of the industries that we know or at least have a good insights that are going to benefit here, potentially from the Trump administration. And I think that's a big part of the price action that we've seen, Tim, over the last 3 days.
So $9 versus $15 for these guys doesn't really matter?
I'm not sure they're thinking about that, yeah.
Okay.
Yeah. Tim, you don't drive anyway, right? You just bike everywhere.
Just bike and walk and take the subway. It's New York. It's too crowded to drive.
Thank you. That's what I tell.
It's too crowded.
Yeah, y'all don't want me driving on the streets.
Too much traffic. Hey, guys, congratulations on a big week. Romaine, good to have you back.
Survived it.
Yeah, thank you. Yeah.
We did.
I think I've counted up, Tim. I think I got about 6.5 hours of sleep all week long.
Well, I hope you get some rest this weekend. It was nice checking in with you from Michigan over these past few days.
I drank a whole bottle of wine last night.
As you should. Well deserved.
Not even the weekend yet. All right. Well, good to see you guys. That is going to do it for our cross-platform coverage. Have a great weekend, everyone. We'll see you right back here, same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenevec. That is Jess Menton. She's in for Carol Masser this afternoon. Jess, story that we talked about quite a bit in our planning call this morning had to do with all that money that the crypto community spent on lobbying.
That's right.
And just how successful it was.
And of course, we're seeing Bitcoin trading at records once again this week on the back of those election results. So, of course, Donald Trump's election win has ignited that crypto frenzy. And this does come as crypto companies, as you were mentioning, have donated over $200 million to political action committees, making crypto the biggest spending industry in politics. The industry's donations and lobbying efforts appear to have paid off, though. And with those favorable election results and potential regulatory challenges, of course. So back with us, Biz Carson, wealth reporter at Bloomberg News at our San Francisco bureau, to talk with us about how crypto's $135 million campaign is undefeated in 48 races so far. So Biz, kind of lay the landscape for us as how we got to this point.
Well, crypto has had a hard time under the Biden administration, and the cryptocurrency industry came together and said, look, we need to do something about politics right now. And their solution was a series of PACs, Fair Shake being the biggest one that fed money into other groups. And they said, we are going to go into these races and spend money. And they did it unabashedly, frankly. They started with a show of force in an early primary in California with Katie Porter's race, and they put $10 million in what seemed to be out of left field. And that was kind of their first parting shot to say, look, you're either with us or you're against us. And whether you're Democrat or Republican, an incumbent, a newbie, like we can back you or we can be against you. And that's a tactic that, frankly, paid off. Look at what they've done. 48 out of 48 races so far, with 8 still left to go.
Okay, no matter what we hear from the crypto industry, Biz, Americans in general do not care about the industry, at least according to a lot of polls. So talk to us a little bit about the messaging here. And by the way, this goes into stark contrast with what every crypto person I talk to says. They're like, oh, this is such a huge issue for voters. It is not a huge issue for voters. If it were a huge issue for voters, the ads would have looked quite a bit different. What did these ads look like?
Right, I think that's the biggest thing, and I think it could be a new playbook for corporate strategy, and given we can talk about that. But you did not see crypto being the big issue in this election. There are plenty of other things. And if you were a voter in these states, you weren't getting ads saying, you know, so-and-so is for cryptocurrency. This is a pro-crypto candidate or an anti-crypto candidate. None of their ads, frankly, mentioned it whatsoever. Instead, they were backing candidates that were pro-crypto, but all their advertising was based on who those candidates were, their ideas on other issues, and you would just see, paid for by Fair Shake or paid for by Defend American Jobs. And these were not, paid for by blockchain kind of ads that you would expect to see with crypto being this biggest single issue. And it's an interesting strategy. I think, for corporations, normally they're advertising, they're spending to promote their corporate message. And here that really took a back seat. And it's a question going forward for, I think, a lot of companies and industries, whether they will kind of mirror this playbook going forward.
This had serious electoral implications here. I think perhaps the one that's most prominent is the defeat of longtime Democratic Senator Sherrod Brown, who, to be fair, has been a vocal skeptic of crypto. But this is a guy who has been consistently winning in a red state, and he was defeated by Bernie Moreno, who had the support of more than $40 million from the crypto industry. It's just remarkable here, Biz.
Yeah, that one was an interesting race because that was by far their biggest check, was going to support Bernie Moreno. And he had a background that they liked. He's a blockchain entrepreneur. He had car dealerships. He was putting, car titles on the blockchain. So he's somebody who is crypto native familiar. But none of their ads are saying, like, look at this guy, he's great for crypto. But they wanted to take down Sherrod Brown, and that was a case of, you are my enemy, I'm going to spend against you. And their tactic is to go after politicians where it hurts, and that's their elections. And look what's happened to Sherrod Brown. I think that's going to be a big wake-up call, for other politicians facing, elections coming up in 2026.
So walk us through some of the issues here when it comes to the potential favorites to replace Gensler as the SEC, when there's so many questions about regulation in the crypto industry.
Yeah, Gensler is kind of next in their crosshairs. I think, they are unabashedly saying that, and that's no surprise to anyone. I think, they are looking for regulation. They're not asking government to step back. They just want better guardrails. They want rules. And they want the government to respect this industry and make it a place where the U.S. can be, the blockchain capital of the world. And if you speak to crypto, executives, they feel like that has not been the case in the last 4 years in particular. We've seen a lot of lawsuits. And so they want change at the top. Noticeably, though, this $135 million, none of that went to Donald Trump or Kamala Harris. They stayed out of the presidential races entirely. So they were entirely focused on Congress with this spending.
Talk to us about how this compares to spending by other industries. What do we know so far? And look, the money numbers are still going to come out here in the next few weeks and few months. We'll have a full assessment. But what do we know about how this spending compares to other industries?
Well, it was the largest spending in this race. I mean, it dwarfed everything else. And
it's
I think
remarkable because you hear about the pharmaceutical lobby, you hear about the gun lobby, but really it was the crypto lobby that had the biggest effect on this race. Again, down ballot.
Down ballot, yeah, and you wouldn't know it, though. And going back to the point around their ads, you were not sitting here being beaten by cryptocurrency ads as the electoral issue of 2024. And I think that has real implications going forward for how corporations and industries and lobbying groups operate. Will they start copying this playbook from the crypto industry of supporting candidates and, not tying their corporate interests to the messaging with those candidates? And so you kind of have, a candidate in front and maybe different corporate interests behind them, and we won't know what those are without reporting and following the money and these kinds of things we've been doing in this 2024 election season.
We only have about a minute left here, but talk to us about how there's really no organized opposition to crypto at this point.
Well, I think they'd argue the government is the organized opposition, and so that's what they've been trying to change. But yeah, so far there's nothing, that's pushing back against them. I think this surprised a lot of people, and it was a interesting litmus test on how successful it's been. Now that you've seen 48 out of 48, clearly they've put a lot of people in Congress. The challenge, though, is you can't just buy policies. You can't buy votes as much as you try, and so the crypto industry will still have to work to translate these candidates they put into office or helped put into office into, translating into the legislation that they really want. And that's kind of the next challenge, whether they can execute on that as well as they did just in, getting bodies in Congress.
Yeah, and I guess we'll also see, how other industries follow this playbook by hammering home messages that are not necessarily at all aligned with what the industry is actually going for as an attempt to get voters to change their mind or vote a certain way. Check out this story, Fola Kinnaby and Biz Carson writing it. It's on the Bloomberg terminal. Crypto's $135 million campaign is undefeated in 48 races so far. This is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. 50th record of the year for the S&P 500 index, closing just below 6,000. Spent part of the day trading above that big round number, ending the day at 59.95. Right now, we have got the S&P up by 0.4%, higher by 22 today. The Dow closing just under 44,000, 43,988, up 259 today, up 0.6%. And NASDAQ up 17, a gain there of just about 0.1%. Russell 2000 index up 0.7%. Again, to give you context, the S&P 500 index today up 0.4. Year to date, now up 25.7%. 10-year 4.30%. The 2-year 4.25%. Gold down $22 the ounce, down 0.8%, 26.84. And West Texas Intermediate crude down 2.6%, 70.44 barrel. Tesla's market cap up surged today, surpassing $1 trillion, back in the trillion-dollar club after its shares rose 8.2%. Airbnb, Booking Holdings, and Expedia all issued stronger than expected outlooks, suggesting growth is not slowing as fast as thought. But shares of Airbnb today, they were down 8.7%, Booking up 0.5%, Expedia up by 3.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. Do appreciate that. If you never want to miss a Bloomberg Business Week story, become a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Business Week. Check out our offers right now at Bloomberg.com/subscribe now.
Of course, with all eyes on a cooling labor market, as well as the trajectory of rate cuts over the next year, the Trump administration is set to face an overhauling of outdated public workforce systems. That's critical development that C-suite executives say is crucial as to why building a skills-based economy is so essential. Joining us now to discuss more is Maria Flynn, President and CEO of Jobs for the Future from Boston. Of course, Maria, you spent over a decade with the Labor Department and you have firsthand insight into the jobs sector. Of course, talk to us more about kind of what you're seeing right now when it comes to all of this and some of the challenges moving into a new administration, because if you look overall, as you know, with the economy, say GDP, still very strong. Of course, we have seen a number of months here where you've seen some cooling in the labor market. With your experience, what do you foresee going into 2025 and the next few years as we have the administration changing to another party?
Yeah, thank you so much for having me. And I think we're at a really interesting and important time in the economy. Last week's job numbers showed, a slight cooling, but I think it's important to note that overall, we're still in a very kind of healthy position with the national unemployment rate still at just 4.1%. So holding steady at a low rate for quite a while. But I think what we are seeing, and the election results told us loud and clear, is that millions of voters want change because they feel that this economy is not working for them, right? Too many workers are feeling left behind. And so it's important to kind of look kind of below or underneath the BLS data and really take a look at how workers are experiencing this economy. And that's where I think the new administration, the new Congress will have an opportunity to take real and tangible action to modernize our education and workforce systems and make sure that they are preparing American workers and learners for the jobs not only of today, but for the jobs of the future. And that's really consistent with what we heard from voters across the political spectrum throughout the campaign, where we polled them and we're asking, what are their priorities in terms of education and workforce? What kind of policies do they want to see enacted? And it was, striking to us what strong bipartisan kind of agreement that we saw in this area.
So how would you explain what those jobs are and what those jobs should be? Because I think no question, you're right about this. And a lot of people got this wrong because we talk about, and we spent the last couple of years talking about how good the economy is. The data say that. The unemployment rate is low, the economy firing on all cylinders, but the message from voters is that a lot of people do not feel that, even though inflation has moderated. So what is the solution here from an employment perspective? What's the fix?
Sure. I think we need fixes both on the supply side and on the demand side. And at the end of the day, I think about, how do we help people find their path, right? What is the best education and job path for them? How do they finance that path, right? We need to broaden the conversation beyond kind of student loan debt and really be looking at how are we financing lifelong learning in this country? And the third is how do we help folks flourish along that path, whether that's if they're in training, if they're in a job, how do we help workers thrive. And so on the supply side, I think that means investing and bringing clearer guidance around what are the high quality post-secondary pathways that are alternative to your traditional four-year degree. I think for too long, we have kind of talked about as a nation, the four-year degree being like the only way, but in reality, less than 40% of workers in our country actually have a four-year degree. So we need to be building and scaling alternative pathways, whether that's through registered apprenticeships, whether it's through different types of credentialing programs that are linked to jobs in demand. So cybersecurity is an example where today there's only enough workers trained in cybersecurity to fill 85% of the current jobs. So it's an example of a very striking labor market shortage, and we see the same across healthcare and other industries, and there's going to be shortages, as folks are investing the Biden era investments in semiconductors and infrastructure and the skilled workers they're going to be need to fill those jobs. But on the demand side, we also need change. We need employers to be embracing skills-based hiring approaches. So how are they hiring individuals based on the skills that they have and not simply looking at what degree they have or what college they went to? And so we're already starting to see some exciting movement in that area, but that's something that we want to see scaled up even more. And interesting, on the campaign trail, both Trump and Harris talked about the importance of skills-based hiring, and both talked about, the important role that the federal government can play and as a role model in removing degree requirements from their jobs. So President Trump in his first term actually had an executive order that did just that, removed degree requirements from federal jobs. President Biden continued that executive order. So that's actually, one thing that we for sure will likely see early in the second term of the Trump presidency.
What strategies do you think specifically would need to be put in place to fix those skilled labor gaps when you're thinking about construction, manufacturing, hospitality? Because a lot of people, of course, the hype when it comes to AI, and there's questions about what exact skills would you need for that part of the equation too, whether it's sort of a STEM-related degree or something like that. But when it comes to those industries that are really crucial to the economy, because construction, manufacturing, hospitality as well, I mean, that's really when you think about a service industry economy like this, where it's driven by 2/3 of growth for the consumer.
Yeah, so I think one is that we're going to continue to see skill needs change rapidly, right? As AI continues to take off across industries everywhere. So what we need to be doing is we need to be investing in those kind of essential human skills that are often called kind of soft skills or employability skills. But how are we ensuring that workers have the ability to communicate, to work with teams, to problem solve, to do the things that can be augmented by AI, but at the end of the day are things that we want, humans uniquely able to do. We also want to be sure that workers and learners can get, labor market information in real time to really show them what jobs are available today. What skills do you have in your current job that can make you a great candidate for kind of a job at the next rung of the career ladder? And as a nation, we really underinvest in that type of career navigation support. So I think that's another area where we would like to, see movement early in the new administration, and it's something that we heard from voters across the political spectrum as well.
What power does a presidential administration have to do these things, or is it more at a local level? Like, what if you were to design the plan for the Trump administration, what would it look like? Perhaps that's a better way to ask the question.
Sure. So actually today we issued a transition memo with our recommendations to the Trump administration, and they really fall in 4 categories. So first is programs that will prepare every young person for success. The second is investing in skills as the new currency for career advancement. The third is adapting post-secondary education to the needs of today's learners and workers, right? So we need to move away from that kind of like one-size-fits-all traditional model. And the last is realizing the potential of untapped talent. So to me, I'm biased as a former federal employee. I think the federal government has a really critical role to play across all four of these through executive orders, through new legislation, to changes to existing programs and systems, and of course through funding, through appropriations. We're also seeing a lot of really great movement happening at the state level, with states such as Texas really starting to tie funding for their community colleges to the economic outcomes that the students are getting from those community college programs, and the local levels as well, right? So I think every level of government has a role to play. The employer has a critical role to play as well in terms of helping their workers adapt to AI, ensuring they're investing in their workers, and ensuring that they're giving their workers voice and that they're responding to their workers' voice. So this is a huge issue that's going to take both the public and the private sector to move forward. That's why I'm really optimistic about the years ahead.
You were just mentioning Texas. What other states or regions within the U.S. do you think are moving ahead of this and are most productive, whereas the opposite of that, the ones that are really lagging behind and need the most help?
Sure. So I think that this is an example where there's great things happening in states that are both red and blue states. We have seen over 20 governors in all kind of follow the federal government's model and take action to remove degree requirements from state jobs. And we have seen both Republican and Democratic governors do that. So almost half of the governors have done that at this point. In addition to Texas, we're seeing great things happen in Tennessee, in Colorado, in Delaware, in Indiana. In Colorado, for example, Governor Polis has put together what he calls a Big Blur task force that is really calling for a new model of grades 11 through 14. So how can we truly reimagine those last 2 years of high school and the first 2 years of college to be a new approach and a new governance model that really combines education and workforce training and career exposure for young people in new ways. So again, that's an example of a state really taking initiative to put a bold new idea forward into practice.
All right, Maria, we're going to have to leave it there, but thanks so much for joining us. Really do appreciate your time. That's Maria Flynn, President and CEO of Jobs for the Future, joining us from Boston. Taking a look at how stocks closed out the day and the week, the S&P 500 up 4.7% on the week, the best week for the S&P 500 in a year. The Dow higher by 0.6%, the NASDAQ higher by about 0.1%. You're listening to and watching Bloomberg Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Big day for the U.S. stock market. Big week as well. S&P 500 notched its 50th record of the year today. Did close just below 6,000. Spent part of the day trading above that threshold, but the S&P ends the week heading into the weekend at 59.95, up 22 points today, up by about 0.4%. The Dow up 259, up 0.6%. NASDAQ up 17, gain there of just about 0.1%. Russell 2000 index of small cap shares up 0.7%, and should point out that year to date we've got the S&P 500 index up by just over 25%. 10-year 4.30%, with a 2-year 4.24%. Gold was down $22 the ounce to $26.83, a drop of 0.8%, and the West Texas Intermediate crude down 2.6%, $70.44 a barrel. So on the week, we had the S&P 500 index gaining 4.7%. So what happens to markets going forward? Well, we spoke with Jim Warden, Chief Investment Officer of the Wealth Consulting Group, and he was interviewed right here on Bloomberg Business Week.
We think it's going to be a little bit range-bound until the markets really figure out what are we going to do with Trump. And, you know, where is this going to go with tariffs? Where is it going to go with immigration? There is some concerns, I would say, for sure, with the bond market about inflation or reflation. And so that's something we're looking at.
He did tell us he sees the S&P heading to 7,000 next year. Again, the S&P at 59.95 today, up by about 0.4%. Briefly, Boeing said to be exploring a sale of its Jefferson navigation unit as the plane maker draws up a list of assets it could shed to help lighten its $58 billion debt load. And today we had shares of DJT, that's Trump Media and Technology Group, surging by 15.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thanks. Do appreciate that update. Well, yesterday, Fed Chair Jay Powell noted that the latest inflation report was higher than expected, putting next week's CPI report back into focus. One thing that is actually less expensive than last year, though, is turkey. According to the most recent CPI report, although poultry overall is up 0.5% since last year, turkey prices are down 2.2%. I know Jay Jandren watches this closely. Jay is CEO at Butterball. It sells a lot of turkeys, especially this time of year. Jay joins us from Butterball headquarters in Garner, North Carolina. Jay, good to talk to you again. How are you?
I'm doing well. How are you doing?
We're doing pretty well. We're going to talk about Thanksgiving and the turkey report that you guys have, but I do want to start with the election because we're talking to all leaders about this one, because a change in the White House of this magnitude has serious implications for businesses and business leaders. What does a Trump White House mean for Butterball?
Well, certainly it remains to be seen exactly how this administration will play out. As we, from the last Trump administration, it didn't have any significant direct impact that we saw as a result of any policy at that time. And don't expect there'll be any significant changes again with this administration. But that remains to be seen. He's got to select his cabinet. We'll see what kind of position he takes on some of these issues. But we'll deal with it as it comes. But we don't expect any significant issues at this point.
Deregulation. Tim actually spoke with ARK Invest Kathy Wood just yesterday. So she sees massive deregulation ahead. Does that include deregulation in the poultry industry specifically?
I wouldn't expect so. From a food safety standpoint, that's one of the main things that we pay attention to. There is good regulation. There are some things that are certainly good about that. Make sure that we have a safe food supply. Regardless of what comes down with that, we're going to still make sure that we produce a safe product and give the consumers what they need. So while there may be some modifications, some changes here and there, some subtle changes, don't expect anything big, and certainly don't expect any big unwinding of any policies that we have to work within.
Jay, what about the labor side of this? Because this time, the former president and now president-elect, he ran on this policy of mass deportations, promising to deport millions of people who are here illegally. No question that's going to have profound implications for their workforce if he sees it through, and he says he will see it through. And it'll affect companies that don't employ people who are here illegally. Poultry processing facilities known to employ migrant workers. How are you planning for how this could affect your business?
Well, as it is now and has been, we comply with all the regulations that we need to make sure that we're only hiring documented workers. So it really shouldn't have any impact on us whatsoever. We've had, actually, our labor situation has been very good and continuing to improve over the last couple of years as we got out of COVID, which is great news. And I really attribute that to the work that we've done on our people efforts. The training that we've done for our folks, the benefits that we provide to them have really put us in a really great spot. We're now have a labor situation that's much better than it has been for at least the last 6 years. Yeah. So with regard to the immigration policy itself, it really won't have any impact because we're not unable to hire those folks as it is now anyway.
Yeah, Jay, and don't get me wrong, I'm not implying that Butterball employs people who are undocumented. What I'm saying, though, is there is this chain reaction in the labor force. When you remove a large portion of people who are here illegally, but also might be working, then there are other people who need to fill those roles that they previously worked in. And I'm wondering if that could have upward pressure on your costs, because you'll then have to find new people to work in your facilities because the people who were there might have gone somewhere else.
Well, I think the key is making sure that we keep our people happy. And based on the feedback that we get from our folks, we talk to them regularly. We do a lot of work with surveys and making sure that we talk one-on-one with our people and really understand that we're meeting the needs of what they're looking for in an employer, and we feel really good about our position. So, that certainly isn't something that we're terribly concerned about. We're just going to make sure that we take care of our folks, the ones that we have, and continue to give them positive opportunities to grow within the organization.
You export products to more than 30 countries. How are you thinking about potential regulatory tariffs?
Well, we don't see anything directly coming within our categories. We haven't in the past. So that's certainly good news. And it just really remains to be seen. Again, with the previous Trump administration, there's a lot of effort in those areas from a tariff standpoint and different categories. We didn't see any retaliatory tariffs, as an example, with our products. Hopefully that will not be the case this year. So, we've got an open mind. We're continuing to look and evaluate the situation. But at this point, there really isn't anything we can do until we start seeing how those negotiations start to play out.
Jay, I'm just wondering, do you have somebody in a policy position at the company who can represent you in Washington? Does it feel like if you do, you have to sort of beef that presence up a little bit, pun intended?
Yeah, we actually have our trade organization, the National Turkey Federation, does a great job with regard to that. We've got folks there in D.C., very well connected on the Hill. My company and other companies in our industry spend quite a bit of time up there as well, talking to our legislators. So we really make sure that we can take the time to give them the topics that are important to us, the positions we're looking to take, and hopefully we can end up with a positive outcome. But we feel really good about our representation there now through the National Turkey Federation.
I wanted to get a glean just on the inflation question, because we've seen it come down so much from the rate of change over the last few years. But unit labor costs, so for our listeners, basically what a business is paying to employees to produce 1 unit of output. How are you viewing when it comes to how you're paying those wages? And are you still feeling a pinch here when you're thinking about when everyone's discussing about the trajectory of rates in the Federal Reserve?
Yeah, we've got to be competitive, obviously. And we've done a lot over the last couple of years to make sure that we've got a good balance for our folks on both their working and their home life relationship and their income as well. That's a very important piece of it for us. We want to make sure that those folks are happy. Inflation overall has definitely hit us, just like the consumer. We have experienced that within our company, as have others. So when we talk to consumers now and we look at this holiday, we know that that's a very, very important aspect of what they're considering. Inflation is certainly top of mind. It was certainly a big issue for this election, and the consumers told us that. So we've been working very, very closely in preparation for this holiday to make sure that working with our retailers, we can give the best value to the consumers that are out there. And I think they're going to be pleasantly surprised. As you mentioned, we have seen turkey prices come down some. Looking at the retailers' prices that they're offering right now and the promotions that they're providing are a real advantage to what we saw even last year. So that's great news. So we certainly looking for every opportunity we can to help be a part of the solution, help make the holiday a little bit easier for folks as they roll into it.
Hey, Jay, stick around. We're going to do some news, and we're going to come back and talk more about Butterball and the togetherness report that you guys have out. That's Jay Jandren. He's the CEO of Butterball. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is a Bloomberg Business Week. I'm Tim Stenivek. That's Jess Menton in for Carol Massar. I want to get right back to Jay Jandren. He is the CEO of Butterball. They sell a lot of turkeys. He joins us from Butterball headquarters in North Carolina. Jay, I was looking this morning for some numbers. You guys are privately held, so we don't have a ton of information on your numbers, but can you give us some ballpark figures about just how much turkey you're responsible for selling in the U.S.?
Sure. Well, we have within the holidays, certainly as we focus on Thanksgiving, about 1 in 3 turkeys that are sold every year are a Butterball turkey. So we're really proud of that position. We have a large market share. Spend a lot of time working with our consumers and our customers to make sure we deliver what they're looking for, and look to obviously try to grow that every year. But we are the largest provider of turkey for the holiday, and we're very proud of that.
How much of your sales is around the Thanksgiving holiday versus outside of it?
It's about a third. When you look at our business overall, we have a considerable business in food service, as well as in retail throughout the year, and consumer packaged goods. And the holiday itself represents about a third of our business.
Is there effort to diversify in terms of timeline here and make it so that you see more sales outside of this concentrated period?
It certainly is. Our biggest push right now is on our value-added growth and our Butterball brand specifically. That is where we've been taking the company for the last several years. Fortunately, we've seen very good progress in that. We've seen our Butterball value-added business grow. We're also looking at growing outside of the U.S., so a number of initiatives there as well. So we're really looking to get the brand spread out as much as we can. We've actually been very happy to see the acceptance of the brand in other countries where we distribute, even in countries where we haven't had Butterball at all before. As an example, we'll have Butterball branded turkeys in the UK this year for Christmas for the first time ever. And that's in a country where they have very little branded product to begin with. Most of it is private label in their grocery stores there, their retailers. So that really says a lot for the brand. We're really happy to see that happen.
So that's what I wanted to talk to you about. I've been outside of the U.S. for Thanksgiving a few times over my life, and this was years ago. It was remarkably hard to find a turkey when we could find a turkey. Why is it so hard to find a turkey outside the U.S.? Why is turkey such an American thing?
Well, for one thing, it's not an indigenous bird to most of the world. And a lot of cultures aren't used to consuming turkey. So we really got an opportunity to help grow that. And that is a big opportunity for us to try to get outside of the U.S., try to go to countries where little to no turkey is consumed. Certainly, there's a lot of work on our part to educate them and to show the opportunities and how they can use the product. There are also barriers. There are a number of trade barriers in place right now where we can't export our product into certain countries because of various regulations that they've got, whether they're somewhat protectionist for their own supply, their own manufacturing, or whatever the case may be. So we have to get creative in ways that we can look to work into those markets, to open those markets up, spend a lot of effort through our trade organization that I mentioned earlier, the National Turkey Federation, to help try to open up these countries. And then in some cases, even look for in-country producers to produce a product for us. So there are a number of different ways that we can look at that to grow our brand. We just have to be creative, but it's a tremendous opportunity for us to expand beyond our borders.
Hey, Jay, something I was thinking about, especially the last few Thanksgivings, just because of the cost of different items that people are eating. Wells Fargo had an interesting report out recently talking about how the price of turkey is down almost 20% this year compared with a year ago. And actually, the American Farm Bureau Federation had talked about how the average price of a 16-pound turkey last year was around $27. What are you seeing here when it comes to those prices? Because as you know, especially over the last few years with inflation, what should people expect to spend here on different, whether it's turkey or other items?
Well, compared to last year, we are seeing retails lower. Now, we don't set the retails. Our customers certainly do that. But we work with them to make sure that we can give them the best value to begin with. I think what's really important to focus on what's important to focus on for the consumer is the value of that protein. At roughly $1 a pound, it's very, very difficult to find any protein that's going to be that economical. And especially during the holiday when there's a lot of feature activity, a lot of discounting, going on, it really provides a phenomenal value, particularly now, as so many things are up. And there are a number of items on that Thanksgiving table that might be more expensive than last year. But the good news right now is it looks like turkey is not one of those. So we're real happy that we can help be a part of the solution in a time when folks are really struggling with the impact of inflation.
What should we expect for maybe the average sort of gathering sizes for Thanksgiving celebrations?
Well, from our report that you referenced earlier, we do know that people are celebrating Thanksgiving in pre-COVID numbers again, which is great. It's about 86% of the people that we talked to total say would be celebrating the holiday. And about 87% of those would have turkey at the table. And the gathering size is on average 9, which is a great number. We're really happy to see that people are able to get out again and travel and visit those that they want to be close to during the holiday and get back to those larger gatherings. So we're really proud to be a part of that.
Jay, good to have you back with us. Always good to check in with you. Kind of like early this year, I feel like, unless Thanksgiving is right around the corner, which it is. Jay Jandren is the CEO of Butterball. Sell a lot of turkeys. He joins us from Butterball headquarters in Garner, North Carolina. That is going to do it for Bloomberg Business Week. Jess,
Always
thanks for
pleasure.
stepping in.
It's great being here. Always a good time.
And a big thank you to our entire team at Bloomberg Business Week that makes it all happen. Anthony Mancini, Colin Tipton, Steve Lanzone, Meredith Frank, Sarah Livesey, Justin Milliner, Cece Charandoff, Sebastian Escobar,